The government has received representations from almost all global and domestic OEMs, but not Tesla. However, this scheme will be opened within weeks, and the government is hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing $35,000 or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by the third year of operations and achieve a domestic value addition of 25% in 3 years and 50% value addition domestically by fifth year of operations. Now, according to estimates, if a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs, and an imported car costing $50,000 would cost an Indian customer around rupees 52 lakhs.
Thanks so much for that. But let's move on. Walmart-backed PhonePe is gearing up for a potential IPO in India. But the payment firm has not specified a timeline for the listing. The company says it has established a clear corporate structure with each of its non-payment business classified as fully owned subsidiaries. CNBC-TV18 spoke to PhonePe's co-founder Samir Nigam at the Global FinTech Fest in August last year. And when asked about the IPO plans, Nigam was nervous about the proposed 30% limit on UPI market share. But in December last year, the NPCI deferred the deadline to impose this 30% limit to December 2026. Listen in.
As far as going public, the market cap overhang is definitely a problem for us, right? I mean, I feel nervous going into the market if there's a 30% market cap lurking or looming, and going and asking retail investors to put money against today's market cap. My concern is whether we do right by our shareholders. So I think one thing actually at PhonePe we've always prided ourselves on is every single round from a Series A onwards, everyone's seen considerable multiples as far as return on capital.
And let's move on. Crompton Greaves Consumer Electricals introduced two new tech platforms, Nucleus and X-Tech, aimed to enhance energy efficiency, performance, as well as reliability, reliability of its products. The company's MD and CEO Promit Ghosh says that they see better times ahead for the acquired brand. Butterfly also talks about a bunch of new products that are in the pipeline for the company. Listen in.
We are looking forward to Butterfly turning the corner insofar as the growth trajectory is concerned, and profit trajectory you already see. The turnaround has definitely taken root, and so we do see better times ahead for Butterfly. There will be product categories that we are not currently in that we will start to sell, but also better and closer to the consumer heart. Suffice it to say that we are working on a bunch of products, not only products which are already available in the market, but taking those products and trying to see how we can come up with something that is different. Yes, you will see us entering some of the large market segments where we leverage the Crompton brand, the Crompton distribution, the Crompton service, but also come up with a product.
Okay, on that note, we're going to step into a very short break. Up next, we'll get to what's happening in the world of commodities, so don't go anywhere.
I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization, and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Mariah has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, you know, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Mariah back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Mariah Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, June Sanath.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the
Welcome back to Power Breakfast on CNBC TV18. Now let's go across to Manisha, who's waiting by to tell us what's happening in the world of commodities this morning. Good morning, Manisha. Crude continues to rise. Gold is also rising. What else are we watching out for? What are we seeing in both these commodities?
Well, yes, let's start with crude oil prices first. And third straight day of gains, and we've seen prices gain up by 2.5% in this week. U.S. gas and distillate stocks have seen a decline, and that has been supportive. Markets also are taking support from Russian supply disruptions, and also the U.S. cold has led to some pipelines freezing there, also leading to disruption in the flow of the oil, and that has been weaving into the prices there. But it's not just crude. When you look at the gold prices, while we did see an all-time high of $2,955 an ounce, we are trading at around $29.40 at this point in time. But even with this very slight profit taking in prices, we are headed for 8th weekly gain. Fears of global trade war is keeping prices supportive. We've also seen in the overnight markets, and this in this week as well, that you have seen gains come in for steel, iron ore, aluminum, and copper prices have seen a bit of a gain as well.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time in this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
transparency in science and, you know, being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6, 7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think the trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. You know, it's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
We've tried to, like as we've done in most other sectors, even within autos, I think we've tried to kind of, position ourselves in pockets which are a little more resilient compared to others. So in every sector for that matter, we'll have to do that for the coming some time, where we will have to differentiate between performers or executioners versus those who are probably not able to execute as well. And I think there'll be some segments which will be at higher risk to growth compared to others. But I think at this point in time, for sectors like autos, etc., it is very important that we get a boost as far as domestic growth is concerned. We might probably need that for some more time till the time this global issue settles with regard to tariffs. So I think it is important for the government at this point in time to just go all out in terms of supporting growth as far as the domestic economy is concerned. We had our own domestic problems at one point in time in 2018 when we last saw the very punchy crash in mid cap and small caps, and this time around we have a completely different set of conditions, probably a little more global led, somewhat local led as well. But I would like to think at an aggregate level, generally these are drawdowns which do indicate a start. You never know when to exactly time the bottom. You never get that unless you're very lucky. But I think there's a good time to start. I think the risk rewards are now getting a little more tolerable compared to what probably they were a few months ago. It will be a market which will probably a little more differentiating, nuanced. We'll have to probably build our portfolios carefully going forward in order to ensure that we at least manage to get better than system rate of growth. And if we can probably do that, then I think there is a fair chance of being able to outperform over the next couple of years.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70%
every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Finally, it's a Friday, end of the week, and the market is going to be in focus. Can we sustain that broader recovery we've had for most of this week? Even if the Nifty has not done very much, we've had three good sessions for the broader markets. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning. You know, it's actually turned. Usually we used to say positive global cues, positive start. Now sometimes I wonder if global cues are negative, maybe it's better. They'll remember that we are a great market as well with our own intrinsic story, right? If the others are not doing too well. But let's see. We have plenty to track this morning.
I like the way you put it, Surabhi. You know, good thought process. And guys, I think we get through Friday today. And then I think next week we have a truncated week. So good times.
We do?
Yeah. I think
that's a very important cue. I didn't think of that.
Wednesday, right? 26th is holiday.
Yes.
Well, I think, but let's just get through the day today, and hopefully it's not going to be as bad as what the GIFT Nifty is indicating this morning, right? I mean, maybe there'll be some recovery afoot. But as always, let's start taking it from the top. Overnight the session was not all that great. So basically, what the big headline was, of course, Walmart, which reported numbers, and there was a sort of forecast as well, which disappointed expectations. Stock was down about 6.5%, and that took a bite out of U.S. trading. Equities pulled back a little bit. Actually, they sold off and then they pulled back from the lows as well. So we were down about 0.4%, 0.45% on the S&P, Nasdaq, somewhere around there as well. Dollar index, although it was a very low volume traded session, the broader dollar index was down about 0.78%. We are now 106.35. And that, I think, is significantly positive as far as flows are concerned. But I have to say that volumes were thin. So how much should you read into that sort of big fall, big dip in the dollar? I think one has to see. And of course, I mean, the other things are, it's made up of a basket of currencies. The largest weight is the euro. And I mean, the fall in the dollar is not so much about the US, but perhaps at the margin, European currencies looking a little stronger. Now, oil prices at about $76.50 odd cents as of last close. Alibaba, the China recovery continues. Alibaba was up 8% after a beat on third quarter revenues and profits. The gains keep on coming. Hang Seng is up, was up 2.3% as well. The K-Web index, the ETF in the US, was up sharply on the back of course, what stocks like Alibaba, Tencent, etc. did. Just a quick mention on the Russia-Ukraine headlines because they are still continuing. So President Trump's special envoy from Ukraine met with President Zelensky, the Ukrainian president. And then the envoy, Trump's envoy, reportedly declined to have a press conference with Zelensky. They've made it absolutely crystal clear. Both President Trump and Vice President Vance have made it absolutely clear that Ukraine, you agree, disagree, but this is their stance, that Ukraine has been at fault and they need to wind the war down. And of course, I mean, as we've heard, from what we've heard so far, in the negotiations to end the war, to wind the war down, Ukraine does not have a seat at the table. I mean, that's where things are at. Now, Zelensky, of course, said that Ukraine is ready for security agreement with Trump. And we'll see if there are more headlines into the weekend and something concrete emerges. Now, just to circle back to and tie in the levels here, we, of course, have been picking up in the broader markets, even as the Nifty has been flat now for 3 days running. That's why we've been sort of describing the market as a good market, because mid and small caps have been seeing, buying, and lots of stocks are doing well. So we need to break up on the Nifty. We need to break above the high of 23,050. That's the first level. And then we'll get to the daily averages. 23,318 is the 20-day moving average. The support, I guess, is more important, at least this morning as we start. 22,725 is the support for the Nifty. I think the GIFT Nifty is indicating a start about 100 points above where the support lies. Nifty Bank closed lower yesterday. Generally, it's been outperforming out of the two indices. Here, the Nifty Bank support stands at about 48,804. Again, not very far away. And of course, resistance levels, upside levels, come in at Wednesday's high, which is 49,628. And then 49,836, all very, very close. Not even 1% is the range, but these are, that's the kind of market we're in. Extremely sort of tight, at least on the bigger indices. In terms of single stocks, there is a lot of action, a lot of activity. GIFT Nifty indicating about an 80-point lower start. Surabhi.
Okay, the thing is the Asian region is fairly mixed, which is why you're getting that GIFT Nifty down about 81 points as we speak. But some markets are already pulling back. And again, by some, I usually mean the Hang Seng these days, because that market has its own thing going. While other markets are cooling off in step with the Wall Street decline, Japan slightly lower. We saw the implied open for us here. Look at the Hong Kong Hang Seng, 2.5% up. This market's moving on steroids, really. And Taiwan's also, doing pretty well this morning. The markets that are weak include, like I said, the Japanese market, and there's a little bit of red on the Singapore screens as well. So let's see which way we decide to drift. But talking about a couple of important cues, in Japan, we got the inflation data for the month of January. And can you imagine Japanese inflation at 4%? I mean, we haven't seen these kind of numbers for Japan in a long, long time. In fact, it's a 2-year high. That this is the headline inflation number that I'm talking about. Core inflation at 3.2% is also at fairly elevated levels, the highest since June 2023, which is why those calls for further rate hikes in Japan by the Bank of Japan, they are only growing, which is also why the yen has been strengthening against the dollar. We've been speaking about this all through the week. Yesterday in intraday trade, the yen actually fell, the dollar yen, that is, fell below the 150 mark as well. This morning, you're seeing it pull back and it's, it's looking weaker. But that's because yesterday it strengthened to a level below 150. So that's the kind of move that's happening in currencies. In terms of Alibaba, just to carry forward what Prashant was saying, yesterday's numbers are phenomenal. I mean, 240% growth nearly, and that was completely out of the park. It wasn't along with estimates. The actual net income was about 49 billion yuan. The expectation is that it's going to be around 40 billion. So it really blew past estimates, and the US listed stock was up about 8% in after hours trading. And largely this performance, Alibaba says, is because of the cloud business doing really well and the fact that they're accelerating all their investments in AI, and they seem to be paying off as well. So that was a little note on Alibaba. Coming to our fund flow picture here, it's more of the same. Again, a net sell of about 3,300 crores from FIIs. Domestic institutions are more than offset that. The buy number was closer to 4,000 crores from the DIIs. By the way, on the FPI ownership, just a quick sliver of data. These are latest numbers from the National Stock Exchange, and they're very, very interesting. The FPI ownership has continued to decline. Market-wide ownership as well as Nifty 50 ownership. The market-wide ownership is now 17.4%. This is 30 basis points lower than the last quarter. This is as of December end. The Nifty 50 ownership, FPI Nifty 50 ownership is down to 24.3, which is about a 15 basis points decline, again, quarter on quarter. That's not all. If you talk about individual ownership of the Indian market, whether it's through domestic mutual funds or whether it's direct ownership, that has overtaken FPI ownership now, at 18.2%. That's also an important data point. That's the FPI selling. In terms of quarter, Q3 selling versus Q4 selling, Q4 already we have surpassed the Q3 selling. Now let's move to the other interesting data point, that individual ownership of the Indian market has surpassed FPI ownership. When you club mutual funds and the direct participation put together, individuals now own 18.2% of the market, whereas FPIs own about 17.4% of the market. Very quickly, to round it off, some stocks in focus. M&M Financial Services, M&M and Mahindra Life Spaces, two Mahindra Group companies. They're both in the market to raise some equity funding. They're looking at a rights issue of 3,000 crores. It's M&M Financial, and Mahindra Life Spaces rights issue of 1,500 crores. The promoter group has said they have full intention of participating to the extent possible in this rights. And the fight for Religare is finally over. Burmans have the company. They've been designated promoters. So let's see how the stock reacts to that. So some interesting developments coming in. And by the way, I didn't add this, but I could add that PhonePe is looking at a listing. So I'll watch out for a lot of the new age companies as that IPO comes through the street. Let's see if there's some excitement that pops up. But for the time being, we have to deal with these negative cues on the global front, lower markets.
Well, that's right. 11 out of the last 12 sessions actually we've ended lower. But in this week, between the previous day and the next day's close, that is on a day-to-day basis, how much we've moved? Not more than 0.1%. All 4 trading sessions, either up or down. But by the end of the day, it's 0.1% move that we have seen. And dare I say, since we have been underperforming, maybe it puts us in good position to outperform. So let's see how that goes. Well, overnight, we had the US data that was a little bit weakish and some worries on the US economy. Not too bad, right? Because it caused a couple of asset classes to cool off, whether it was the dollar index, whether it was the 10-year yield as well. Both of them did cool off, and Brent crude prices pretty well behaved. Under $80 per barrel, you'll take it. $76.50 per barrel. It's come up a little bit from the recent lows, but that's par for the course. What do the FIs do? Well, they're selling in cash market, but they're going a little bit excessive actually in the index futures. Yesterday as well, they added close to around 6,000 contracts. They're at around 84% in terms of positioning in percentage terms. And in absolute terms, net short positions are 1.92 lakh contracts. That's the highest that we have seen, even adjusted. You'll have to keep an eye out on that in value terms as well. The FIs aggressively net short, while the clients, they are net long with close to around 1.4 lakh contracts on the long side. Moving to the options data, well, we have the 23,000 call. 23,100 call. Both of them have been fairly active. In yesterday's trading session, you had the 22,900 call as well that was fairly active. While on the downside, you have the 22,900 put that was active. And the premium is around 150 rupees, which perfectly ties in with the numbers that we have been talking about. Upside 23,100, that becomes a bit of a resistance zone. While on the downside, the 22,700, that becomes a bit of your reference point. So that's the broad range you're looking at in terms of a 400-point band. But this buy on dip thesis is going to be tested today. Because as I mentioned at the start of this chat, that on a day-to-day basis, we have moved 0.1%. But every day, off the lows, actually, the markets come off 100, 120, 140, 230 points. So today, given that we're going to start off with a cutoff closer on 80 points, as what the gift Nifty is suggesting, that buy on dips thesis is going to be tested. The Nifty Bank yesterday had a bit of an off session, but that was because big boy HDFC Bank was a little off color and there was some delivery-based selling out there. Hopefully, bulk of that is already done. The support, which we have bounced off, 48,800 is important. You don't want to break that mark. We have gone there numerous times in the last 5 sessions, and we have bounced off that mark. While resistance zone, 49,500 to around 50,000, it's important. 20 and 50 DMA out there. So today is going to be important. That buy on dips thesis is going to be tested. And the Nifty has actually underperformed as we've been talking over the last few months. Today, let's see whether or not we have a case to outperform. Let's see how that goes.
Nigel, thanks very much for that. Sometimes, Nigel, what happens is you see one dive back to the lows, that one test, and then we continue on that base building, whatever repair kind of journey. We have to see whether that one test is left or not.
Yeah,
hopefully.
But we've done the test 4 times now. Technically, in the last couple of
so that's
weeks.
the only thing. I mean, if you get to that and then you start to pull back again, and I think then. If anything at the margin, it adds to confidence, irrespective of what the globe is doing, because here the market's already sold off.
Underperform valuations, okay. So it's about
at least the Nifty
surviving that dive.
Imagine if we get green, guys. Imagine we get like 100 points up today. Being optimistic. Prashant is supporting. I am supporting too.
All right. Well, let's just get Hartmut Rissel in. He's head of equity and credit APAC and chief investment officer at UBS Wealth Management. Let's ask him. Hartmut, great to have you with us here. Thank you very much for your time. Appreciate it. So just a quick word on the sort of dominating driver for markets from here, Hartmut. I mean, the one big macro driver indicator which emerging markets watch, of course, is the... Okay, I think we lost the line, I'm being told, and Hartmut can't hear me. So we'll try and reconnect that line once again. Let's just look at the SGX, the GIF Nifty, beg your pardon, and also... Okay, I think Hartmut is back, I'm being told. Hartmut, so the 10-year is being watched closely here, and of course the dollar index as well, because it's all about flows. But even within EMs, at the margin, at UBS Wealth, are you noticing a fair bit of shift away from markets, high-performing markets over the last couple of years, like India, into a very low-performing market like China? Is that shift happening? Is that real?
To some extent, I would say, at least in the short term, you'll see we have some of that effect, right? Because as you rightly point out, right, India has been doing very, very well, and we think it will also do so again. Probably, I would estimate in the June quarter when the earnings growth probably comes up a little bit. I can also explain why. But yeah, if you compare it with China, right, we had a couple of years almost for a while, like 2-3 years where it didn't do so well. And now you have the internets, which are really, if you compare the valuation to US stocks, for example, right, it really that was almost 60% or really, really high, right? So that's starting to come in again. And therefore, as a result of that, you also see to some extent, at least temporarily, some shifting happening.
Hartmut, good morning. To press on that point, the Hang Seng rallying 17% already so far in 2025. Is this just a tactical trade? People are getting excited after DeepSeek. Of course, Alibaba's numbers have been really good as well. Is this just a tactical move? Or is there really something serious shifting at the margin? Maybe in some of these tech names, a real valuation advantage, growth coming back. What's happening?
Yeah, I would say DeepSeek is maybe one point, but it's certainly not the only one. We have observed last year, if we go to China, for example, right, that also it seems the regulation, etc., what the government did, right, for almost 3 years in a row, that has come a bit to an end. But the companies also changed a bit their investments. They became more disciplined. I would say less competitive between each other, and then the valuations. I mean, in some cases, were even below 10 times. I mean, if you then see what we saw last year, the margins going up in China for the internet, for example, and this year the revenue is also popping up a little bit more. Yeah, then it's not so surprising if for a while you see a bit of a change there.
Well, Hartmut, hi, good morning and good to see you. When I recall the last time we chatted, right, you were talking about maybe we're penciling in too high earnings growth here in the Indian markets. That seems to have corrected itself, and that's where we've pulled back a little bit for the Indian equity markets. Now, post this decline, and the expectation is that earnings will improve now from here on after, a few cuts that we've seen the last couple of quarters. Now, what's the positioning on the Indian markets? Do you think we've come to those levels, which is a little lower than the long-term averages? Do you think it's a good time to get into India? What kind of returns should we be expecting from the Indian markets? And the toss-up between India and China, putting everything that you said on board, going by the economic data as well, what would your preference be?
Yeah. I hope that China Internet and India are not necessarily always exclusive, right? So they could both do well. But let me illustrate my point on the Indian market. Right? My expectation for the earnings growth, at least for the fiscal 25, so we have another bit more than a month, has never been that bullish, right? And the reason, if I go back to 24 and see how high the Nifty EPS growth was back then, and also why it was that high, right? Okay, you can argue maybe a bit of COVID GDP and therefore revenues, but there was an unexpected margin improvement that was always clear it couldn't last for the same for the same magnitude for this. However, now we're looking more and more, I'm certainly looking more and more in the fiscal 26, right? So fiscal 26, now we had an earnings growth that was below the long-term average that at least I have for the Nifty. I have about 11%, so we're below that, right? And we're seeing companies in sectors like consumer, like cement, like autos, right? Oil and gas, even growing close to zero. This shouldn't last for a second year, I believe, in India and in the main sector. So you will see this going up. My estimate for Nifty total is very close to 15%. So even if we do assume perhaps the valuation stays where it is, I think it could or should actually come up, could come up again a little bit. But even if it doesn't happen, right, 15% can give you an index upside that over 12 months or so looks, in my view, pretty attractive.
More than double-digit returns from the Indian markets over the next 12 months is, what we could potentially be looking forward to. Is that correct?
Yes, the earnings, in my view, right, because you had such a low base, right? And this is important, right? So in fiscal 25, we had a very, very high base, 25%. Very, very difficult for any company to beat this in a large margin. When you had on average, I think it was a 7% growth is what I have for Nifty for this year. If you have that, it's much easier to bring up your EPS growth number again. And I think that is very likely to happen, probably starting around the June quarter onwards.
So, Hartmut, you're saying 15% earnings growth in India. And how much in FY26 in China? How much would it be all put together, and X of the tech, how much would it be, just to get a sense of the China revival earnings?
Yeah, on the earnings side in China, it would be lower, maybe 6, maybe 7%. Also, and that's 26. By the way, I mean they have a calendar year, right? So for 25, we have about 7.5%. So it's actually less, but of course it came from a much lower valuation in China. To be fair, also than it came in India. So, but be that as it may, right? If I really focus here on India, and this is something also when I speak to friends and other companies, etc. Everybody talks about the downdrift in earnings, and I say, where is that coming from? Oh yeah, the December quarter, maybe the quarter before. So it all comes from the fiscal 25. Very few of the observers are actually willing to bring this up when the base is so low for Indian companies to actually go up. And in my view, we're going to go up even above the long-term average. As I mentioned, I have usually 11.5%. We could actually, it's normal, right? It happens all the time. I wouldn't be too surprised if we actually go above that, at least for 12 months.
All right. Thank you very much, Hartmut. Appreciate you joining in, and it's good to get that perspective from you. Well, we're just going to take a quick commercial break here, but before that, let me just tell you what's lined up here in terms of interactions, etc. So 8:30, Siddharth Khemka, Motilal Oswal Financial Services, with some fundamental stock conversation. 9 o'clock, we'll have the Bernstein analyst talking to us about the power sector. Stocks have seen correction, but there is interest coming back as well. Vetri Subramaniam is our market guest at 9:20. 9:30, the management of IOC will be talking about the quarter gone by and the outlook. Chalet Hotels will be with us at 9:40 to talk about their acquisition and growth plans ahead. 9:50, We'll have Andy Rothman talking to us about US-China tariff war concerns and, of course, what it means from an Indian perspective. And it's the economy at 10:15. Lata discusses with Andrew Tilton of Goldman Sachs on how tariff threat impacts Asian economies and their currencies.
All right, time to slip into a short break. You've got a lot of stock-specific action we're tracking for you in our special Top 10 segment. For the time being, we give you a sneak preview into the list. Cipla, Lemon Tree, Life Sciences, Relicare, Seagull, HG Infra, and ITI. They'll be reacting to positive news flow, while you have Delta, Sanofi, and CIE Automotive that will be reacting to negative news flow. Slip into that break, come back, we'll get into further detail on all of these names.
The cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Actually, there's a fair amount of green. Even Japan has turned positive. So Asian markets, forget mixed. It's all green now, which is why it's a little surprising that our implied open was still down. Last we checked, it was down 80 points. Let's pull it up again, because Asian markets are doing much, much better compared to the Wall Street close that we had. Yeah, for us, let's see. 90 points lower at the start is what we're getting. Let's see if there's going to be a recovery from there. Time now to talk stocks. As always, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Friday to all of you. Vinny, let's open with you. You're the opener. Cipla, what's the news?
So happy Friday to you as well, Survi. Cipla, we're expecting green coming in. Now, two news flows have come in. One, they've received a final approval for one of their new drugs, which is nilotinib capsules. Now, this is mainly used for the treatment of chronic myeloid leukemia. It's a form of cancer that is there. So this expands their portfolio in the oncology side in the US market. So it's a positive one because it's a new drug approval. This is expected to be launched in FY25, FY26, somewhere around that time in the US markets. Expected to pick up pace is what analysts are highlighting. So that's why we're expecting green on this news flow. And other than that, they've received 2 observations for its testing facility in Navi Mumbai. Not a major news flow, but that's why a green is what we could watch out for Cipla.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Mangalam. He's here to tell us about Delta Corp and Lemon Tree Hotels. Morning, Mangalam.
Good morning. So Delta Corp, very interesting development out there. Remember, the big trigger for the company was the value unlocking in Adda 52 via an IPO, but that hasn't happened. Instead, the company has gone ahead and decided to sell 51% of Adda 52, which is Delta Tech Gaming, to Head Digital, which is the owner of 823 Rummy, for about 491 crores. So this deal has been done via about 35 crores in cash, and the rest is via share swap. Post this deal completion, Delta Corp will hold 5.7% in Head Digital Works itself. Remember, in 2017, this was a company that Delta Corp acquired for about 224 crores. So 8 years later, the valuation hasn't jumped much apart from 2x. Delta Tech FY24 revenue was close to around 10% of the overall sales, and the stock has already surged about 10% this week. The reason why I'm going with a red on Delta Corp is largely because, one, the valuation is lower than what the street anticipated. Secondly, the stock has already seen a 10% run-up in the announcement of this deal itself. Lemon Tree, on the other hand, they have won a tax arbitration worth about 11.5 crores. So mild positive for them. Remember, generally hospitality stocks are doing well, so see some green on Lemon Tree. But Delta Corp will be the most interesting stock to watch out for today.
All right, got that. Mangalam, thanks very much. Back to Vinny now. Vinny has a bunch of other stocks, including, I think, Sanofi Consumer and CI Automotive as well. Vinny, tell us more.
Absolutely. So Sanofi Consumer Healthcare, they reported their numbers. It's a weak set of numbers that's coming from the company. Revenues down 24%. Margin seeing an impact of around 300 basis point contraction there, 36.5% versus 39.87%. There's an increase in expenses, employee expenses overall that we are seeing. And that is why an impact that is coming in on the overall business. And they have been seeing a weakness over the last few quarters as well. They're not trying to, we're not seeing any sort of a recovery coming in. So we're expecting red coming in for this one. CI Automotive, we are expecting red here as well. While profits have seen a growth of 9.5%, revenues have come down by almost 6% on a year-on-year basis because the company has highlighted a weak market performance that's come in for light vehicles as well as CV, especially in the Europe as well as US off-road market also has not been doing well for the company. So that is why an impact in terms of revenues. Margins contracted by 40 basis point impacted due to the turnover drop is what the highlight is coming in from the management. So red expected here. Lastly, Sai Life Sciences is what we are watching out for, and we're expecting green on this one. Now, Small Cap World Fund has bought around 10.55 lakh shares in the company, 0.5% stake, and Sai Life is a pure play CDMO business, so an interesting one in the CDMO space as well. And entry coming in from a fund is something that is interesting here.
All right. Well, let's go across to Vivek now. Vinny, thanks very much for that. More stocks with news flow. Vivek, over to you. Morning.
Well, good morning. That's right. The first stock on the news and the first stock on the radar is Religare Enterprises, largely along expected lines. Post the completion of the open offer, the Berman family, the Berman Group, has acquired control of the company and has been designated as the promoters. Now, post open offer, post acquisition of shares, and post buying from the open market, the Berman family holds over 21.15% stake in the company. The other stock on the radar is Seagull. Now the company has achieved financial closure for 2 HAM projects in Uttar Pradesh. The first project is the Northern Ayodhya bypass. The project bid cost is at 1,200 crore, while the Southern Ayodhya bypass is the other project that is being discussed. The project bid cost over there was close to 1,300 crore. Another infra stock on the radar, HG Infra. The company has transferred 100% stake in one of its assets, which is Rivari Bypass, to an infrastructure investment trust called Highways Infrastructure Trust, and the total consideration for this particular asset is at 133 crore. ITI, another development coming in over there, the AMRCD, which is the Administrative Mechanism for Resolution of CPSE Disputes, has stipulated the company to sell the Electronic City land to Center of Development of Telematics. Now, the total value of the land is at 200 crore. The company has received 100 crore so far, and post completion of certain stipulations, the company is expected to receive another 100 crore. So expect some green on ITI as well.
Okay, all right. Thanks very much, Vivek, for that. Let's quickly recap our list of top stocks to watch this morning. The ones that have positive news flow around them are Cipla, Lemon Tree Hotels, Sai Life Sciences, Religare Enterprises, Segal, HG Infra and ITI. Stocks that have negative news flow around them are Delta Corp, Sanofi Consumer and CIE Automotive.
Okay, all right. Well, those are all the stocks. Let's turn our attention to the commodity space. Manisha Gupta joins us to tell us what's going on there. Manisha, morning.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we have seen gains come in for the third straight day. And with that, the prices are up 2.5% on this week on the back of U.S. and gas distillate stocks declining. Also, Russia supply disruption is supporting. The U.S. freeze on some pipelines also has impacted the supplies in oil there. So all of that keeping the crude oil prices in good humor. The gold prices, in the meanwhile, hit an all-time high of $29.55 an ounce. It's trading around $29.35 right now. So some profit taking from those all-time highs is what we've seen in the New York session yesterday itself. But even with that, it's going to be an 8th straight week that we are looking at in sense of gains for gold prices. Our best performing asset class really with 12% gains until now. Good gains is what also we are reacting to right now for silver. Copper also is snapped its 3-day losing streak. We're looking at good gains coming in for steel, iron ore, zinc, as well in the Asian markets right now. So overall, commodity pack has started on a positive note.
Okay, all right, Manisha, thank you very much for the heads up over there. We'll take a quick break. On that note, on the other side, we have Siddharth Khemka of Motilal Oswal joining in. We'll discuss some of the stocks and news today as well as some other fundamental ideas with him.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए। फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी
Welcome back. Well, to help us with some analysis on all the stocks that we laid out for you, we have Siddharth Khemka, the head research B&D at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning. Good to see you win. Well, I'm going to throw a couple of stocks at you. Let me know if you could comment on any of them. Religare, the long-awaited deal has finally taken place. The Burmans are in control. They've got what they wanted out there. So, any view on this one? And Delta Corp as well, some kind of value unlocking. But Mangalam says it's not to the extent that the street would have liked. Any view on any of these two names?
Good morning, Nigel. Good to be on the show. Unfortunately, both the stocks not under coverage. But I think Religare, there is a big overhang that was there with respect to the management and the fight between the old leaders and the new promoters. So I think that's a very welcome step that the market will definitely look forward to in a positive way.
Okay, all right. So Religare, you're expecting the stock to do well from now because that overhang is out of the way. But I think the another name that you'll track is APL Apollo. I think you'll have been fairly positive on that. UBS has come out with a note. They're citing that there have been a couple of price increases and they believe 400 crores in this quarter is possible on an EBITDA front. Your view on the stock, it's actually done nothing for, I think, 12, 18 months or so. In fact, from the peak of, I think, 1,900 rupees, it's corrected. Yesterday it was up 6%. UBS is positive on prospects. Your take?
Yeah, definitely. If you look at the stock historically has done very well. And then there was, I think, some long consolidation that has happened because of the slower earnings growth that they reported. But if you look at Q3, I think a very strong growth. The net profit, the volume grew about 37%. Margins have been recovering sequentially, and there has been the management has indicated that there has been improvement in demand scenario and lower discounting. So that bodes well for the quarters coming forward. Some of the key sectors where they are looking at higher demand includes railways. With the modernization of a lot of platforms, they are getting a lot of orders there. Aviation is something that they are continuously getting a lot of orders. Plus, I think overall the company's capacity expansion, that corroborates the fact that they are seeing increase in demand on ground. So overall, we are expecting a steady, almost you can say 28-30% CAGR growth in net profit over the next 2 years, driven by volume expansion as well as margin recovery. So we continue to like the stock. We have a buy rating and a target price of 19.20.
Okay. Siddharth, hi, good morning. Now, your thoughts on the power move that we saw yesterday. A lot of power stocks were up, and I was looking at the Nifty this week. NTPC is the top Nifty gainer, 8.5% up. Yeah, this is after all the chatter about lower capex from the government and whether these stocks have run ahead of themselves. Power and industrials, would you be recommending anything in this space now?
Yeah, good morning, Surbhi. So I think, yes, so there has been 2-3 things that is supporting the power sector. One is the coal prices that has fallen down, and that is supporting the overall outlook for power sector as a whole. The other thing that I think has happened over the last couple of days is that NTPC, with the government focus on nuclear energy and the deals that they have signed in Paris, France, plus talks with US, NTPC is at the forefront of doing a lot of these projects which could drive growth. There has been concerns in terms of capex slowdown and the industrial growth slowdown, which could remain an overhang at least for the Q4 numbers. But from a long-term perspective, I think these are welcome steps. The coal power coming down definitely looks good. The other is the expansion into nuclear power. That is another long-term growth driver. So definitely worth looking at NTPC after all this correction. Plus, we also like JSW Energy and Tata Power within the power space.
Sorry, miss the other two stocks. There's NTPC and which is the other one? Did you say Wari?
JSW Energy.
JSW Energy.
With 170 target price. And Tata Power is another stock within the overall utility space that we like. We have a target price of 490 there.
Sid, morning. But instead of me throwing her name to you, why don't you tell us what are you really convinced about? Something which has come off quite a bit and is looking really good from a fundamental perspective.
Yeah, definitely. So I think if you look at from an overall market perspective, what we are looking at in the entire space, the capital market stocks have come off a lot. Within that, if you look at the CDSL camps of the world, plus there is a news flow of NSDL coming out with an IPO over the next 1 month. I think we are seeing now buying interest coming back within the capital market themes. BSE as a stock has started doing well. So one stock that I would see as a key growth driver from here after the correction is CDSL. We like the capital market theme. We believe this stock is likely to do well. And correction at the current levels, we believe one can definitely look at CDSL. We have a target price of 1500 on CDSL.
And where does it trade on a valuation basis?
In terms of valuation, if you look at with the almost 24-25% growth, FY26, we see a PEP of about 35 currently, which is at a discount to about 50 times that it used to trade earlier.
Okay, so CDSL could be one idea in the capital market space. So it's slightly wide question. Defense and railways. A lot of PSU stocks have actually bounced as well in this whole market recovery. Many, even yesterday, day before, many were recovering. But I don't know if this is some kind of a trap or whether this is an exit opportunity. Which are the railway stocks which you would sort of exit out of completely in all bounces? Which are the ones that you'll still hold? And same question for defense. Defense, what are you still comfortable holding? And where do you think that it's take the exit and go?
Yeah, definitely. I think it's an important question because the stocks had fallen off much before the market correction started, and that is purely to do with the valuation. So some of these sectors, the railways, defense stocks, valuations had reached astronomical levels, and we saw that kind of cooling off and stocks correcting. In terms of results, I think, yes, results have been pretty strong in terms of defense. Bharat Electronics is something that we continue to like. That is one of our preferred picks in the overall space. The other one is Mazagon Dock. There we believe that the earnings growth continue to remain pretty strong. We see 60-70% earnings growth. Valuations at 30 times looks very reasonable. So and apart from that, the third stock that we like is HAL, Hindustan Aeronautics. Very strong order book from a long-term perspective. Any correction definitely should be an opportunity to add to these three defense names.
So all three good at current prices as well? BEL, Mazagon and HAL?
Definitely. So I think the slowdown in earnings, or at least the sentiment change because of this lower capex from the government, that is helping the stock price coming off. Valuations have come off from the. So if you look at again Bharat Electronics trading at 30 times 1 year forward P, Mazagon Dock at 30 times. So these are compared to, you have still a lot of these defense companies trading at 80-90 P. So I think these market leaders trading at such discount is definitely worth looking at current levels.
Okay, all right, interesting. Got that. Siddharth, just stay on. We'll quickly dip in and listen to some management commentary now. Crompton Greaves Consumer Electricals introduced two new tech platforms, Nucleus and X-Tech, aimed at enhanced energy efficiency, performance and reliability of its products. The company's MD and CEO, Promeet Ghosh, says that they see better times ahead for the acquired brand Butterfly. He also talks about a bunch of new products that are in the pipeline. Take a look.
We are looking forward to Butterfly turning the corner insofar as the growth trajectory is concerned, and profit trajectory already see. The turnaround is definitely taken root, and so we do see better times ahead for Butterfly. There will be product categories that we are not currently in that we will start to sell, but also better and closer to the consumer heart. Suffice it to say that we are working on a bunch of products.
Right.
Not only products which are already available in the market, but taking those products and trying to see how we can come up with something that is different. Yes, you will see us entering some of the large market segments where we leverage the Crompton brand, the Crompton distribution, the Crompton service, but also come up with a product. There was some subdued demand that we'd seen in some of the quarters that have gone by after what was a very strong first quarter, benefiting from what was a hot summer. So, with the government putting more money into people's hands, as you noted, an early onset of summer, we are optimistic about a demand pickup going forward. And, as we are learning now, with changing climate, not only will summers sometimes start early, but they will also last longer. So yeah, I can't say I'm thrilled at global warming, but occasionally it helps us.
Okay, well, I guess lots of sectors waiting for the onset of summer, starting from beverage companies to cooling companies. But anyway, Crompton Consumer, any thoughts specifically on this one or anything else from the consumer durable space, Sid?
Yeah, so Prashant, I think Polycab is something that we like. Crompton Consumer is not under coverage, so there's no view there. But within the overall FMEG space, Polycab looks strong. Q3 results were pretty steady, driven by the robust performance both in the electrical goods plus the EPC segment. Interestingly, EBITDA margins expanded in the quarter, where we are seeing across board a lot of sectors witnessing pressure on margins. Polycab reported margins of 13.8%, and the management is expecting about 20% CAGR over the next few years, and guiding for about 600 to 800 crore capex for the next few years. I think overall we are expecting strong growth, and looking at the entire space, the real estate space is also consistently looking good, and that could be a proxy play through Polycab. So we have a buy rating and a target of almost 8,400 over there.
Okay, all right. So that got it. Thanks very much for a lot of those views. We do have to take a very quick break. Coming up on the other side, we will have our technical experts join in. Both Sudarshan Sukhani as well as Mitesh Thakkar are going to be in to help us out with some trading ideas.
और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं, उसमें संगम नोच पर फीकल कॉलीफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 MPN प्रति 100 ml से एक कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is, before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs.
Welcome back. You're with us here on Bazaar Morning Call. There's 10 minutes to go for the pre-open session. And it's still down, firmly down about 100 points, maybe a little bit more from when we looked at it at 8 o'clock when we started. We have Mitesh and Sudarshan with us with a recommendation on what you should be doing as far as indices go and specific stocks are concerned. Gentlemen, good morning. Mitesh, let me start with you. How would you go about trading the market? At least as we were discussing yesterday, there is no momentum and no movement on the Nifty. But broader markets have been doing just well. So what's the trade here?
That's true, Prashant. I think the indices, while it's been repeatedly trying to claw back on the upside from levels of 22,800, there is still no sign of a reversal, which could suggest that we'll see a sustainable bounce back. Given that, I think the only trade which you can do on the Nifty is to try and either buy around that level with a 70-80 point stop, which I've been advocating for the last 3, 4, 5 days. It's worked well, but also is the fact that repeated failure to give a reversal means that there could be a chance of a negative breakdown as well. The way I'll approach the Nifty is that I'll get into some put spreads on the Nifty, buy the 22,800 or 900 put and sell a lower put, so that you have that safety buffer in case the Nifty breaks down, and trade on the long side on stock basis, because a lot of stocks from oversold levels are giving good reversals. Primarily are Nifty metal stocks like Hindalco, Nalco, etc. So I think try and identify stocks which are reversing from oversold levels and on the index do some kind of a put spread, so that will be a good hedge for yourself.
Okay, all right, got that. Mitesh, Sudarshan, morning, and morning to Mitesh as well. Sudarshan, what would your... Okay, before we get to Sudarshan, Mitesh, your stock ideas first for the day.
Yeah, I have a mix of buys and sells today. NHPC, I think, had a good gap kind of a breakout yesterday, so that could see some more upside. Buy here with a stop at 77 for targets of 18.5. A cash stock, which is Narayana Rudala NH is the symbol, I think. If it starts getting past yesterday's high 14.15, buy then with a stop at 13.89 for targets of 14.85. Nykaa, on the other hand, is a sell call. Keep a stop at 169.5. Look for targets of 158. And on a mild decline, try to buy SJVN, Satluj Jal Vidyut Nigam, around 92, 91.5. Keep a stop below 90. Look for a target of 96.
Okay. All right. Got it, Mitesh. Now let's go across to Sudarshan as well. Sudarshan, good morning. What is the approach that you're taking to trade? Anything on the index?
Good morning. There has been a very frustrating week for traders and for viewers. The Nifty has done nothing and there was no index trade. Unfortunately, see what's happening. We are moving around 23,900, little up and then down. And that's a level which we cannot trade into. There is only intraday volatility. The market closing is not moving, barely moving. So I'm sorry to say, but that frustrating period continues. There is no trade in the index. There is no sense in trying to dabble into these volatile intraday moves. It's very difficult to catch them in the first place anyway. So focus on stocks. Let the index be. The market will itself tell us when the index trades emerge.
Okay, all right. You've been maintaining that stance, Sudarshan. It's a bit of a frustrating period maybe for the index traders, but on stocks, plenty to do. So fill us in with a couple of your stock picks.
Yeah, stocks are doing interesting things. There are some stocks that are actually going up, and that's where the focus should be. Zomato is a buying opportunity with a stop under 228. I have two intraday shorts. The first is Adani Enterprises, stop under above 22.25, and the second intraday short is Tata Elxsi with a stop above 6100. My final and fourth call is a buy idea in CESC with a stop above 35. Shorts. I mean, just forget about the index for a day or two.
Okay, all right. Thank you very much for that, Sudarshan and Mitesh. Appreciate it very much. 6 minutes to go for the pre-open session. We'll take a quick commercial break here. We come back with Nikhil Nagania, Director and Senior Analyst at Bernstein, to discuss trends in the power sector and what are the stocks he likes there. Stay tuned.
HSBC presents CNBC-TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Center, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization, and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So
Welcome back. You are with us on Open Exchange, and we're coming to you live from the CNBC-TV18 Motilal Oswal studio. 17 minutes to go before trade kicks off. Let's look at Vedanta. There is, of course, a special situation playing out in Vedanta. The company is going to go through a demerger and create 5 separate entities. Nigel is here to explain to us what exactly this could mean for shareholders. Nigel.
Well, that's right. There's a special situation playing out in Vedanta, and it could possibly be a case for re-rating. Well, let's break it down for you. This week, the shareholders and the creditors have approved Vedanta's demerger plan, and the management expects the demerger to conclude by the end of the first quarter of next fiscal. That's quarter 1 FY26. Remember, the board had approved the demerger in September 2023, and the company has secured the NOC from both the exchanges. Now, post the demerger, the existing shareholders of Vedanta will receive 1 share of each of the new verticals. And this will result in 5 listed entities with separate focus on aluminium, oil and gas, power, steel and iron, as well as the existing business, which is Vedanta Limited, that will house the domestic and the international zinc businesses and also the copper business. Now, the demerger will allow each of these businesses to focus on its core strength. So it could offer some near-term potential value unlocking and maybe a re-rating of sorts just in the near term. Well, MK believes that investors would be more bullish on Vedanta Limited, Vedanta Aluminium, as well as Vedanta Power. On the valuation front, well, the current listed entity Vedanta trades at around 5 times EV on EBITDA. The assumption is they do an EBITDA of approximately 50,000 rupees in FY26 and also taking into account a debt of approximately 60,000 crores odd, which is roughly the number that they are at even right now. But the demerged entities could command a higher multiple than the 5 times that it's trading at currently. And maybe it could command approximately 6 to around 7 times EV on EBITDA, depending on the nature of the businesses. Now, bulk of the value will be derived from the aluminium business, which is very, very well placed because it's focusing on captive sourcing of alumina, coal, as well as bauxite. That could lower the cost of production of aluminium. That will help their profitability. Vedanta Limited, well, that will house the zinc businesses, which includes a 63% stake that it has in Hindustan Zinc, which is the listed entity, and also its international zinc business, but it could get some kind of a mild negative value for the copper operations, which are shut. Its oil and gas, power, as well as iron and steel businesses, well, that could attract a multiple of roughly around 5.5 to around 6 times or thereabouts. So as you can see, bulk of the value will come in from the aluminium business. Hence, the sum of the enterprise values of these individual businesses will be roughly around 2.7 lakh crore, which is more than the current enterprise value, and X of the net debt, where there could be some potential upside for equity shareholders. We're talking about the current market cap and the derived market cap in the future. That's potential value unlocking in the next 6 months or so. Remember, this is a special situation. It could lead to Vedanta relatively outperforming its peers in the near term. So keep an eye out on this special situation.
All right, it's a fantastic explain a quick primer as far as Vedanta is concerned.
Wonder what Mr. Agarwal will do next. That's the important part. But otherwise, valuation-wise, at a sub 5 times, looks very, very good.
I mean, the value is there, 100%. It's just, will it be extracted in mining terms? And then, of course, will it reach minority shareholders, right? Well, the rupee is starting at about, 86.48. That's a meaningful move compared to 86.66, which was yesterday's close. So the rupee is stronger by that much. I mean, of course, this is on the back of what we've seen on the dollar index, which has come off about 0.75%. And what we saw. I don't know if you have Nikhil of Negania of Bernstein with us. Okay, let's go across to Nikhil Negania. Nikhil, of course, tracks the power space very closely. Nikhil, good morning. Great to have you with us here on the program. Thank you very much. Prashant this side. It's always good to see you. So let's just start with the basic underlying, a power demand situation. We'll get drilled down to stocks, etc. Everything is corrected, obviously, from the highs. Power demand is up, as you point out, in the latest sort of short note that you've put out. But power prices, at least especially on the spot level, are not. Could you just contextualize that for us?
For sure. So power demand actually is the heart of the sector. For any capex to happen, any growth to happen, renewable or thermal, power demand needs to come back. What we were seeing on power demand last 3 years, FY21 to 24, power demand was clocking 8-9% CAGR growth. Last year, second half, although the demand tapered down, January, for example, was just 2% power demand growth. And February, it's come back. So February, at least the first half, we see power demand grow 6.5%, which is a good thing, obviously, for the sector. On a long-term basis, we are not too bothered about these near-term fluctuations. We believe power demand should grow at 1x of a real GDP kind of a number, which is good enough for the sector to spend the kind of capex the government has envisaged. The second part you mentioned on spot prices, spot power prices are usually a good indicator of demand supply. So spot power prices, while still high, have come off a bit Y on Y. Reason being, we have good hydro generation this year, given the monsoons we had. Even wind speeds have been good in the first couple of months this calendar year, which is supporting wind generation as well. But that said, still spot prices are 10 rupees, which is the ceiling in the non-solar hours of the day, which is evening hours and early morning hours in India. Which still tells you that we still have a tight situation of demand supply in the non-solar hours of the day.
Okay, all right. Hi, Nikhil. Good to see you. And Nikhil, just to confirm this power demand uptake that you're talking about, I believe it's not on a low base because the same time last year as well, we had roughly around 6% growth, right? So it's not a low base effect. It's actually strong demand, right? Just clearing that out of the way.
Absolutely. I think the first half of last calendar, the demand was quite good. So this is not on a low base. This is on a
okay. All right. So, okay. All right. So if you're going to be bracing ourselves for stronger power demand, then those with higher merchant capacity will gain, right? So which are those companies that we should be looking forward to? I think JSW Energy in the past has mentioned Adani Power, if I'm not mistaken, as well. So how do you play this? Because some of them would be tied up, while the ones that have a higher amount of merchant sales could gain. So explain this to us.
Yeah, so see, power demand, the key impact is firstly on capex, right? The capex need for the sector. So long term, as I said, 1x of real GDP should continue to drive renewable capacity addition of 30-40 gigawatts a year, thermal addition of 8 gigawatts a year or so. For the merchant power plant, spot prices is of primary importance. So spot prices still high, but slightly off last year. So merchant power plants still better off than what they were, let's say, pre-COVID kind of a situation, when power prices used to be 3 rupees. They are averaging about 4.5 rupees in the spot market right now. But it could still, on a YOY basis, their realizations could be lower despite demand up due to spot prices being down.
Nikhil, just sort of for one quick question first, let's just understand where are spot prices now, and as we head into the peak season, summer, I mean, are there any estimates that you have already in terms of what is the elbow room? How much higher could spot prices surge because of this demand-supply issue that you just explained?
Correct. So spot prices are around 4.5 rupees on an average these days. They were even higher last year, February. I would expect them to be around 5 rupees, I think last year, if I recall, this time. See, it's not possible easily to forecast spot prices. Many things come into play. Demand does change a lot with the weather, which is a big factor. But see, on a base case, we expect spot prices to be slightly lower this year than what they were last year. Given, as I said, hydro generation is good. And we have good amount of thermal capacity coming in the second half of this calendar year. So that could also taper down spot prices.
Okay. So we've discussed some of the basic fundamentals now, and now you have to put the whole valuation and price picture in it to decide what investors should do with stocks, right? The thing is that these stocks now are a good 25%, in some cases like JSW Energy, 40% off the peak, off the 52-week high. So are these comforting valuations given the increase in demand that you're talking about, or do you think there is still some risk buying power stocks at these levels?
Yeah, so if you look at valuations, we don't cover JSW, but we do cover NTPC, Power Grid. We cover some renewable players, Adani Green, Renew Energy. So we see favorable valuations more in the government-owned companies, which is NTPC, Power Grid, versus private utilities. Hence, our preference has been towards the government-owned utilities, especially NTPC being our top pick in the sector, to play a mix of thermal, renewable, and even nuclear as a trade in the power sector.
What about this renewable energy theme, Nikhil? How do you play it? Because that still appears there's plenty to be done on the renewable side of things. In the near term, some valuations got excessive. Some of those stocks have pulled back as well. So from the renewable energy basket, what do you like and how do you play it?
Yeah, so renewable energy basket, you can either play the developers or you can play equipment suppliers, could be wind equipment or could be solar equipment. See, I think what can't be denied is the growth in the renewable space. There's no denying that. So 30-40 gigawatts a year is effectively a capex of almost 2 lakh crores every year. So no questions there. But the debate is on returns and on valuations, as you rightly said. On developers, I think the ROEs you make is not phenomenal. It's early teens kind of a return on equity these businesses make. And on equipment suppliers, wind, incrementally, we are hearing challenges of land availability. Good, large, contiguous land parcels for wind is a big challenge. So as much as the expectations have been set, we think execution might not be that easy on the wind side. And on the solar equipment, we think right now, as a theme, they're having the time of their lives, right? US wants Indian modules. India has put in restrictions. And hence, you have to use domestic modules and even domestic cells for schemes like rooftop solar. But the challenge we see there as well is it's a low barrier to entry business. So hence, over time, we see a risk of oversupply happening on the solar equipment space in India. So hence, so growth looks good, but returns, oversupply, some of those issues could impact the renewable space. And valuations are still rich. I mean, for most parts, can't comment specific stocks, but most parts in the renewable chain, valuations are still quite rich.
Does it? So in the RE space, nothing, right, Nikhil? I mean, you don't have a pick per se in that sense.
We don't. I mean, we play to our NTPC in our coverage.
Sure. Got that. Is it for an investor who's not sort of bound by this sector or that, or even just looking at utilities, etc.? Does it make sense to go down and look at wire and cables and transformers and the allied sort of ecosystem in that sense?
And transmission, if I could add to that.
Yeah.
No, absolutely. So we discussed, the broader demand. We discussed the renewable space. The third is the transmission space. So transmission is actually thematically, and even in terms of where we see massive capex happening, there are no doubts to it. I mean, transmission is a big theme, not just in India. I mean, all across the world. Grid is becoming the bottleneck as demand accelerates and countries look to add renewable capacity. So grid is a bottleneck everywhere. Even in India, to add renewable, grid is becoming a big bottleneck apart from that. So transmission equipments, transmission as a theme, what we are quite confident is the capex will happen. And the other, sort of a positive factor to transmission capex, I would say, is even if demand slows down a bit, it hits transmission capex with quite a bit of a lag. So government will still have to build all the transmission they have planned, even if you see near-term slowdown in power demand. So it's from a capex building perspective, it's a lower risk play.
So, Nikhil, sorry, rushing you because we're going to be running into market opening. And since you're bullish on transmission, apart from Power Grid, any other plays? I mean, some of the transmission equipment makers, maybe anything else apart from Power Grid? I don't know if you actually like Power Grid, but just tell us how you'd play transmission.
Yeah, we are positive on Power Grid. We are positive on L&T, which is obviously a broader EPC company, but transmission is also a decent part of their construction activities. Transmission equipment players specifically we don't cover, but within that we would expect the high voltage segment to be a better place to be at if you keep valuations at least from capex perspective and high barrier to entry. High voltage transmission is where we see the most positive as a theme.
Right, that's
HVDC orders. Yeah, we've heard that acronym so often in the last 3-4 months, right? And every time there's this HVDC order, stocks hit the roof. Hitachi, right? Hitachi Energy, of course, has been winning those orders in the BHEL consortium.
Stocks fallen, I think, from 16,000 odd. It fell to recently. Last month, it fell to $8,000, 8,800 actually. It's back at about 12,000 rupees.
Yeah, I think the problem by HDPC earlier, only one order in every 5 years. Now you're seeing one, I think, every 1.5 or 2 years, or even less than that. So that's why that big spot.
Anything else, Nikhil, we should watch out for in terms of stocks or ideas or segments even?
No, largely that's it. I mean, so in terms of our preferences, NTPC is a top pick. We like Power Grid, we like L&T in construction. We also like power lenders, power sector specific lenders, but again, they are higher beta plays. So they are not defensive plays like an NTPC.
REC, PFC, etc. Thank you very much, Nikhil. A good conversation as always. Thank you very much for joining us with all of that. So that's the analysis from Bernstein coming in on the power space.
Did you guys realize that both our guests today, ultimately their picks were all PSUs? Yeah. Siddharth Khemka picked out Mazgaon Dock, HAL and BELS3 defense picks, and Bernstein's picks again, NTPC, Power Grid. So PSUs as a theme still seems to be going strong, at least for these stocks.
Well, indeed. Let's get in Mitesh Thakkar since it's 9:10 odd. Mitesh, what do you have for us?
I have a buy on NHPC for targets of 85.
Okay, and let's hop across to Vivek to further delve into the power theme. JSW Energy and Suzlon on his radar. Vivek, tell us more.
Well, that's right. Keeping it with the utilities, yesterday you saw the entire pack move up. We also spoke to the Bernstein analyst, quite positive on the power theme. And today, a couple of initiating coverage notes coming in. First on JSW Energy, Morgan Stanley has initiated coverage on the stock. They have a target price of 545 rupees a share. They say that the company has a well-integrated business model and they consider it as one of India's best Indian utilities to play the future of energy theme. What is this particular theme? It's a theme where they play both energy transition as well as energy security. So the company Additionally, JSW is growing its green renewable energy business, also is investing in storage assets, and along with that has significantly expanded its thermal business capacity inorganically as well as organically. A company has also seen significant market share gains in recent bids at reasonable tariffs. They see and forecast an EBITDA CAGR of 24% over FY24 to FY28, and they expect the renewable energy side of the business EBITDA to grow at 52% CAGR in the same time period. The other stock on the radar is Suzlon. Investec has initiated coverage. They have a buy rating. They have a target price of 70 rupees a share. They say that the company is well positioned to capitalize on the resurgence as far as the wind energy sector is concerned. It's now evolved into a net cash entity with strong ROE as well as strong ROCE, and the company is aided by a rapidly expanding order book of close to 5.5 gigawatt. So they forecast Suzlon to register revenue as well as PAT CAGR of 55% and 65% respectively over FY24 to FY27. So I expect the utility stocks to continue to remain in focus today as well.
All right, and we'll sort of start tracking them as we open for trade. Just a few seconds to go and we'll have the first rate start to come up. And 56 lower on the Nifty in the pre-open, 123 lower on the Sensex. So 22,857 on the Nifty is where we are starting at. The low, of course, has been 22,725, which was the last low which was made. So some distance still from that point. And of course, it's a Friday. So as I get this going, the Nifty Bank has been lately stronger of the two indices, but of course yesterday it ended lower and underperformed the Nifty, but that's day on day kind of price moves. What do we have? About 0.2 lower on the Nifty, about 0.5 lower on the 0.3 lower on the Nifty Bank. Sensex is down about 0.25%, mid-cap index is flat, and straight away you've got the market heat map coming up, the Nifty heat map coming up on your screens. Lots of stuff still opening up, so I think we'll have to give it a minute, 2 minutes more, but more down than up essentially is the overall picture. Surabhi.
Yeah, I mean, moves are very, very quiet early on this morning. Bank Nifty is underperforming. That's very clear, at least at the start. So continuing its streak from yesterday. ICICI Bank, Axis Bank, Kotak, these are some names on the downside. Yesterday HDFC Bank was a big disappointment. This morning it's starting slightly lower, but close to the flat line. So let's see if there's recovery. On the upside for the Nifty, Cipla, Vinny alerted us on that stock with the new products that they have in the pipeline. About 1% up on that stock. Adani Enterprises, there's some buying in metals. Tata Steel, Hindalco looking okay. TCS and L&T along with ITC are some of the heavyweights that are pulling their weight on the upside. Actually, tech is doing pretty okay. HCL Tech is also on the upside for now, but it's still extremely quiet and trends are a little all over the place. By the way, beyond the Nifty, the one stock that I want to highlight is Religare, because finally it's over, it's done. The Burmans are the promoters of the company and they hold about 25% stake. That stock is up about 4.5%. Not sure if I missed something on L&T Tech, by the way, folks. I mean, suddenly stock is surging at the open. 4.5% up. But mid-cap's doing better. 0.5% up already on the mid-cap index.
Well, that's right. A few stocks just to take note of. JM Financial, that's a stock that's up and about in today's trading session. Volumes as well fairly high, so that one should come up for you on the screen. On the flip side, you have Strides Pharma. That one's seeing some kind of selling pressure as well. So let's keep an eye out on that one. That's a little bit lower as we speak. Other stocks that are moving around, as you mentioned, Religare, top of the pops out there. Bandhan Bank, one of the biggest underperformers in the last few years. It's up 3.5% as we speak. JSW Energy, they have merchant power, so they could potentially gain. A power demand is strong. The stock has as just corrected a goodish bit from the recent peak, and then past quarters numbers were very disappointing. For the time being, the stock up 3%. CDSL is back on the list, up close to around 3%. And NTPC Green as well, one of the top volume movers in today's trading session. Sambandara Madison had a good run, but that one, in fact, is now down close to around 1.5%. One of the top volume losers this morning. But guys, not too bad looking screen. We're down 20 points. The GIFT Nifty was teasing us for an 80 to 90% cut. For the time being, 20 points cut. But that's not really the story. The story is in the broader markets. That outperformance continues. It got slammed the previous week. This week, the mid-caps and the small caps have done better than the headline index. Portfolio is feeling better than last week at least.
No, to start with, absolutely. 4:1 is the advances to decline ratio. And still early, but I mean, gives you a sense of which way the wind is blowing this morning, and it's outperformance for broader markets, which seems to be continuing. The top volume-led gainer is CDSL, which is up 3%, so just under 1,300 rupees. APL Apollo, we had discussed actually both these names in the morning. APL Apollo is up 4%. is the second biggest volume-led gainer. Godfrey Phillips ended 10% lower yesterday. It's up 3%. Again, it's got large volumes to begin the day. Religare we mentioned. There's JSW Energy and LTTS is coming up with a 4% pop. Again, large volumes for this point in the day. 63 Moons is there, 4.5%. It's just showing up with volume, so making a mention of it. EPAC Durables is up 4. There is E2E Networks, which is up about 5%. Just one way a slide on E2E, and of course now coming back 2 days, actually I think third day of 5% daily gains. There's something like a Shakti Pumps which fell from 1200 to 850s, back at about 930 now. So it's one of the big winners over the last 2 years. Kirloskar engine oil is up about 6.5–7% to begin the day. And Maharashtra Seamless was a big mover. We had the management with us yesterday and is moving up even more. So up another 4% in Maharashtra Seamless after yesterday's. I think it was an 8% pop that we ended the day with on that name. Mahindra & Mahindra is the biggest volume-led loser to begin the day. Yesterday, of course, it saw a 5% turnaround. It was down 2.5. It ended up 2.5. M&M is got volumes for now, 1.5 lower. So 2,800 is where that stock is at. We have Vetri Subramaniam, Chief Investment Officer at UTI Asset Management Company, who's with us. Vetri, good to have you with us here. Thank you for your time. What's the view at UTI, Vetri? Market view. Is the fall done, or is there more to go for large caps and mid caps and small caps as well? What's the sense?
Sure. Good to be here, Prashant, and talk to you. Yeah, very quickly, I think, we've been concerned about market valuations for a fairly long period of time. The sell-off, which is sort of, accentuated right from September, I would say, breaking it up into the components that you said, as far as the large caps are concerned, we would, the way we look at our consolidated equity valuations, I think it's back within the fair value territory. It's still not cheap, but it's within fair value. And fair value is a reasonable good territory for investors to be willing to, enter the waters and start allocating money to large caps. So from our point of view, large caps, there is comfort. Where we still find the valuations in aggregate expensive is really in the mid and small caps. Particularly, I would highlight mid cap valuations. These are at a record premium to their own history and at a record premium to the Nifty. So we would be slightly uncomfortable in that space. Same holds for the small caps as well, though the small caps have seen a little bit more of a sell-off, but in aggregate, still not something that we are particularly excited about. But I should admit, when I look at the Nifty 500, you've got about 25% of the stocks which are down more than 40%. You've got close to 70% of the stocks which are down more than 25%. So there are more opportunities that you can hunt around for at a stock level. But when you talk about the asset class valuations of 250 small caps or 150 mid caps, I still find those very rich.
Mid and small cap valuations still rich. Vetri, good morning. Just give me a moment. Just going back to L&T Tech, because I was pointing out to viewers that this sudden big surge on the stock. And now Nimesh has alerted us why it's because of brokerage notes. L&T is right now up 4%. There's a Macquarie note, and we'll put it out in just a bit. Macquarie is a 5,100 rupee stock. Macquarie thinks it can go to 6,500 plus. They're quite bullish on L&T Tech. The other one is Bandhan Bank. Bandhan is reacting to a CLSA note. Again, an outperform rating coming in from CLSA, and CLSA thinks Bandhan from 141 can go to 220. So just pointing out on the back of brokerage moves. More coming up on why these brokers are positive on these stocks in just a bit. Vetri, hi, great to have you on. So, you've started off by putting that caution on the table with respect to valuations. Now, the question is, what does one do in this market? And I think people are still wondering if what you're saying is that mid caps are probably still a little overvalued. So do you start deploying some money in large caps, or do you just sit tight, ride this out, and just prepare for a year of low returns? I mean, could it be that kind of a year, 2025? What do you see ahead?
Well, point number one, the market really doesn't care whether it's your birthday, your anniversary, or financial year or calendar year returns. When you look at 10-year returns and you look at rolling returns over 5-year and 7-year periods, what you will find is that they are never evenly distributed. So my first recommendation would be stop thinking about it on an annual basis. You've got to think about it in terms of, I would say, somewhere between 5 to 10-year rolling periods. And, that's what really influences your outcome. So don't invest today because you hope hope to beat the FD return. You know, a year ago, people were very confident that they could make 20% a year. Who needs fixed income? Now they're suddenly worried about the fact that they're not making as much as their fixed deposit or as much as a fixed income fund. But that would lead me to what I would say, to my mind, still remains a very good opportunity for investors, which is to consider the hybrid set of funds. The reason I say that is that it's got a balance between equity and fixed income. Of course, those percentages could move around based on which mutual fund category you look at. But the reason it's attractive is that your fixed income part of the portfolio is giving you a reasonable positive carry and spread over inflation. And at the same time, you're not 100% exposed to equity. The aggressive hybrids typically run at 65-70% equity. And of course, you could also look at, you know, the strategies like the balanced advantage or the multi-asset allocation strategies, which, you know, could dynamically readjust their equity exposures. So to our mind, hybrids are really, you know, should be the choice of investors looking to deploy in lump sums. If you do want to go for pure equity, then we would recommend large caps, but we would still recommend staggering those investments over time.
So don't be greedy. I think that's in a sense, that's the advice, right? Overall, stop being so greedy. But you know, Vetri, let me ask you something that another market commentator brought up, and I think it was a very, very relevant point. We're now paying capital gains tax at 12.5%. So when you speak about look at long-term rolling returns, equity returns still need to be substantial enough to be meaningful net of tax. So then, you know, what is this, average 10-year rolling return? If I sit in my fund, or if I sit on my stocks and forget about it for the next 5-7 years, what is that realistic expectation that that investors can still have, where equity still makes sense net of tax?
Sure. Well, remember, you are in an economy which is growing in nominal terms at about 10%. So, you know, that's sort of the aggregate outcome for incomes in the country. You are in an economy where the central bank is targeting a 4% inflation rate, let's say 4 plus or minus 2. So you've got a 10-year bond yield at about 6.8%. You add some equity premium to that of maybe 5 to 6%, you'll get to 11 to 12% number. So whether I come at this from what is income growth, or I come at this from a classical construct of bond yields plus risk premium, you will end up with a equity return at an asset class level, which is somewhere in the region of, let's say, approximately 12%, which actually corresponds very well to what we've seen in terms of the average rolling returns over a 10-year period. So that's the number to work with. Now, if you are saying 12% is not exciting enough for me, I think you've got to rethink, because look around you and see how many businesses are capable of generating, you know, more than 15% return on capital consistently over long periods of time. And the answer is that's a handful. So I think people need to be practical and realistic about equity expectations. The asset class can deliver you 12%. If you want to improve on the 12%, you've either got to be a great stock picker, or you've got to be able to use asset allocation to be able to maneuver to the asset class when it is more attractive, which also means you'll have to invest in that asset class when the news is extremely challenging and things are looking extremely pessimistic, and you'll have to take money off the table when things are very, very rich and markets are expensive. So you will have to use one of these two strategies, either stock picking or asset allocation, to improve your returns about 12%. And of course, you know, those of us who are in the active management business would say if you choose the right fund, you could also get an alpha out of it. But 12% is the benchmark. So I'm sorry if I'm, you know, disappointing somebody, but I think when we talk about investing to achieve our financial goals, right, and that's the starting point of all investing, you should not be modeling for equity returns of higher than 12% unless you can bring one of those three strategies that I talked about: stock picking, fund picking, which is alpha, or asset allocation.
Go back to rules of investing 101. That's what Vetri is saying.
Well, Vetri, I'm very, very realistic. I'm a loyalist with regard to my SIPs for my children, and 12% I'll be very, very happy on an average over the last, you know, the next many, many years. A 15-year time frame is what I have, and 12% compounded growth is good enough for me, you know, so that's the way I would look at it. But let's talk about stocks and sectors then, you know, which is the theme that is standing out right now. These pullbacks in the market actually are sometimes, you know, make select sectors look very, very good. So if you were to say, you know, a sector that you'll be, you know, most optimistic on, give and take everything, hearing about tariffs, the economy that slowed down a little bit, the hope of the recovery later this year, what would that be?
Well, Nigel, I did a long conversation with Surbi many months ago, and I said, the one sector that I find, despite all its challenges, looks reasonably well placed is banking and financial services. Nothing much has changed in my view. That still remains the one sector where I think, the starting point in terms of valuations, Nigel, is attractive. And to my mind, when you take care of investing by minimizing your risk, by getting in at sensible valuations, the future takes care of itself, as long as you're invested in sound, solid businesses. So I would still point to banking and financial services as the sector where I have the maximum amount of comfort. Into the sell-off, we are seeing some assorted pockets, in autos and in maybe things like power, which are starting to look more reasonable. But if you ask me to, name a sector, this is the only one where I'm still very, very comfortable. Outside of that, it's more about stock selection.
But on financials, Prashant, if I could just kind of press that point. I remember that was a Market Cafe conversation, and we spent a good half an hour, more than half an hour, understanding why you're so optimistic on BFSI. But Vetri, since then, I'm just throwing the narratives at you, right? People are now saying that you have to go slow on your high-yielding segments like unsecured. So, will you really make enough margin? People are saying that, maybe the growth itself is not going to come back. Plus, there is the fact that FPIs are disenchanted with the Indian market. So, therefore, bank stocks are not working. How do you sort of deal with some of these issues that have cropped up since then?
Sure. So I would, completely agree with you on that. I think what's been disappointing over the last 6-7 months has been the fact that because the monetary policy restraints have been, not even monetary policy, it's actually RBI's restraints on the banking system have been so tight. You've got this tight liquidity situation. You've effectively sort of talked the banks into saying, slow down your credit growth, correct the credit deposit. Whereas the reality is it's the RBI which has got to ease up the liquidity. Now, for whatever set of reasons, they were not doing that. But I'm glad to see that in the last few weeks, they've certainly started to open up the tap in terms of liquidity. And I think once you start to see RBI's contribution to creation of money supply go up, some of these liquidity issues will take care of itself. I think RBI's intervention 2 years ago in terms of slowing down some of those unsecured credit avenues, certainly in retrospect was a timely intervention. But I think they also realize that at some point of time, if you don't allow credit to flow into the economy and grow ahead of nominal GDP growth, it will constrain our long-term growth prospects. So I think, I'm of the belief that sooner or later people will, come to their comfort level and say, okay, this is a time where we've got solid set of banking and financial services institutions with strong balance sheets. Let the credit growth, continue. And I think that could easily grow well ahead of nominal GDP growth. And that's a very favorable environment for the financials.
All right, Vetri, we leave it there. Thank you very much for joining us. Good speaking with you, and it's a pleasure hosting you here on CNBC-TV18. Well, IOC is the next company on our radar. The country's largest oil marketing, oil retailer, really, and one of the largest public sector companies as well. Third quarter was weak, but I think the interest really with regards to IOC, and of course, I think I can safely say IOC management can speak for the OMCs, the other two OMCs as well, is about the future. We have Mr. A.S. Sani, Chairman of Indian Oil Corporation, now joining us. Mr. Sani, it's a pleasure having you with us here, sir. Thank you for taking out the time. Sir, all eyes on the LPG subsidy, I think. Will we see the LPG subsidy coming in? And by when?
Actually, we have to see it in a very big perspective. It's a large perspective. This system of buffer account was established in 2020 May. And since then, it has been working fine with the industry as a whole. And once we have been given the subsidy amount of something around 22,000 crores or something for the industry in 22-23. And now again, there is some deficit, and we are very much confident, and our government is totally seized to the situation. And we are in talks with them, and we are very confident that by the end of this quarter, we will be in a situation wherein my balance sheet will be healthy enough to support my working capital as well as my capex requirements.
Okay, it will come, right? And we've asked, our colleague Shireen asked the secretaries after the budget, etc., the government secretaries about this particular matter. And I mean, the government has been maintaining that it will come. You're absolutely confident that there's not going to be any slip at all?
No, we have been given assurances, and we are pretty confident.
So on that point, if you could just tell us... Yes, please continue.
No, I'm saying that it all goes into the big story of capex, because we as sector are growing, and we as sector are required to grow if the Indian growth story has to continue, because we are there to supply energy to the nation, and once this energy supplies and the energy requirement of this growing nation are growing, and they are going to be in another decade or so, they will be doubling. So with double the energy requirement, we have to go on investing, we have to go on doing capex for meeting the requirement, for making these fuels accessible to the general population and to our customers. So this is going to be imperative that we have to have our,
So just trying to understand.
Just 1 minute, sir. Mr. Sani, just to complete this point, as an investor in oil stocks, told me, and I had to check the numbers, but I think they're broadly correct. For under recovery of 28,000 crores or so, LPG under recoveries, market cap loss across the 3 OMCs has been about almost 3 lakh crores. So I'm sure the government is obviously, you'll have to, it depends on what point
the matter.
They're seized of the matter. And you're saying the amount will come in full before the end of this particular quarter, right? You're giving that assurance.
We are getting those indications. But as a point of, when we are talking of capital appreciation, or when we are talking of the stock performance as it is, I can give you a good number which you can refer to, that in the last 10 years, Indian Oil has got the capital appreciation of 11% XIRR plus around 7 to 8% depreciation. So 18 to 19% XIRR return has been delivered by Indian Oil in the last decade to its investors. And this story, we are confident that it will continue.
Absolutely, sir. I mean, the oil marketing companies, refining and marketing companies, they have been wealth creators. But just to go back to the numbers, sir, now 9 months your under recoveries, LPG under recoveries were, I think, around 14,300 odd crores. Where do they stand now? And our colleagues in Delhi were actually reporting that the government could be looking at setting up a new fund, the Oil Development Fund. And I think maybe this is FY26 onwards. So if you could tell us for this financial year, what is the, the help that you will need to mitigate the under recoveries for FY25? And what are you hearing about this fund from FY26 onwards? Apparently, it's for LPG as well as fertilizer, any sort of shortfalls or under recoveries. So if you could give us some more clarity.
No, that for fund, I can only say that it is only, as you are also hearing, we have also heard about it, but it is only maybe very on the drawing board. If at all it is there, it is on the drawing board. It is nowhere near implementation as of now. That much I can tell you. Then regarding the numbers can, your number and my number can vary, and we don't want to commit on those numbers as of now. But yeah, it is somewhere in that range, whichever you are telling. And we are very confident that we will be giving a good, healthy year-ending report by the end of 31st March.
Okay, all right, Mr. Saini. Hi, good morning, and good to have you on the show. Let's talk about the company as well as the Indian economy, because I'm looking at the January as well as February growth in FASTag collections. It's been very, very strong. Obviously, it has an element of the WPI-linked toll rate hikes that we have seen. My question to you is, have we seen very, very strong retail demand for fuel in Q4 so far? We're more than halfway through Q4. Is that the sense? Just trying to collaborate both the details, the FASTag collection, as well as what you're seeing on ground?
Diesel was subdued in last quarter and the quarter before. It was around 2% or 2.5%. Now it is picking up to 4 to 5%. It has already picked up to 4 to 5% growth in this quarter. Diesel, it was always 6 to 7%. Now I am seeing it around 7 to 8%. So MS is 7 to 8% right now in this quarter, and diesel, it has risen from 1 to 2% to 4 to 5%. So this is the kind of growth that we are experiencing right now. And this is a pretty healthy growth to see.
So better times is what we are seeing in Q4 in comparison to what you see in the past couple of quarters, which is heartening both for your company, for the the companies in this space, as well as for the economy on the whole. We got that point out of the way. Let's focus on Russian crude.
Of course, because
I want to ask you about the sourcing of Russian crude.
No, of course.
Could you help us out? How much are you getting from Russia as of now? And that advantage that we had with regard to imports coming in from Russia, that there has been a bit of a decline. So could you tell us what was the difference earlier and what is it currently? I believe it's come down by a couple of dollars. Go ahead, sir.
Yeah, Russian crude is not a game changer. Neither it was earlier nor it is today. Because as you see, it is the game, it is a total sum game of what is my crude buying price or crude procurement price versus what are my cracks. And that gives me the GRM. And GRM is one part of the story that is giving me the refinery margins. Plus, I have a second basket which gives me the marketing margins. So, refinery margins plus marketing margins give me the combined profitability of any OMC that we are working in India. So, that Russian crude coming or not coming or coming at a lesser level is not going to affect my profitability to a very large extent, and I am talking about myself and for other OMCs also. That they are, because availability is not an issue today. Availability of energy, availability of crude is more than what is required by the world today. So that supply demand is driving the total cost of procurement of crude for me and for other OMCs also. And wherein we are pretty comfortable sitting today.
Yes. As a percentage of a mix, how much is it?
Like we have to go back into the history. Before Ukraine, it was less than 2%. After Ukraine, last year, it was 30%, 34% odd. Today, it must have come down a certain notches, but still it is forming a good portion because we are taking all the clean Russian barrels. Clean Russian barrels, I define wherein the entity which is supplying to us, the insurer of the vessels and the vessels themselves, they all have to be non-sanctioned, and if they are non-sanctioned and they are below $60 or below that cap, whatever has been applied by the sanctions, if they are there, we are honoring them and we are taking them. Other than that, any shady deal, we are not there.
Okay, good to know, sir. Absolutely. You have to abide by international rules, right? Speaking of international rules, let me ask you this. We were asking exactly this to Mahanagar Gas also yesterday. Given the geopolitical dynamics, it's very clear that India is going to be sourcing more US crude. The minister has already said that, right? Now, I want to understand what that is going to mean for a refining giant like IOC when you have more US crude in the mix and then, Russian crude will be what it is, like you're saying. What will it mean for your profitability? And give us an outlook on GRMs as well. GRMs were a disappointment in the third quarter. Do you see them recovering in Q4, Q1? By how much? And what does it mean to have more, to have to ship more US crude to put through your refineries?
First of all, any crude coming to India will come on economic considerations only. That is one. We will have intent. The intent has been given by government. We will follow that intent. But any decision of crude procurement is taken based on economics only. That is the only driving force for me. And I have an advantageous position because I have 9 different refineries with 9 different configurations wherein we can very well take almost any kind of crude that comes to Indian shores, including the American crudes or Canadian crudes or Mexican crudes or today's Guyanas or Argentina crudes, which are the new entrants to the crude market. Including everything, we can produce or we can consume and we can process almost every kinds of crude because we have a very wide variety of processing schemes available in our refineries.
No, sir,
so we are
absolutely.
very comfortable.
Absolutely, sir. Your refineries are state of the line, top of the line. We were trying to understand in terms of costing, when there is more US crude in the mix, what does that mean for margins and profitability?
They have to be competitive. That is what I am saying. For each refinery, for each processing, for each tanker that is coming to my shores, it has to qualify on the margins. if it is qualifying on the margin, it's the best deal for me, then only we are going to take it. And that we are sure that the logistics will have to be worked out in a better way. The pricing has to be done in a much better way so that it becomes palatable for the Indian market. And anybody in India will buy any crude only based on economics, nothing else. It is we are not just because it has to be taken from a particular geography, we will take it from there. We can take it. We are free to take crude from any geography or any country based on the economics only.
And so the GRM levels, just very quickly, 10 seconds, where are GRMs now, Q4?
GRMs are improving. Last quarter was bad because we are getting the cracks which had gone very low. Last year they were around $18, $19 for diesel. They had gone down up to $7, $8. Now they have improved to, today it is $11 or so, $11.5. So the cracks are improving. The crude is coming down. Crude earlier it was when we were talking last time, it was around $80 or plus. Now it has come to $72, $73 Brent. So now the crude has come down. The cracks are improving. So I see a better Q4 and a much better Q1 going forward.
All right, Mr. Sani, it's a pleasure. Thank you very much for addressing all those issues. And it's great to see you on the program and on the channel. And I hope we're able to do this occasionally and frequently. Really good to see you. Thank you very much for joining us here. Well, we'll take a break. We are back with the management of Chalet Hotels and we touch upon the latest acquisition and growth plans. Stay tuned.
For me is probably my time because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
Now right, leg.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jeet Sanat.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it.
Welcome back. Well, let's focus on the hotel space. It's been buzzing all week, and Chalet Hotels, that's the next stock on our radar. They've done a new acquisition where they have bought Mahananda Spa and Resorts for an enterprise value of 530 crores. Mr. Sanjay Sethi, the Managing Director and CEO of the company, joins us on the show. Hi, Mr. Sethi. Good morning and congratulations on this win. You've paid around, I think the total enterprise value is 530 crores. Break it up for us. How much of cash are you paying? How much of debt are you taking on board? Basically, break up this 530 crores for us.
Good morning and a pleasure being back. This is an all-cash deal.
There's no debt on the books of that company, so we've actually paid out 530 crores to acquire this lovely asset, which is the Westin Spa and Resort Himalayas, which is roughly around 45 minutes from the Dehradun airport at a wonderful height of 2,500 feet above the Rishikesh base. So therefore, the temperatures and the weather conditions are stunning. The resort's stunning, and we are really happy to add that into our portfolio.
All right, difficult to sit in studio when you describe a resort like that, Mr. Sethi, but good on you. Give us a couple of more details. This 530 crores, as you mentioned, it's all cash.
This is
how is your balance sheet looking right now? If you could tell us how much of cash you had and how much goes out post this. So the balance sheet pre and post this particular deal. And also, if you could help us out with scaling up of the revenues of this, what kind of profitability does this particular resort enjoy?
Sure. So this is a 141-room resort. Firstly, the price positioning for it is around the 25 to 30,000 rupees a night. That's the average room rate that we expect out of this hotel. It is in early stage growth, so it is ramping up. We expect the occupancies to stabilize sometime in the future, in about a year or so from now, at 60%. Currently operating at roughly around 45%. So we see a strong upside on the opportunity. We expect this hotel to sort of be within the parameters that we've done previous acquisitions at, which is basically by the stable year to hit it, and the first stable year to hit at least 10% ROCE, and then move upwards from there onwards. On the balance sheet side, we were roughly around a little under 1,600 crores prior to this acquisition. We'll hit roughly around 2,100 crores as net debt post-acquisition.
Okay, all right, got it. So, and you briefly mentioned that you're looking at increasing the occupancy. As of now, is it profitable? It's at around 45% occupancy with the ARR, I think, of around 25,000 that you mentioned. So, what are the rough margins you enjoy on this?
So at the EBITDA level, operating level, it is certainly profitable. We need to make sure that we hit the ramp up takes us to the 60% occupancy, in which case it'll start throwing up north of 10% return on capital employed. And that's what our target is.
Okay, all right. And do you need to invest more in this property? The 530 crores suffices, or do you have to incur some more capex out here?
So this is a brand new hotel. It's only just completed 2 years last month. We don't need to put in any material capex on this.
Okay, all right. So we got most of the details with regard to this asset. For the company on the whole, what's the average ARR and occupancy you're looking at for FY25, FY26? So,
consistent with what we'd sort of said earlier on, I think the industry will grow at 10% and northwards on a RevPAR basis. We've seen that panning out over the last few quarters. In fact, last quarter was significantly higher than that. We expect this quarter to perform very strongly, being the strongest quarter in the year. And then there onwards, I'm pretty sure that we'll be comfortably over the 10% RevPAR growth for the next few years.
Okay, and number of keys, I think you were gunning for around 30,080 approximately by the end of this fiscal. What's the new targets now? If I look at the number of keys, new hotel launches as well, and the rough capex you've outlaid, how do you see this number ramp up in the next few years?
So, our number of keys prior to this acquisition was 3,052. With this addition of 141 rooms, we've hit about close to 3,200. And we've got another 1,100 rooms under development. A few of them will hit us in the next couple of quarters. In fact, as we speak, we're adding 130 rooms to our Bangalore asset, and they'll get operationalized in the next couple of weeks or so. Look, most of our growth is actually going to come in the year FY27, when we open the Delhi hotel with 390 rooms and a couple of other assets that are under development. We also have a strong pipeline of office assets in our portfolio. We currently have 2.4 million square foot, which is ready and very quickly getting leased out. We've got another little short of 1 million square foot, which is in the making right now. And we expect that to hit the leasing stage in FY27 again.
Just very quickly, what is your borrowing cost, current cost of debt, and this additional 500 crores that you're taking, what is it at?
So the blended cost of debt for us is around 8.5%. And this is pre the recent cuts that the government has, the RBI has announced.
Okay, all right. Thanks a lot, Mr. Sethi, for joining in. Congratulations. Looks like an enticing one. Wishing you all the best, and we'll hold you to some of these numbers.
And he's left us with an enticing image in our heads, right? I mean,
but
difficult to get that out on a Friday.
Need to pull through the day, Prashant. Sanjay is lucky he's heading one of these hotels, but we need to keep it as cozy as possible in the studio. Yeah. Pleasure talking to you as always.
Thank you very much for joining us. A good conversation. Well, we have the next one ready with us. We have, and we're talking about this sort of, it's been all about China plus one, and in a way, over the last couple of years, especially under the Biden administration in the US, it's all been about sort of containing China. Businesses have moved away. Investors have kind of stomped out of China in a big way, but all of that is changing at the margin. You got mainstream brokerages. I mean, I saw a Morgan Stanley note a couple of days back. I mean, actually 2 days back, they've sort of lifted their bearish call on China. And they're saying, well, there are signs of a big structural, durable turn as far as the Chinese market is concerned. So let's talk about this in some detail with somebody who spent time in China on the ground. Andy Rothman is founder at Sinology. Andy, great to have you with us here. Thank you very much for your time. Appreciate it. So is this for real, Andy? This turn that we're seeing, because we've had many false starts over the last few years. And each of these false starts, while you're in the midst of it, seems like this is the real one. In index terms, these starts have been to the tune of 30 to 50%, but then it fades. What's your sense, Andy?
Thanks for having me on. We're going to have to wait a little bit longer to see if this is the real deal, but I think odds are that it is. And I say that because things have been getting worse in the Chinese economy, and Xi Jinping is acknowledging that. And what we're seeing now is yet another step in a process of course correction towards pragmatism that's really been underway since September of last year. So it's not just a one-off thing if we talk about the February 17th meeting between Xi Jinping and the tech entrepreneurs. It's part of a process. And for investors, you can make a couple of choices. One is you can say, I'm convinced enough and I want to increase my exposure to China now. Or you can say, I want to wait maybe until March, just next month, when during the time of the annual legislative session, we'll have a lot clearer understanding of whether this is the real deal this time.
Andy, the big rally we've seen so far in China has been in tech names. And I think DeepSeek really shined the spotlight on some of the big innovations which are happening and, the capability in tech. And of course, also sharpened that point that China has not been for some years now just a low-cost producer at scale of things. But it's all been largely tech. Do you think that's the area to focus on for investors?
Well, obviously, right now, that's a good place for investors to be focusing. And it's interesting. If you look at the MSCI China Index, for example, it over the last 12 months has significantly outperformed the S&P 500, whereas the Shanghai Composite Index, which is almost exclusively for domestic investors inside China, hasn't done nearly as well. So right now you've got a combination of tech and, surprisingly, foreign investors getting more confident than Chinese domestic investors. So the real opportunity is going to be for the whole rest of the listed universe outside of the tech names. And I think that there's a very good possibility that we're going to see a rebound there. When Xi Jinping, assuming he does, do enough and say enough to make entrepreneurs believe that the regulatory environment is going to be far less chaotic, much more transparent than it's been over the last few years. When they believe that, they'll start investing and hiring in their own businesses. And since they account for 90% of urban employment, that means almost all consumers in China are either entrepreneurs or work for an entrepreneurial firm. And when confidence comes back that the regulatory environment is improving, remember that there's a tremendous amount of liquidity sitting in the Chinese banking system right now. Family bank deposits, and this includes a lot of very small businesses, those bank deposits have grown by almost 90% since the beginning of COVID. That's a net expansion in savings of almost 10 trillion US dollars. So to put that in context, that's more than double the size of Japan's GDP. So when people start to get their confidence back, they'll start drawing down on that savings. And we could really see spending take off, hiring take off, and possibly the domestic market take off as well.
Andy, from what you're saying, it seems that the sleeping dragon could be in the process of waking up and maybe a couple of quarters away from really breathing fire. But really, that's my next question. Given everything that you're saying and the very, very smart optics around that meeting that Xi Jinping had with Chinese industry earlier this month, when does this start translating into numbers, GDP growth, better industrial output numbers? What are you factoring in right now?
Well, I think if investors wait for the macro data to illustrate that people have really gotten their confidence back, they're likely to lose out on a big part of the rally because that macro data is going to take a while. It's going to take a while for this to be seen in everything from retail sales growth to GDP growth and household income growth. So I think the most important thing for foreign investors right now is to pay attention to what Chinese entrepreneurs are doing and saying and what Chinese consumers are doing and saying. And we'll start to see that relatively quickly if the Shanghai Composite Index starts going up, if Chinese investors have enough confidence to get back into their own market. If you want to look at data, don't wait for the GDP growth, which comes with quite a lag, but instead look at data for hiring, look at data for retail sales, look at data for wage growth in China, which all of those numbers come out on a monthly basis. The other thing that I would focus on are two data points. One I already mentioned, which is the household savings numbers. Those have been increasing at a steady rate for several years now. Even in December, the last month we have data for, those household bank deposits, which again include a lot of very small businesses, we're still growing at 10% year over year. When that starts slowing down, that will be a good sign. And the other thing to look for is the Chinese government's own survey every month of consumer confidence. That collapsed in 2020 during the Shanghai lockdown and has remained at all-time lows. When you start to see that tick up again, that's a good sign.
Andy, just 2 or 3 points. $10 trillion is household savings in China now, right? You're saying?
No, that's the net increase in household savings since the beginning of 2020.
Okay, we'll make
just
that,
the net increase.
Okay. Net increase in household savings is 10 trillion. Just two things for viewers who can do it or investors who can do it and who can maybe access the US market. Anything? Do you have a top idea out of the China listed stocks there?
Well, I'm the macro guy, so my focus is on what's happening in the Chinese economy and US-China relations rather than the individual stock names.
Okay, all right. Well, we'll leave it there. Short on time, but not out of questions. So maybe next time. Thank you very much, Andy, for joining us here on CNBC-TV18. But that's an interesting conversation with somebody who's actually spent a lot of time in China, knows the inside outs there. Well, let's just focus on a couple of more stocks. L&T Tech Services stock's been doing well. Rima is here to focus in on that. Rima, morning.
Thanks so much for that. So L&T Tech Services is higher because Macquarie today has upgraded it to an outperform from an underperform and raised the target price to 6,530. They acknowledge that growth for the company will be below peers, but valuations are now attractive. It's trading at a steep discount to peers, at an 11% discount to Coforge and a 30% discount to Persistent. And even if you look at the one-year stock price returns, Persistent has raced away with a 38% up move. Coforge is up nearly 17-18%. In that comparison, LTTS has lagged because its growth rate has been underwhelming and therefore valuations are now at a discount. Macquarie believes that there is a possibility that growth could pick up for LTTS going forward given the acquisition. And the two catalysts they will watch, one is on margins getting back to 16-17% and a pickup in growth. Back to you.
All right, Rima, thank you very much for that. Let's look at the other stock that's been reacting to brokerage notes as well. This one is Bandhan Bank reacting to a CLSA note. Abhishek, what is CLSA saying?
Well, CLS has upgraded the stock to high conviction outperform from outperform rating that they had earlier. Now, target price is the same at about rupees 220 per share. Now, they say that the play on MFI recovery cycle with gradual migration to secured loan is happening in Bandhan Bank. So, the new management intends to increase the share of secured loans over the next 2 years to 55% to 60% from the 50% that it is right now. So, the early signs of improvement improvement in collection efficiency is seen, and Bandhan Bank is well placed with respect to benefiting from this recovery. So the asset quality cycle has been better than peers for Bandhan Bank. The entire management team is new, so they don't see a risk of kitchen sinking in the coming quarters as well. So they upgrade following a 20% correction over the past 3 months. They expect Bandhan Bank to deliver an ROA of about 1.5 to 1.6% in the medium term, which they believe is similar to Axis Bank. However, the net interest margin profile of these two lenders are different. Bandhan Bank has a net interest margin of close to 7% and Axis Bank about 4% in Q3 FY25. Back to you.
Okay, all right, Abhishek, thanks for that. But L&T Tech and Bandhan Bank are outliers and otherwise what is turning out to be a weak market and a weak morning. As we take the break very quickly, the Nifty is down 0.4%. The mid-cap index has lost its mojo. It's also negative now. And the Bank Nifty is actually sliding a little more, down about 0.75%. So weak morning. Let's see if the bulls manage to come back in. Take a break. On the other side, we will put the spotlight on commodities.
He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a
Welcome back. Mid-cap index sliding more than the Nifty now, so need to keep an eye out on the screen. Equity is a little shaky here this morning. Let's find out what's happening in commodities. Manisha is here, as always, with the latest. Manisha, so what's captivating your imagination this Friday morning?
Well, sugar, let's get some sweet in on this Friday morning. And if you look at the prices itself, they have been gaining. I'm talking about sugar right now because in this week itself, we've seen prices gain up by nearly 3.5%. For the Indian markets, the prices have gained up by 6.5%. So when you look at Maharashtra S30 grade, that is what we consume, by the way, the prices really have gained up in the last couple of months from 3,360 to 3,800. The cost of production still is around 3,950 to 4,000. And if you are exporting sugar, the pricing that the markets are getting is at 4,300. So that really is the maths coming in out from there. When you look at the global sugar prices, well, they are trading above 21 cents a pound, which also is a 2-month highs. So whether it is about Indian markets, Brazil, Thailand, the major producers, and US, we have seen the prices continue to gain up. The reason that you are looking at prices gaining, one, the reason comes in from India itself, because we've seen output decline by 12% on a season-on-season, year-on-year so far. So that clearly has been supportive. Apart from that, while India has reopened sugar exports, in the international markets, that 10 lakh tons doesn't really mean too much. For the Indian markets, though, when we are looking at a lower crop as compared to previous year, the 10 lakh tons going out of the country has taken the prices on the higher side. Out of this 10 lakh tons of export, which has been allowed by Indian government, 2 lakh tons, the industry tells us, is already exported and 3 lakh tons has been contracted. This, remember, is open until September 2025, so there is still a lot of time for them to export this. Apart from that, apart from India, for the markets, it also is about the sugar mills in India closing early due to cane shortages. So within India itself, there are various reasons that you have seen leading to increase in prices. For the global markets, it has to do with Brazil, where we're looking at average rainfall declining, and that's weighed on the crop. Unica says that 5% of a lower side on crop is what they're estimating for this year coming in from Brazil as well. Interestingly, when it comes to India, while we are looking at a lower crop this time around, last time was 32 million tons. This time, if you look at various Indian associations and companies, they are putting the crop estimates on the lower side. 272 is what ISMA said. 270 lakh tons is what National Federation of Sugar talks about. 265 is what ISTA is also saying. So we are looking at a major gap when it comes to sugar output expectations itself. When you look at some other agencies and companies as well, they're talking about output at around 268 lakh tons. 280 lakh tons is what Mere Commodities seems to be talking about. So the lowest is 264 and the highest 280. And within this, you will see a sugar output coming in for this year. Last year was 332. So we are looking at much lower sugar production this time around, and that clearly has been supportive for prices.
Right, Manisha, thank you very much for that. That's Commodities in Focus. We're going to take a quick commercial break here. It's our special segment. It's the economy. Lata discusses, global macros. Andrew Chilton of Goldman Sachs is her guest, and they talk about how tariff threat impacts Asian economies and their currency. Stay tuned. Coming up.
How will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on the ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things, I think, about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India. And it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think the trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. You know, it's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching
Welcome to It's the Economy. Tariff threats from President Trump are hitting the market with unfailing regularity. In practically every speech, the president makes it a point to threaten India with reciprocal tariffs. Now, how much higher will tariffs go? Which sectors are vulnerable from a stock market point of view? And what's the impact on India and Asia as a whole? Impact on currencies? I have with me someone who's an expert on all these issues and has written an excellent report, Andrew Tilton, the Chief Asia Pacific Economist at Goldman Sachs. Andrew Tilton is with us in the studio, and thank you very much for that, Andrew.
Thank you for having me.
Okay, well, let me start with the serious stuff. The impact of reciprocal tariffs. It's very confusing. Will it be product by product? Will it be, one for the whole, world? That everyone gets a steel tariff, everyone gets. How do we think about this tariff?
Well, we expect to see reciprocal tariffs imposed probably in April. President Trump has asked for a number of reports and analysis and expects to make a decision in April. As you noted, it could be making the overall level of tariffs equivalent or product by product. Now, we've calculated that in the case of India, the former would add 6-7% to tariffs, U.S. tariffs on India, whereas the latter, that is product by product tariffs, could ultimately mean an increase of a little over 10%.
Okay. So in that case, what should India be worried about in terms of a GDP impact in either case?
We expect an impact of between 10 and 30 basis points, so not a huge impact. India's exports directly to the U.S. are about 2% of Indian GDP, so it's a manageable hit. India is a large, relatively closed economy, so we think this will not knock India off a reasonably strong growth trajectory.
Okay. No, that is a consolation. But, let's look at it practically. Is it, after all, we have an Elon Musk and a Doggy, which wants US to reduce the size of government. Will it be practically possible for a customs department to look at product by product, country by country, and even administer this level of tariffs? So practically, what should we expect?
On the analytical side, it's pretty complicated if we're going to match product by product tariffs. And it's not just India, of course. We're talking about doing this for the whole world. That could delay the implementation, perhaps to mid-year or even later in 2025. In terms of actually administering the tariffs, I mean, we do have, as you noted, a customs service, so the machinery is there, but the implementation of all the various tariff codes is going to, and figuring that out for each country is going to take some time. I just add, this is, I think, not likely to be an issue for India, but the so-called de minimis tariff, where you can send in packages under $800 directly to U.S. households without any tariff. That's going to take some new machinery because our postal service doesn't normally charge tariffs, but that's likely only to affect China.
Oh, okay. That's a separate problem we didn't think about. But even coming to the tariff, assuming it's product by product, or even if it's assuming it's on a country, but it is a little punishingly high, won't people dodge it pretty easily? I mean, having a trading company in Dubai or some other country which is not similarly punished and routing it, these things will... I'm just wondering if the tariff threat is as big. The market is really scared.
Well, we've seen already from the first trade war in 2018 to 19 that there was a meaningful trade rerouted from China to third countries, Vietnam being an obvious example where we see an increase in Chinese exports to Vietnam, increase in Vietnamese exports to the U.S., and of course, potentially saving tariffs. Now, I think the impact of that, first of all, is that there's a risk Vietnam faces tariffs down the road from the U.S. But as you noted, it is possible we could see some rerouting as part of this global trade shift and these tariffs imposed by President Trump. That will likely mean there are potentially future actions or efforts to trace back products to their origin. So that's going to increase the complexity of this over time.
Okay, now some more micro questions. Which sectors in India would you worry about?
Well, in terms of sectors that might see lower tariffs in order to stave off the increases on the U.S. side, I believe we've already seen some cuts in motorcycles, electronics.
Cuts in motorcycles.
So those would be a couple of areas that would be affected relatively sooner. I know there's been some discussion of autos potentially. So those would be a few that I think are in focus, not just for India, but more generally from the U.S. perspective.
These are industries or companies which will face foreign competition, right?
Yes.
And therefore, makers of electric cars or makers of bikes better watch. There could be competition, though, of course, their products are pretty expensive even without tariffs. What about Indian exporters getting hampered because they have been priced out? Or do you think they're priced at last?
Well, I think that it really depends on the sector. I mean, we're seeing, in some places, President Trump, for example, talking about tariffs on semiconductors. I mean, less of an issue for India, but I think not likely to have a big impact on U.S. demand. Whereas goods that, as you said, are more elastic, if we're talking about apparel, something like that, differential tariffs on one country could cause a shift in demand to another. So I think some of the Indian exports to U.S. would be in those categories, and we could see a modest shift. But of course, we're seeing U.S. tariffs potentially on the whole world as a result of this reciprocal tariff initiative.
So if it impacts us, it impacts Bangladesh as well. Probably it will impact other apparel competitors. Would you therefore say that, when you look at India and look at our GDP, and recently you'll have upped the forecast, you worry more about domestic India, right? The consumption story in India or the capex story in India is more important for us to track than tariffs, would you say, when you are arriving at the GDP?
Yes, the external environment has been better. This is obviously a difficult time, both from the standpoint of competition from China as well as the potential tariffs from the U.S. But we really focus more on the domestic economy when it comes to our India growth forecasts. We have a reasonably optimistic view looking out a few years. We think the economy can grow 6.5% or better. But recently, the combination of fiscal tightness and so far only one rate cut from the RBI means that the domestic economy has been under modestly tighter policy in the past year.
Yeah, but you just released a report upping the forecast for, I think, the last quarter that went by and the current quarter.
We made a slight tweak based on the fact that it looked like government spending had accelerated in the late 2024. And that it should boost Q4 growth. We took a tiny bit out of Q1 as a result. So I wouldn't call this a major shift. It's more a timing question.
Every little bit helps. That 5.4% GDP growth number for July, August, September has rattled us. So even if you're going to, up it to 6.3 or 6.4, that your number is, it's welcome. Let me look at the currency aspect, which has rattled foreign investors a lot. Do you think we are done with it? We had the Reserve Bank bulletin indicate that the overvaluation is substantially lower. In November, it was 108, indicating 8% overvaluation. The last bulletin said it's only a 4% overvaluation, 104. So you think the rupee is done with its serious depreciation?
Yes, largely. We have a forecast that's essentially flat over the next 6 months. We did see clearly, as you noted, a correction. And in light of efforts to boost manufacturing in India, the Make in India initiative, it's probably better to be more aligned with those currency valuation metrics rather than being overvalued. I mean, again, according to that metric, the challenge of exporting in the current environment with both, again, China competition and potential tariffs means that overvaluation would be a third challenge India doesn't need.
No, oh, absolutely. I mean, I don't think the Reserve Bank would normally want it. It was perhaps just a brief period when, for whatever reason, the rupee got overvalued. And maybe perhaps Trump's election and his subsequent announcements were unexpected. But what's the range? Is it like 87.5 or 88? There are people even talking 90. So what's your expected range?
Out 6 months, we have 87, and then slightly higher, 87.5 in a year. So it's really quite a small shift from where we are currently.
87.5, we have been there, done that. And now strengthened to, I think, 86.8 levels. What's your sense about Reserve Bank rate cuts? And now, do you think it's tough, or because the currency challenge is over, they now have more space for rate cuts?
Well, we think they were prudent to wait in light of uncertainties around both the trade environment as well as domestic inflation. But we do expect at least one more cut in light of the recent inflation performance and the fact that growth is slightly below, I think, policymakers' aspirations as well as our estimates of trend growth.
Oh, yes, aspirations are to touch 7. But, that happened only for 3 years after COVID. What's your sense about the U.S. Rate cuts? Do you think we are done with it? Or can we expect the FOMC minutes did sound hawkish? So do we have a cut down?
We have 2 cuts in our forecast this year, one at mid-year, one in December. That said, I would say our conviction on this is not especially high. It's clear that the Fed is going to be on hold, at least for the next couple of months. They don't know, neither do we, what President Trump exactly is going to implement over the next few months, and that will clearly matter for the U.S. outlook and the Fed. We've also had, I'd say, some mixed data recently, a softer retail sales report, which probably was due to weather issues in January, but nonetheless has raised a few questions. So the Fed will likely want a little bit clearer read on both the domestic economy and on the new administration's policy before making any further moves.
What's your sense? I mean, this is more a market man's question, but then you advise your markets team. This U.S. exceptionalism, money being pulled out of every emerging market and rushing to the U.S., does it taper off? I mean, we did see a fall yesterday, but does U.S. Continue to be a magnet?
I think there are a couple underlying drivers of this U.S. exceptionalism. One is clearly tech, AI, the excitement about the Mag 7, as it were, the inflows of equity investment from the rest of the world to be a part of that. That will eventually fade. I'm not going to tell you exactly when it happens. I wish I knew, but we think the investment boom in chips, in AI investment continues into 2026, so we don't see any immediate end for that inflow. And then there's the dollar, which is benefiting both from that trend, but also from tariffs. We would typically expect a country that imposes tariffs on others to have its currency appreciate. And we've seen that when markets have gotten more worried about U.S. tariffs, the dollar has tended to appreciate. Right now, I think there's been a little bit of relief that we haven't actually had more tariffs imposed.
Yes.
But, as we've been discussing earlier, I think it's likely we see tariffs imposed sometime in Q2, and so we would expect another leg higher in the dollar. So to answer your question, we think we probably still have a little bit more U.S. exceptionalism, at least when it comes to the dollar, over the next few months.
For a better part of 2025, we have to tackle U.S. exceptionalism. Any range for the dollar index?
Well, the amazing thing is we're at a 40-year high, or very close to it. We recently hit a 40-year high in the dollar on a broad trade-weighted basis. So looking out a few years, we would expect the dollar to depreciate, but we think we have to get over the hump of tariffs first. The last round of, if you want to call it global tariffs, probably need to be clearer in the mind of the market before we can be comfortable that we've peaked in the dollar.
Okay, so it's possible that smart money comes back to emerging markets like India before 25 runs out.
We could see that, yes. I think we could see a better environment for EM. Typically, that's been the case, when the dollar has peaked and when we've been in the Fed easing cycle. Tariffs are probably the most important factor impeding that right now.
Okay, well, let's hope so. On that optimistic note, Andrew Tilton, thank you very much for joining us in our studio.
Thank you.
So there you are. There is the immediate tariff hump, but hopefully by the end of the year at least, US exceptionalism would have peaked off. That's it on this edition of It's the Economy. Thanks for watching. After a break, Chartbusters.
Under 25,000 US dollars in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Macquarie upgrades L&T Tech Services to an outperformed rating and raises its target on the stock to rupees 63.50, citing a steep discount in valuation to peers. The stock higher by nearly 4%.
CLSA upgrades Bandhan Bank to a high conviction outperform rating with the target price of 220 rupees a share as the management eyes higher share of secured loans. The stock is higher by nearly around 2% coming off the day's top.
JSW Energy, another stock buzzing on a brokerage upgrade. This stock is up nearly 6.5% as Morgan Stanley issues overweight rating with a target of 545 rupees a share, expecting a compounded annual EBITDA growth of 24% till FY28.
Morgan Stanley is bullish on KEI Industries. The stock also rallies close to around 4.5% or thereabouts. It's now 3.5% higher after the brokerage initiates coverage with an overweight rating and a target price of 4,391 rupees a share, expecting compounded annual growth of around 23% till FY28.
Yet another brokerage move today. We have UBS issuing a buy call on APL Apollo Tubes with a target of 2,000 rupees, citing positive surprises coming in from channel checks with regards to price hikes. The stock up around 1.5%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see at the top of the screen, we'll be having the rates that come up. The markets went down to around 22,730, and from there we did see a bit of a bounce. The line in the sand is 22,700. That needs to hold out. If that holds out, the bulls will still feel that they have some fight in the game. And the broader markets that actually week to date was doing an outperformance that's relatively underperforming. But the bright spot I would look at is at least you still have 1,000 stocks that are advancing and around 1,400 stocks that are declining. So though the index is down, there are a fair bit of winners even out there. The problem pocket, I think, is the Nifty Bank yet again. That's down close to 500 points. You wanted to defend the 48,800 mark, which is the mark from where it has bounced numerous times in the last 5 sessions.
Back in the zone of uncertainty for the market, Nigel. We are seeing the support zone, but the mid-cap index typically is a foreteller of what happens going forward. This morning, it was an outperformer, even as the indices were lower by about 1/3% or so. The mid-cap index was up by about 0.5%, and from there on, it's now at the low point of today's trading session. So we'll keep an eye out on the mid-cap index in particular, with the story of the day being told by the crisscross lines itself. Perfect time to get in Manas Jaiswal for a quick technical check on the market. Manas, over the last 6 or 7 occasions, we've bounced back from this zone of 22,700 to 22,800. Today as well, the low was made around that 22,730 mark. We're slightly above that, but still below 22,800, down almost 125 points on the Nifty. Where do we go from here?
Good morning, Mangalam. So I think it is a better idea to avoid indices, both the indices, Nifty and Bank Nifty, because Nifty has a lot of support in the range of 22,800 to 22,700. So if you want to create short position, then I think you should wait for a fresh breakdown below 22,700. And if you want to create long position, then I think you should wait for 23,050, where that 10-day moving average plays. So I think right now, I think it is better idea to just avoid Nifty and Bank Nifty both. Even in Bank Nifty, if you see the chart, Bank Nifty has a lot of support near 48,500. So if you want to create short, then I think you should wait for fresh breakdown below 48,500. And for taking long position, you should wait for a breakout above 49,500.
49,500 on Nifty, 23,050, correct?
Yeah.
For the time being, but you're saying better not to play the indices. You want to rather go with stocks. So let's get straight to that. Which ones?
So stock specific, I would create 2 long positions right now because mid-cap stocks are doing well. So first one is a buy call on JSW Energy, where stock has been making higher tops and higher bottoms from the level of around 424 on the intraday chart. Today, stock has broken its 20-day moving average. So take a long position in JSW Energy, keep your stop loss below 484, target would be 525. And second is a buy call on Bata, where just few minutes back, stock has regained its 10-day moving average. So I think you can play for a bounce back in Bata also. Keep your stop loss below 1284 and target would be around 1345.
All right, interesting long ideas in an otherwise, wobbly market. Manas, just a word on M&M, because it's been all over the place. On Monday, despite the numbers that came in for its eSUV, the stock fell about 4.5%. The fears of competition, fundamentally, the next day as well, there was a follow-on decline. Then there was recovery in the stock for the next couple of days, but now it's down about 5% as well. All in all, this week, the stock is down 8% after a stellar run that we've seen earlier. What do you do with M&M?
See, I think one should just avoid M&M, or if you are a trader, then you can create short position in M&M now, because stock has broken its 200-day moving average again. Because yesterday it surprised, because I think in the morning it broke its 200-day moving average, then we saw a recovery, but it could not sustain on higher levels. So if you're a trader, then you can keep the stop loss above 27.75. Take a short call here. Its target would be around 25.25.
All right, 25.25 on M&M. Speaking about the auto space itself, thank you, Manas, for joining in. Wish you a good weekend. On the other side, we'll get you some ideas for profit coming in from our colleagues at Money Control Pro. And it's an auto stock that she's been talking about. It's Kanchi Shah who joins in today.
So the company that I've chosen for today is TVS Motor Company Limited, which is a prominent manufacturer of two-wheelers and three-wheelers, which has shown very strong performance in its Q3 results. The revenue grew by 10% YOY, which was supported by robust sales in both domestic and international market. Efficient cost management, lower raw material prices, and rich product mix contributed the EBITDA margin to expand by 67 basis points. With rural demand surpassing the urban demand, the two-wheeler industry, which is the backbone for TVS, is poised for a substantial growth. The export market, having gained momentum over the past few quarters, is showing promising signs of continued expansion. Geographies such as Sri Lanka, Nepal, Latin America, and Middle East provide ample growth opportunities. In order to increase its export horizon, TVS has entered the Moroccan market in collaboration with its distribution partner Hindi Motors. TVS is working to increase its penetration in the EV sector by introducing new products and refining existing ones. It is also expanding its three-wheeler portfolios and it has launched passenger electric three-wheelers, which is TVS King EV Max. However, the company's valuation appeared to be elevated at 41.1 times projected earnings of FY26. Thus, we advise the investors to invest in the stock at the stock price correction.
Right, with that, what we'll do is take a short break. On the other side, we'll get chatting with the management of Dodla Dairy to discuss prospects for the business, the dairy industry, procurement prices, the environment. On the whole, we have Dodla Sunil Reddy joining in.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए। फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं उसमें संगम नोच पर फीकल कोलिफॉर्म
As you can see at the top of my head, the mid-cap index has actually deepened its cut from the time we started the show right now. A couple of stocks which are coming in for selling. We have Biocon, which is at the low point of trade. Cyient continues to sell off. It's down 6% right now as we speak. And we're also seeing some sell-off in Zomato after a couple of days of purchase that we saw on that counter. But Bata, on the other hand, has moved to the high point of trade. It was one of Manas's picks where he wanted to go long on Bata. That stock actually surged to the high point with a gain of 4%. Speaking about 4% gains, the stock that has gained 4% this week is Dodla Dairy. And it's important largely because the dairy stocks have been in focus all of this week. And Dodla Dairy has actually outperformed. If you look at the week-to-date performance of all the dairy stocks, Dodla is up 4% as against the others, which are actually either up 2% or lower by about 1.5%. But that's about this week. How have things changed from the third quarter end to now? To get an update on demand and pricing for dairy products, we are joined by Dodla Sunil Reddy, who's the Executive Director and Managing Director of the company itself. Thanks a lot, sir, for joining in. Always a pleasure speaking with you. And that's really the first question, from the end of the third quarter, which had the festive season, etc., to now, how have the dynamics of the industry changed? Have you seen any change in, consumer sentiment, any increase in milk procurement prices, any change in prices itself?
First of all, good morning and thank you for having me on your show. Yes, we have seen a bit of price increases in procurement, and it's normal because now I think almost for 18 months milk prices have been static. We have seen a little bit of offtake in consumption also increasing, and due to that we are also seeing a little bit of price increase happening on the procurement end. And I think the corrections have already taken place also on the selling end. Although not a significant movement, a minor movement which has happened, and it has been there. What we are happy about is we are seeing an offtake of consumption again coming back, and improvement in consumption overall, which I think will be good for us in the coming quarter and the next, because summer now is also good for our seasonal products like curd, ice creams, and we're hoping that they'll do well for us.
If you could quantify the increase in procurement prices, how much has that been? And if you could also tell us how much has consumer offtake been increased? How much have you been able to pass on the price increase?
Price increase would have been around 2 rupees per litre of milk, which has approximately been the same kind that we have passed on to the consumers based on the whole mix of products that we have.
Okay, all right. Hi, Mr. Reddy. Good morning. Nigel on this side. Good to have you on the show. What about demand? How has demand been in Q4 so far, and what kind of volume growth are you working with? FY25, FY26?
Morning, Nigel. It's, I think, good. We are hoping that we will maintain as the normal things that we will keep concentrating on trying to build a volume growth of around 10%. And in terms of other product mix that we have, because of higher value products selling, revenue growth of 15%. That is normally what we keep tracking for, and we keep looking forward for it. And for us, I guess, with the addition of our Africa operation doing well and our milk cattle feed plant doing well, we are confident of achieving this 10% growth and 15% volume growth.
All right, 10% revenue growth and 15% volume growth in FY25. I presume that would sustain. Sorry, go ahead.
It's 10% volume, 15% revenue.
Okay, 10% volume and 15% revenue growth is what we're seeing. You spoke about value-added products itself, curd sales increasing in the summer months, etc. Typically, value-added has been between the 30-35% band for you in terms of contribution. Now that grows at 15%. In the first 9 months, it's been around 30.5%, 34.5%. Where does that number settle? Do you have an aspirational, target here?
I think we'll just be able to maintain around this 30% number that we have, because last year we had a bit of a larger quantity of ghee sale that we normally, more than normal. That's why we saw the uptake of that number growing substantially large last year. We are hoping this year to maintain a similar number with ghee and our product sale value increasing.
All right. And, you spoke about increasing your operations in Africa, etc. But what I was very, surprised by is that you've actually decided to set up a plant in Maharashtra as well. You were making inroads out there. This 280 crore capex that the board has approved for setting up a plant in Maharashtra, what does that mean for your business coming in from Maharashtra? And, how do you make your foothold out here? And what does that do to your procurement capacity as well? It was close to around 17.1 lakh litres per day. You had this aspirational target of 20 lakh.
So Maharashtra, we are already operating in procurement. We have a small plant in Shelgaon where we are procuring 2.5 lakh litres of milk on a daily basis. The Maharashtra plant that we have announced is going to be set up with a capacity of around 10 lakh litres, which means we'll have a 60 tons of powder capacity and 2.5 lakh litres per day of other liquid milk and curd selling ability. We are looking at starting this operation within, say, 18 to 24 months from March of this year. It should be coming into operation. I think the first day go, we will be looking at adding at least to 3 to 4 lakh liters of procurement there. And from there forth, we'll try to achieve full capacity. So I think in 12 years or 3 years' time, we should achieve our, the aspirational goal of 25 lakhs. It will move from 20 to 25 lakhs.
All right, in 3 to 4 years, the aspiration is to move from 20 lakh liters procurement to 25 lakh. And what does this foray in Maharashtra, a more, formidable foray in Maharashtra do to your overall sales mix? Because what we see right now, 35% Andhra, 40% Karnataka, 25% say Tamil Nadu and Telangana. Maharashtra, do you have an aspirational target, say 5, 10, 15% coming in from Maharashtra over the next 3 to 4 years?
I think as the overall base increases, we will try to look at it as even 25, 25, 25 across the 4 states. Telangana will be a much smaller procurement because Telangana milk is not there sufficiently. So it will be mostly Andhra, Karnataka, Tamil Nadu and Maharashtra, which will contribute 25% each for our overall mix. In a manner of speaking, it also de-risks our states. If some state prices are lower, some state prices are higher, we'll be able to maintain the average basket more comfortably with this equal split of 25% each.
Okay, all right. What about your market share? Could you tell us how things are shaping up with regard to that? I think briefly you had spoken about that your market share in Tamil Nadu could go up by around 100 to 200 basis points. Has that happened? And update us on your market share in the geographies that you have present.
See, basically market share in Tamil Nadu is going up because we're also spreading a lot more of the area, more than the depth. We're also going for the width of Tamil Nadu. Other markets like Andhra, Telangana, Tamil Nadu and Karnataka, as usual, Karnataka has been our largest in volume of our share, followed by Andhra, then Tamil Nadu and then Telangana. It maintains the status quo is the same. I think the overall basket of the market has improved and therefore we have also maintained our share of the markets that we're operating.
So what does the number stand at among private players and versus the overall market?
Each state it differs. I think in Karnataka among private players we would be number 1 in Karnataka. Coming to Andhra we might be between a 2 or a close 3. That would be the number that we can look at. In Tamil Nadu again we will be number 2 or 3 in private sector. In Telangana we are I think number 3 because we have between 3 and 4. We are a little lower in Telangana.
I ask you is because, Hudson Agro bought Milk Mantra in Jan 2025. There has been consolidation among private players as well. What does that do to competitive intensity?
Nothing, sir. It's more of consolidation that we are looking at. And like I've been saying earlier, I think in the days to come, you will find more and more of the dairy industry consolidating. Because I think from when milk was liberalized, we are now coming into the 30, 35 years of operation. And the changeover between managements and styles of operation, we will begin to see a lot more consolidation happening in the industry. That's my personal view. Okay,
Mr. Reddy, how adventurous are you then? Are you looking at semi-organic growth? Should we be hearing about something in the coming few quarters? You got a smoke on your face. That's telling me a story. Tell us more.
So we constantly keep looking at a mix between acquisitions and our own organic. But we look at acquisitions in terms of the value of price that we need to get and for us to get it at a right price in which we think we can operate better. So we are always constantly on the lookout. There is 1 or 2 will always be there on the anvil. But we will also keep looking at how do we expand our areas in India and in Africa. Right. We will deepen our presence.
So any North Indian player that you're looking at?
Not specific as areas, sir, but definitely there'll be a lot of inbound interest that comes in and we keep evaluating them on a regular basis.
All right, just a final question before we let you go. This Orga feed, you said that animal feed will also be, one of the growth drivers of the company. 100 to 120 crores was your revenue target in FY25, which I'm sure you will, given the first 9 months run rate, achieve in terms of revenue. What's the prognosis here? How big can it be over the next 2 to 3 years?
The present capacity that we have has the potential of reaching up to 300 crores of revenue. I think this 120 in the next year can close to 200 and then it will come to the 300 crore. And when we reach the 300 crore capacity and if our milk procurement volumes also increase, we will have to add another 1 more plant, but we will take it at the appropriate time when these capacities come to closer to fulfillment.
And we're left with your margin target. If you could give us a sense of the margins that you're looking at next year and the year after.
So basically, we are now reaching the higher either double digits or the higher single digits. We are targeting to maintain such margin profile as we go forward.
Always a pleasure speaking to you, Mr. Reddy. Thanks a lot for joining in and filling us in with how you see your business shape up. We'll keep an eye out in case of inorganic growth and with regard to market share as well. A pleasure talking to you as always.
Right. With that, what we'll do is slip into a short break. Come back on the other side, tell you more about markets. But as we go into that short break, shortly we will have the CNBC-TV18 app coming up for you on your right. Yes, the financial world updates, all of them at your fingertips. As you can see, you go ahead, download that app from either Google Play Store or the App Store. If not, then there is the QR code out there as well. So just pull out your phone, scan that QR code. You will get a link which takes you directly to download that app. And all you get is the financial world updates on your fingertips via the new CNBC TV18 app. Take a short break, come back, focus on the markets and a lot of individual stocks.
मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है जो 2500 एमपीएन प्रति 100 ml से ये कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk
Welcome back. The markets are lower, but I'll tell you what, there are a lot of stocks that are buzzing around. One such stock, I think, is Bajaj Electrical. Just pull up the intraday chart. The way that stock has surged up, big volume surge as well as what we are seeing, 12% higher in this sort of a market. The other one I'm looking at is Godrej Industries. Yeah. I think there was a large seller out there as well, which has got cleared away in yesterday and day before trading session. Volumes are large out there. Godrej Industries is now up close to around 10%. And we had a chat earlier this morning that power demand is looking good. And some of those that have a lot of merchant capacity available, they could gain. JSW Energy firing away as we speak. So quite a few winners, Manglam.
Quite a few winners. And, just as we move further, we have Century Ply, which has moved higher as well. Good volumes picking up out there too. Century Ply is up 9%. We also had the management of Chalet Hotels telling us that the hospitality industry is set for good growth, double-digit revenue per available room growth. And you look at Chalet Hotels, that has recovered from lows, but what it has done is had a big rub-off on others as well. Juniper Hotels, for instance, is up around 8%. Remember, this is one of those stocks which had halved from the highs, but now is making a bit of a comeback. That stock up around 8%. With that, we wrap up on this edition of Chartbusters. But as we do that, here's a small programming note for all you viewers. CNBC-TV18 and HSBC India, we're back at it with Season 2 of SME Champion Award. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations, they're now open. You can scan the QR code on your screen, submit your entry for SME Champion Awards Season 2.
A concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Reema. With me is Vivek, and markets under pressure. The Nifty struggling below 22,800. The start was so much better. The mid-cap index was actually up more than about 0.5%, and now it's down nearly about 400 points, 0.8% lower in the mid-cap index. There are more stocks declining compared to advancing stocks. Banks are underperforming. Autos are under severe pressure. The Nifty Auto Index is a cut of about 2.5%, with M&M struggling. M&M is the top Nifty loser, 5.5% lower on M&M, but you've got TVS TVS Motors, Tata Motors, across the board, a deep sell-off coming in many of these auto names. So that's a pocket of weakness. Banks, autos, pharma, it's just disappointing, right? Like the start looked so much more promising, thinking that we will continue with the rebound. The broader markets look stable, and all that's unwound now.
That's right. Weak global cues, but Asian cues were quite positive.
They're still positive, right?
They're still positive, exactly. But like you mentioned, Nifty is struggling to defend that crucial 22,800 level, now trading below that. What's actually done quite well in the last couple of trading sessions has actually been the utility pack, something that we've been discussing quite prominently over the last 2 sessions. So especially within that, JSW Energy today doing quite well. Initiation coverage note from Morgan Stanley, and that stock, despite the market weakness, up almost 8%, almost 7% now. And even some of the other power stocks, NSBC, Tata Power Grid, holding out steady despite the weakness in the markets. The other stock on the radar is one from the auto ancillary space, that is SAMIL or Samvardhana Motherson. Weak outlook coming from the company's largest customer, which is Mercedes-Benz, and weak outlook, weak guidance, weak EBIT guidance, and Samvardhana is seeing significant selling pressure. The stock has already corrected quite significantly.
Actually, even some of these ER&D companies with an exposure to the aerospace segment. So not a KPIT Tech, because that's pure automotive, but say something like a Cyient has. Now, I don't know, because the companies don't divulge client-specific information, but, for instance, a Cyient has. These are all companies with an aerospace exposure. So, there could be that rub-off impact, if not
aerospace, UK exposure, Europe exposure, and Tata Motors will be the other one, whether, they can continue to hold on to that strong guidance that they've given as far as FY26 is concerned. The other set of stocks today that have resumed a sell-off is actually the generic pharma pack. So names like Ipca, Biocon, Divi's, all of them are continuing to see selling pressure, and the main reason for that continues to remain the uncertainty as far as tariffs are concerned, Rima.
Okay, but let's get to individual stocks. Religare, finally, right? There's a long drawn battle which is taking place in Religare, but now the Burmans have control. They've been classified as the promoters.
Rima, just to give some context, on September 2023 was when the Burman family had actually gone ahead and announced the open offer. Open offer was at 235 rupees a share. Just a week or so ago was when the open auction actually began and concluded. So it's been a long drawn-out battle between the Burman family and the board, or the current existing board at Religare. But right now, what's actually transpired is that the Burman family, who had bought close to 21% stake from the open market, had acquired an additional around 4% stake, and then went ahead and concluded the open offer. Open offer, the company did not get enough shares, but what's actually happened is that they now have over 25% stake. So 25.16% stake is what the Burman family holds, and now they are the designated promoters as far as Religare Enterprises is concerned. Now the way forward is how do they go ahead and unlock value, and that is something that the street will look forward to.
Okay, let's talk about another mover. That's L&T Technology. So otherwise, most of the IT companies are downbeat today, but L&T Tech Services is higher in trade, and this is after Macquarie upgraded the stock to an outperform from a underperform rating, and the target price now stands at 6,530, so significant upside from current levels of 5,100 rupees. Now, the key reason is valuations. Now, L&T Tech has struggled on the growth front compared to peers. Now, for instance, even in Q3, the company said that growth this year will be at 8% versus their earlier guidance of about 8 to 10%. So there was this downbeat assessment on growth, and therefore the company struggled on growth. But Macquarie says, yes, despite the growth challenges that it's going through, valuations are now attractive. The company is trading at an 11% discount to Coforge and about close to a 30% discount to Persistent after its recent underperformance. Also going ahead, there are potential triggers for the company to pick up on the growth front. So they're saying there is a possibility of faster growth for the company with the acquisition of IntelliSwift, even the margin recovery. If the company can get back to its margin recovery guidance of 16 to 17%, that would act as a catalyst for the company. So, after the underperformance, valuations, Macquarie believes, is attractive for L&T Tech.
So double upgrade this company.
It's a double upgrade.
Stock up almost 4% today. But another stock that I'm focusing on, brokerages have been quite active, especially post the earnings season, and especially in the utility space after the very sharp correction that some of the stock prices have seen, making valuations a lot more palatable. So today, Morgan Stanley has initiated coverage on JSW Energy. They've initiated coverage with an overweight call, and they have a target price 545 rupees a share. What is the theme that they're looking at? The theme that they're looking at is the future of energy. And as per Morgan Stanley, the future of energy involves companies that are exposed both or who are participating in the energy transition as well as the energy security theme. As far as JSW Energy is concerned, they say that the company has a well-integrated business model. The company has been growing its green renewable energy business, also has been investing in storage assets and has expanded the thermal business inorganically. Remember, there have been 2 acquisitions that the company announced in just the recent past. Along with that, the company has seen significant market share gains in the recent bids at reasonable tariffs. So they anticipate an EBITDA CAGR of close to 24% over FY24 to FY28, and they're expecting the renewable side of the business to see EBITDA growth at close to 52% CAGR. So that's a significant upside that they've seen. Last couple of trading sessions, we've seen upgrades coming on NHPC, Tata Power, and now JSW Energy. So significant upside as far as utility stocks are concerned.
Okay, thank you very much for that. But the stock which pops today is actually Godrej Industries. It's up 10-11% today. It was up 20% yesterday. Since the beginning of the week, the stock has gained close to about 40-odd%. That's Godrej Industries. Pull up a one-way chart too. I'm not sure what the news is, but it's rising very, very rapidly on good volumes. Get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins in on the other side.
Award-winning news show India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube. With me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. HSBC presents CNBC-TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Center, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization, and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot.
Welcome back to Trading Hour. Well, some of the stocks that we just mentioned, Cyient, in fact, now trading near the day's lowest points. Some Tata Group companies too are seeing selling pressure emerge. Look at names like Tata Chemicals, Trent. These are some of the stocks that have moved to the lowest point of the day. And one stock that's seen significant selling pressure emerge has actually been United Spirits. United Spirits are under pressure for the past couple of trading sessions, but today down over 2.5%. And one stock from the mid-cap IT space that's seen selling pressure emerge is OFSS. That stock today is down over 4%. But let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on gold.
Well, thank you for that, Vivek. Yes, we are looking at gold prices because after hitting an all-time high and for 9th straight time in this year, we have seen some bit of a profit-taking come in for the gold prices. So 29.55 is an all-time high, and for the Indian markets, all-time high is 86,600. As you can see, nearly 1,000 rupees down in the Indian markets, and it's nearly $20 to $25 down from all-time highs in the global markets as well. Well, while the support continues in case of gold because of global trade tariff wars, we also are looking at strong global central bank buying and then the decline in US dollar as well from its highs. These are the factors that have been supportive for gold. But what also has led to this profit taking is the fact that we've seen gold prices run up too much too soon. So chartists tell us that it is slightly overbought. So some profit taking is not ruled out. And as you can see from that 2955, we're trading at around 2925 at this point in time. So nearly $30 off from those kind of highs. Markets will watch out for on what conversation continues between US and Russia in sense of the Ukraine war. That premium could be coming off the markets as well. And then apart from that, the way the US had been buying gold for most part of January and Feb seems to be ebbing off a bit as well. We did see the gold prices gain up by 28% in 2024. We are up by 15% in 2025 as well. And even as the banks and brokerages do believe that we could be looking at more all-time highs continuing in this year, this is a bit of a profit-taking, even opportunity buying according to some.
Thank you very much for that. We will slip into a break on that note. And here is some good news for all our viewers. India's business news leader is now just a click away. We're introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. So download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen.
And knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jeet Sanat.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual, Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions. And we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Welcome back. The Nifty is still down about 150 points now. Sensex lower by 500 points. Mitesh is now with us for a technical check on the markets. Mitesh, we had the big fall in the first 1.5 hour of trade, and from there hasn't been too much of a rebound. How concerned are you with the Nifty at these levels?
Yeah. So, the Nifty in the last few days has managed to bounce back from this range, 22,750, 22,800. But this time looks very tricky in the sense that, we've had a fall and we haven't attempted a strong bounce back. Also is the fact that, the last few days as the markets kind of managed to bounce back every time from these levels, the indicators had come slightly off the oversold levels, which means that if we start falling, there is space for them to, get back into oversold levels again. But that could mean that the Nifty could head towards 22,600 to 22,500 zone. So in that sense, I think, unless until we capture 22,810 again, I think I'll maintain a slightly negative bias and advise people to exit long positions if they have, or even look for stocks where you can take some small shorting positions.
Mitesh, we have 3 trading sessions after today for the expiry. Where does the expiry take place, in case you have a view there? And any specific views as far as the auto pack is concerned? Today we are seeing a sharp knock on M&M. It's down over 6%.
It's difficult to take a view on the expiry day, but as I said, I think in case we don't capture get past 22,810 again, I think fair chance that we'll head towards 22,600, 550 zone. So expiry could be around those levels unless until we get past 22,810 either today or by tomorrow. Having said that, the auto pack, yes, we've seen last few days the auto stocks have fallen a lot. M&M has a very strong had a very strong support around 2690, 2710. And if it closes below that again today, then I think this correction could deepen and the stock could head towards 2500, 25 to about 2520 on the downside.
And your individual picks for the day?
Yeah. So I have a sell on Sun Pharma. Pharma is another pack which has had a decline. So Sun Pharma is a sell with a stop at 1662 for targets of 1610. And Avenue Supermart or DMart is a sell as well. Keep a stop at about 3630. Look for targets of 3460.
Thank you so much, Mitesh, for joining us, giving us our view on the markets as well as your individual stock calls. Let's now take a short break. Up next, we'll discuss market fundamentals with Pawan Parak from Geojit Financial.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6, 7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think that trend.
Welcome back. Now, CLSA in a note today says the recent pause in US dollars rally could be a relief for emerging markets. Harmis has more details on this note. Harmis.
A temporary reprieve as such coming in with the fall in the US dollar that we have seen in the month of February. It's now slipped to levels of 106 when earlier levels of 110 now, almost down 2% in the month of February itself. And CLSA is calling it the same. It's calling it a temporary relief, and that may favor emerging markets going forward. And according to long-term associations, the US dollar is now almost 30% overvalued compared to the net savings rate is what CLSA is saying. And we all know about Donald Trump, the US president, and his preference for a weaker dollar, but his policies of tariffs and all of that is suggesting otherwise for the trajectory for the greenback. And the CLSA also goes on to say that the US dollar remains the most critical mandate for foreign funds and their appetite towards emerging market stocks. Now, not only is for the savings rate, the US dollar is also overvalued compared to the US 10-year yield, almost 3%, and also 12% compared to the GDP growth differential for the United States is what CLSA has to say. Now, going forward, some other wildcards for the dollar, the more aggressive tariffs and geopolitical tensions, that will be a positive. But in case if there is political interference with the Fed and its monetary policy, that can be a negative for the US dollar. But for now, there is some temporary relief coming in with the fall in the greenback.
Thank you so much for that, Harmas, for joining us and giving us a sense of what is CLSA's view. Well, two stocks from the auto index that are taking a very big knock. We just highlighted M&M, that's seen a further fall. And the other stock is TVS Motors. It's now down almost 5% in the trading session. M&M down over 6% and TVS also down close to 5%. Well, moving on, Pawan Parekh, a fund manager at GeoG Financial Services, joins us now to discuss market fundamentals as well as his top sectoral picks. Thank you so much, Pawan, for joining us. Well, the last couple of trading sessions where you saw intraday recoveries sparked hopes that market had seen a bottom. But what is your view currently? Do you feel that this is now a good time to go ahead and buy stocks?
Yeah, hi. Thank you for having me.
I think, I mean, we've seen a very sharp correction in last 4 or 5 months. In fact, if you were to compare this fall versus COVID fall, while the price correction is less, time correction is actually even more than what we saw during COVID time. During COVID time, the bottom was made within 3.5 months. Now we are 5 months into this fall, and we still don't know as to whether markets are going to take a U-turn or not. But having said that, given the time correction, I would want to believe a lot of the stocks, are average high quality mid cap, small cap stock, everything has fallen by at least 30-40%. And that makes me feel a bit positive about, buying some stocks at this level. Having said that, I must also say that, all of this tariff thing, as long as that sentimental negative impact continues, I don't think a V-shaped recovery will happen in the markets anytime soon in next 1 or 2 months.
Pawan, M&M. Was M&M a part of your portfolio at any point of time in the last 12 months? It's been such a wealth creator, and now the stock is suddenly tanked on fears about, increasing competition coming in from Tesla.
Right. So we do have a small allocation to M&M in our large cap fund. And I actually, it's a little confusing because, I mean, the recent launches and the booking that they have been has been phenomenal. I don't really understand if any imported EV can match the same price point as M&M is launching. And apart from the pricing, it's also about, the distribution infrastructure, aftermarket, and things like that. In all of that, I think M&M has got a huge advantage. And anyways, in overall scheme of things, electric vehicle is not a huge contributor to target price or profits anytime soon for next 1 or 2 or 3 years. Considering that in the background, given the sharp fall that the stock has seen, clearly indicates the underlying negative sentiments in the market, and market typically are reacting to all the announcements that's happening from the US administration on the tariff side. I would want to believe that sooner than later, sanity will prevail and markets will then once again focus on monthly numbers and earnings. And that is when I think a lot of these stocks will actually bounce back.
Right now, while there is perhaps, as you call it, insanity, because that's the best time to buy when you think fundamentals don't get impacted.
Absolutely. I mean, one sector which we are feeling very positive about is industrials. I mean, you look at those companies like ABB, Siemens, Cummins, all of them have fallen by something like 30 to 50%. While in the budget, it appears that if, the finance minister wanted to push consumption theme, but I must tell you that by no means we are putting capital expenditure on the back burner. Capital still continues to remain a core theme for our economy. Given the sharp fall that these stocks have seen in last 3-4 years, I would want to, last 3-4 months, I feel pretty excited in terms of valuations. I mean, 1 year back, these stocks were at phenomenal, crazy valuations, and investors were running to buy these stocks. And now at this level, given just the insanity, just some negative news flows, people are not willing to buy at this level. From my opinion, these are very attractive levels to get into these stocks.
Pawan, the other sector that's seen significant volatility and selling pressure has actually been the generic pharma names. So, some of these stocks have actually corrected 10-15% from the top. Again, worries from tariffs, worries of reciprocal tariffs. Would you look to add generic pharma names at this point of time?
Yeah, definitely. In fact, we've added a bit in last, say, 5-10 days or so. Again, this tariff thing is a bit, while it appears, that a tariff levied on India will create havoc for India. I must also tell you that, Trump is not targeting only India. It's a tariff across the globe, right? And if things are not getting manufactured in US, I fail to believe how can something, say, for example, pharma sector in India, which is something like 40-45% by volume in terms of total generic exports to US, I don't see a reason why, US can replace India by something else, which essentially means that either we'll have a sharp increase in prices or there'll be, product stock out kind of situation in US. I fail to understand why these stocks should fall so much. In fact, in my opinion, given the correction, I mean, it seems pretty interesting to me, at least pharma sector for now.
Pawan, any names you've added in the fall in the pharma space?
Sorry, I think for compliance reasons we cannot talk stock specific.
No, completely understand that. What about the BFSI space? That's another pocket of the market that's not really moved higher much. Where do you find relative comfort there?
I think in the BFSI space, it is better to stick to larger names. Larger names, if you look at the likes of HDFC, Kotak, SBI, etc., all of them haven't delivered great returns in last, say, 1 year or 2 years or so. Having said that, I would want to believe that from here on, credit growth should gradually pick up. Interest rates have been cut, but the real benefit of interest rate cut will happen as and when RBI infuses more liquidity into the system. Essentially, these are banks wherein growth should pick up, asset quality is not a concern, and valuations are also pretty reasonable. If you actually go down a bit into, say, a small finance bank or a mid-cap financial institute, you would find some would have exposure to MFI or unsecured loan or something of that sort. But if you stick to the larger names, I think it ticks all the boxes in terms of earnings, growth, asset quality, valuation. So I think it is better to stick to larger names here, typically the top 5-6 institutes. That is where we think it makes sense on a risk-reward basis.
Any sectors which are a complete avoid for you at this juncture, even after the correction?
I think, I wouldn't say IT is a complete avoid, but we've actually curtailed our positions in IT sector because what we believe is that, possibly, the best, at least in the short to medium term, I don't think dollar will depreciate significantly from now at the current levels. Secondly, typically IT sector in last 2 years, what we've seen is that typically we begin the year with very high expectation and the growth gets moderated over the course of the year. Last 1 year or so, IT has done very well. Valuations are just okay. If globally this tariff thing actually goes on, you will see, while US could do good, but there'll be something else which won't do good. And on an overall basis, IT sector earnings can see a bit of a downgrade from current levels.
Right. Thanks so much, Pawan, for joining us and giving us a sense of what exactly investors could do in the current fall. But let's now cut across to Prime Minister Modi, who is at the first edition at the School of Ultimate Leadership Conclave in New Delhi.
आपका लक्ष्य क्या है? स्वामी विवेकानंद जी ने कहा था, "Give me 100 energetic young men and women, and I shall transform India." स्वामी विवेकानंद जी भारत को गुलामी से बाहर निकालकर भारत को ट्रांसफॉर्म करना चाहते थे और उनका विश्वास था कि अगर 100 लीडर्स उनके पास हो तो वो भारत को आजादी नहीं बल्कि दुनिया का नंबर 1 देश बना सकते हैं। इसी इच्छा शक्ति के साथ, इसी मंत्र को लेकर हम सबको और विशेषकर आपको आगे बढ़ना है। आज हर भारतीय 21वीं सदी के विकसित भारत के लिए दिन रात काम कर रहा है। ऐसे में 140 करोड़ के देश में भी हर सेक्टर में, हर वर्टिकल में, जीवन के हर पहलू में हमें उत्तम से उत्तम लीडरशिप की जरूरत है। सिर्फ पॉलिटिकल लीडरशिप नहीं, जीवन के हर क्षेत्र में स्कूल ऑफ अल्टीमेट लीडरशिप के पास भी 21st सेंचुरी की लीडरशिप तैयार करने का बहुत बड़ा स्कोप है। मुझे विश्वास है स्कूल ऑफ अल्टीमेट लीडरशिप से ऐसे लीडर निकलेंगे जो देश ही नहीं बल्कि दुनिया की संस्थाओं में हर क्षेत्र में अपना परचम लहराएंगे। और हो सकता है यहां से ट्रेनिंग लेकर निकला कोई युवा शायद पॉलिटिक्स में नया मुकाम हासिल करे।
behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. You know, it's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister
Welcome back. JBM Auto is a stock on our radar right now. The company is in focus after its subsidiary won a very large order of 5,500 crore rupees to deliver over 1,000 electric buses under the PM E-Bus Seva scheme. And just to put that context in order, this 5,500 crore of revenue is more than the revenues of the company in the whole of last year. We have with us Nishant Arya, Vice Chairman and MD at JBM Auto, to talk more about this order win. First, if you could give us the execution timeline, what would be the revenues, what would be the margins, and when would it start accruing?
So we would deliver these buses in about 12 to 18 months, and the revenues would start accruing immediately after that. And the contracts for the mobility business go up to a period of 12 years. And these 1,000 buses would be delivered in 3 different states of Gujarat, Maharashtra, and Haryana.
What do you mean by these contracts for 12 years? And once you deliver it in 12 to 18 months, is it the entire amount gets accrued in one shot, or is it going to be staggered? How does it work?
No, it will be staggered because the mobility revenues get accrued annually.
Right. So we understand that there will be one portion that you get for the buses and the other portion will be the maintenance services that you get. So could you break that up for us?
So the mobility revenues actually come on a per kilometer basis in this business, which is on a gross cost contract. So that gets covered holistically in one particular framework only. So you earn on a per kilometer basis over a period of 12 years. So you can say annually about 450 crores to 500 crores is what would be getting added to the business.
Nishant, question. First up, as far as JBM Ecolife Mobility is concerned, what is the total debt over there? A recent CRISIL note indicates that you are looking to onboard an investor by the end of FY25. So just in the next couple of months, an investor is anticipated. At what stage are these discussions? Who is the investor? And at what valuation will this particular stake sale be fructified at?
No, so we are still in discussions. Nothing has been finalized as of now. So I wouldn't be able to share anything as nothing is concrete. But definitely as things get concrete, which we are looking at bringing in more partners to grow the business further. So we'll be doing that at the Ecolife Mobility level.
So what is the total debt? Because we understand that every time an order comes, you also have to put up close to 20% of equity for which you are taking on a bit of debt. So total debt over there, and will any stake sale help ease the debt burden?
No, so we always look for primary infusion in the company. So it's not a stake sale which we do. So primary infusion increases the capital base of the company. And I think as of now at JBM Auto level, we have about 2,500 to 3,000 crores of debt, which is long-term, short-term and working capital put together.
So you are looking at a QIP at JBM Auto, or will you look at diluting equity in the subsidiary?
No, we are looking at diluting equity at the subsidiary.
Understood that.
Okay, and what would the extent be of dilution and what is the timeline?
So we haven't defined a timeline yet. It's a minority stake which we'll be bringing in, but no timeline has been defined as of now. But
any
we could
worry?
say definitely within the next 6 to 9 months for sure.
Okay, 6 to 9 months.
Understood that. What is the total order book currently as far as the bus segment is concerned? We also understand that in the past you were looking at inorganic growth to increase your capabilities. Any of that still on the anvil, or that's on the back burner now?
No, we don't have any acquisitions in the pipeline as of now. But we do have an order book of about 11,000 buses. With this order getting added, so before this it was about 10,000 buses. With this, we go beyond 11,000 buses, which we'll be delivering over the next 2 years. So by FY27.
Understood that. So in the next 6 to 9 months, we can expect significant easing as far as the debt burden is concerned, because we understand that you will look to utilize the proceeds of the equity dilution to repay the debt. Is that accurate?
No. So we would be looking at the proceeds to reduce the debt as well as grow the business, both.
Also, could you give us a sense of every time there is an order that comes as far as the buses segment is concerned, could you give us a breakup of the equity and the debt that is put up? Because we understand that that is what investors want to know in terms of actually what is the kind of equity commitment you put in every time an order comes in?
No, because that's not standard, because in every case, what happens is that different states and central schemes have upfront subsidy as well. So if those subsidies come in, then the kind of equity requirements and debt requirements reduce significantly. Certain orders which we have are direct sales where there is no equity and debt required. So it's a permutation combination of multiple types of contracts which we have.
Okay. Nishant, I understand that the entire revenue accretion will be split. But what would be the margins that you would, get under this particular order? And what is the margin trajectory of the company?
No, margin trajectory is very clear that we'd be playing between 12 to 13% at JBM Auto level on a constant basis. And definitely we would try to see that as we go along, we increase that. As you would have seen in the past few years, as the electric vehicle business has increased, so the PBT margins have also improved further on that front, and the growth of the business is definitely increasing multifold. So I think that is something which we'll try to play upon, in addition to the auto component business, which is growing at a steady pace, along with the market and our key customers in passenger vehicle and commercial vehicle segment. And the tooling business is also growing pretty well.
Okay. And these are orders for 3 states. Are there any more such tenders which are likely to, come out in the subsequent months that you are going to participate in? And just, hygiene question, is there going to be any sharing of revenues of this entire 5,500 crore?
No, there's no sharing of revenue within.
And any other tenders which are coming up for
No,
bidding?
so always we have multiple tenders in the pipeline. Like today also, after PM E-Drive, there is a strong push by multiple states to give commitments to really see that how they would like to enhance their city transportation and upgrade it with the latest state-of-the-art electric buses, which was allocated to about 11 cities, if I remember correctly, across the country. And multiple states are coming out with their projects where they would be looking at deploying buses for intercity and city purposes.
Thank you so much, Nishant, for joining us. We'll get you back on the channel once that particular deal fructifies as well. Time now for a short break. We'll get back with our exclusive chat with Sanjeev Sharma, Managing Director of ABB India, on the other side.
Likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है, और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए।
Welcome back to Trading Hour. Well, let's now get you excerpts of our exclusive chat with the management of ABB India as they complete 75 years of operations. My colleague Vamakshi caught up with Sanjeev Sharma, MD ABB India at their Maneja campus in Vadodara, and spoke about how India is becoming a manufacturing hub for the world, growing exports from India and more. Let's listen in.
We have 18 businesses in the country, and all the global managers who are responsible for those businesses, they're investing. They're investing in capacity and also in, in the product portfolio expansion and also localization of it. So that investment is ongoing and is showing up in our growth. And I think that's what our global CEO meant, that we will continue to invest and make sure India is ready for the growth. ABB India is ready for the India's growth as we forecast it. Now, when it comes to R&D, there are two types of R&D. One is the R&D which is built in the incremental product improvement at the local level. But then we have the global R&D center. We call it that global competence centers, which are here in India. We have about 3,000 technologists who are working there. And while he was visiting, he visited those. He is very clear that given the demographic as well as the talent available in India and a kind of work which is getting done on the broader base across the different R&D technologies and different product technologies. So it means that talent pool is available, and any work we want to get done for global products, more and more work will be done in India. And when it gets done in India, naturally there is a direct benefit to us because we are also have access to those technologies.
Well, absolutely. And you mentioned about localization, right? So currently, is the localization level somewhere around 85%, if I'm not wrong?
Yes, it is. And some products are 100% localized. Okay. And some of them are 80%, 90%. Some of them are 60%, especially in the area wherein the local supply chains are not set up. Like, for example, power electronics is one area wherein we don't have the power electronics equipment or the global manufacturers. We hope with the PLI schemes and various incentives made, these critical components are also manufactured in India and they become part of our local supply chain.
So 85%, can it become 95%?
We believe so. I think that's our intention. But at the same time, we need our global partners to also come here and set up their manufacturing base so the supply chains are much, much closer to us. But that's our intention because we have a very clear strategy at a global level, local for local, which we have learned out of our COVID period, wherein if the supply disruption takes place, yes, it can be a little bit of an issue to serve the customers, though we managed it all right, but that's a threat. And also in the geopolitics scheme of things, absolutely, more reliant you are in the market where you want to be present long term, local for local is our strategy.
So when you localize, does it also have a bearing on your royalty spends that you pay to the company? Does that come down?
Well, typically with the volume and as the technology gets normalized, it does. But at the same time, you also have to spend when you're bringing new technologies. Absolutely. Because the same equivalent technologies, if you have to develop grounds up, it costs much, much more money. And we are in an advantageous position that we can go to a global center and global expertise center and take this help and get this localization done much, much faster.
Correct. You spoke also about local for local, right? Just a short while ago. So that is a strategy that ABB follows globally. But my question to you is, can India be an exception? Because everyone is talking about India as a manufacturing hub. Of course, there's policy support. There's also the labor arbitrage that comes into picture. So I'd just like to understand from you, how would the exports look like? So would exports be a meaningful part of the revenue? It's somewhere around 10%. Can it be 25, 30%?
So exports are growing meaningfully at 15 to 20% rate. But percentage-wise, they are about 10 to 12% for the simple reason India is growing much faster. So Indian market is growing much faster, and my prime focus is to develop Indian market and also develop these operations to world-class level, and they are. So what happens is business by business, the global leaders are recognizing the power of manufacturing in India, and they are allocating more and more markets to our Indian colleagues who are running the businesses. And we find that it's in early stage and it will continue to grow over a period of time.
Absolutely. And is there a split that you have in terms of exports? The exports that come in from the parent company as well as some other ABB entities, and some exports that you win directly. How are both of them trending? And what are the kind of markets that you can directly target?
So global markets are in the hands of our global division managers. Absolutely. So they are the ones who decide which production plant to use to bridge those markets with supplies. So increasingly they are using ABB in India, and other than other plants also we have globally. That will continue to be the case, but then definitely there's a positive bias for Indian manufacturing, because we don't not only have the labor arbitrage. My focus together with my colleagues is productivity arbitrage as well. So we don't not only have to make use of the labor arbitrage as it exists, but it goes away after some time. But it is our ability to create more productivity arbitrage using new technologies, new methods which are not used anywhere else in the world, to make sure that we are able to take benefit of it and also able to serve the markets from here.
Well, a very interesting conversation there with the management of ABB by our colleague Vamakshi. Well, there's been a bit of a recovery as far as select stocks are concerned. Have a look at Hutco. That particular stock is now trending near the day's highest point. The other capital goods company, which is Cummins India, that too is gaining in trade. And two stocks from the aluminium pack, both Nalco as well as Hindalco, both of these stocks are doing quite well. The Nifty has now bounced just above the 22,800 mark, and that is going to be one very important level that markets will keep a close eye on. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं, कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं, उसमें संगम नोच पर फीकल कोलिफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 MPN प्रति 100 ml से कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing 30,000.
Stocks slip again with mid-caps feeling the pressure. Auto, healthcare and energy are the big drags, even as metals are managing some green.
IOC Chairman Arvinder Singh Sane tells CNBC-TV18 in an exclusive interaction he is confident of receiving dues towards LPG sales. He also points to a pickup in fuel offtake and an improvement in refining margins.
The open offer for Religare Enterprises triggered in September of 2023 has finally concluded, with the Burmans emerging as promoters of the embattled NBFC. The stock gains in relief.
Walmart-backed PhonePe has geared up to go public in India, but stops short of announcing a timeline. PhonePe was valued at $12 billion as per last funding round in January 2023. You're watching us here on Halftime Report. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormas Fatakia. Not particularly good day if you're a bull from the mid-cap end. If you look at the market, down about 1% for the mid-cap index. The Nifty itself is down about 120 points. The only thing that's saving the market from blushes is the earlier lows of 22,700 to 22,800 on the Nifty have been maintained. So we're in that uncertainty corridor, for the frontline indices, both the Nifty as well as the Nifty Bank. They're lower, but not breaking the lows. The mid-cap index is a bit of a worry. After 2 days of outperformance, we've seen some bit of selling in the mid-cap end of things, with 1,500 stocks declining for about 1,000 stocks. Hi, Hormas.
Good afternoon, Mangalam. And yes, indeed, and the Friday was supposed to be an action-packed day, which Friday isn't. And the mid-caps, as you mentioned, the last couple of days, the question that we've been asking was the same, right? Whether this is actually a reversal that is being forming, or whether the recovery should be used to reduce your positions. Well, the answer is pretty much on your screens right now. 0.9% lower on the mid-cap index, the small-cap index as well, painting a similar story. But for now, both of these indices are still up in the green for the week. The small cap index is still doing relatively better compared to the mid caps, but for now the frontline index 22,750 and 22,800, that is the range that you need to watch out for. But let's start off the show with the big story of the day, possibly for the week as well. The government will soon open applications for a scheme to promote the production of electric cars in the country. Now, sources are telling CNBC-TV18 that a concessional import duty of 15% will be offered if companies meet the scheme's eligibility criteria. Parikshit is here with more on this. Parikshit, tell us more about this government scheme.
The central government will soon invite applications under the scheme for promotion of manufacturing electric cars in India, which will give global OEMs a 15% concessional duty as opposed to 70% currently. This scheme was announced in March last year, and the government has been holding consultations with the industry on implementation guidelines. The Ministry of Heavy Industries, which is the nodal ministry in charge of this scheme, has now prepared draft guidelines for feedback. The guidelines will soon be notified, and sources say government could open the scheme for applications in late March or early April. Sources say investment in both greenfield and brownfield projects would be eligible, but the amount of committed investment, that is $500 million, would be mandatory for both greenfield and brownfield projects. Companies can spend 5% of committed investment on charging infrastructure. The company must achieve a minimum revenue of rupees 7,500 crore by the 5th year of operation and 5,000 crore rupees by the 4th year of operations. The applicant will be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1% to 3% of the revenue shortfall. An interministerial sanctioning committee would be formed for approving and monitoring the implementation. Sources have also told us that Tesla has not participated in any recent stakeholder consultations regarding electric car manufacturing scheme. The government has received representations from almost all global and domestic OEMs, but not Tesla. However, this scheme will be opened within weeks, and the government is hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing $35,000 or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by the 3rd year of operations and achieve a domestic value addition of 25% in 3 years and 50% value addition domestically by 5th year of operations. Now, according to estimates, if a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs, and an imported car costing $50,000 would cost an Indian customer around rupees 52 lakhs.
Take that point, Pariksha. Thanks a lot for that. So this scheme perhaps has some ramifications on a couple of these listed stocks as well. Remember on Monday, on the news of Tesla entering India, we saw a big cut on M&M. But after there was subsequent recovery, as you know, Street saw the ESUV sales. Also, they saw that the prices at which perhaps Tesla may come in would be a lot more prohibitive. But now with some more movement on that front itself, and expectations are as early as March itself, there would be, tenders invited from interested parties. There is once again the pressure of competition. M&M as a stock, the top Nifty loser right now for this week itself. The stock is down about 9%. Mind you, it has seen a big gain over the last few months itself. Despite the 10% cut from the top, it's actually up around 45% for this year itself. Let's move on. Let's talk about some of the other stocks. Among the stocks that are gaining today, KEI Industries is one. This after a brokerage note coming in. Morgan Stanley's initiated coverage on the stock with an overweight rating. The stock is at the high point of trade. What does that brokerage note entail? Upasna joins in with the details. Upasna.
Well, certainly, Morgan Stanley has initiated an overweight rating on the stock with the target price 4,391 per share. Well, the brokerage sees sustained demand in the cable and wire segment in the coming decade, and KEI is the second largest player after Polycab. It has well-diversified channel mix in cable and wire segment as compared to its peers, is what the brokerage believes. Now, Morgan Stanley is of the opinion that KEI has a strong cable and wire franchise, and its business model also continues to improve. It believes future of energy is the most important theme that will continue to underpin the demand. Now, talking about the other multiple domestic growth drivers, the brokerage has highlighted robust capex plans and ramp up in exports are the key domestic growth drivers for the company going forward, and exports should also aid earnings progression going forward, given today's multipolar manufacturing dynamics. On the back of this, the brokerage is forecasting a revenue CAGR of 20% and PAT CAGR of 23% from FY25 to FY28, driven by capacity creation. So overall positive note coming in from Morgan Stanley, and we can clearly see the stock surging in trade today on the back of this.
5% higher on KEI Industries. Upasna, thanks a lot for that. It's a good day for the stock, but it hasn't been a very good start to the year though. It's still down almost 12 or 13%, and as of yesterday's closing, the stock was down 17% so far in the first 2 months of the calendar year so far. So that is KEI Industries for you. A good day for the stock in an otherwise weak broader market. Moving on then, the FTSE India March 2025 semi-annual review announcement is set for today, with adjustments scheduled to take place on the 21st of March. Vivek is joining in with more details on that. Vivek.
That's right. So good afternoon. Expecting the announcement to come post-market hours today, given the fact that the FTSE, based out of UK, will come out with the list as far as the semi-annual index review is concerned. March 21st is when the adjustments will take place. Which are the stocks? 10 inclusion candidates. So far, IIFL Capital, remember, has made these estimates. So far, not anticipating any exclusions. IIFL Capital, the all desk expects 10 stocks. Which are the stocks? 361 WAM, Blue Star, Fortis Healthcare, Apar Industries, Crisis, of which Fortis is expected to garner close to $65 million worth of flows. Other set of stocks include Bajaj Housing Finance, BSE expected to see flows of close to $76 million, Keynes Technology, Premier Energy, as well as IndusInd Bank. So these 10 stocks could make the cut within the FTSE, the all-cap index or the all-world index, and that'll be something interesting to track come Monday.
Interesting names on that list, Vivek. Bajaj Housing, BSE. Keep an eye out on that update. Thanks a lot for that. Take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, where you get instant access to breaking news, in-depth articles, and financial world updates. All of that at your fingertips. You can download the app from the Apple Store or the Google Play Store right away.
or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and
Welcome back. If you look at the markets right now, we have the mid-cap index, which is down by about 1%. The Nifty down about 0.5%. The Nifty Bank is the underperformer, just like yesterday. So if you look at all the frontline indices, as we look at the FNO setup at the middle of the day, we have the mid-cap index, which is underperforming. A little more than that is the Nifty Bank as against the Nifty, and the Nifty itself is down by about 125 points in the zone of that 22,750 to 22,800 sort of support mark itself. It hasn't fallen much from levels earlier, which is a good support for the bulls. And so is the case with the advanced decline ratio as well. If you look at it at the start of the day, we had the green and red lines, the green line above the red line, thereafter they intertwined, and now for the last 2 hours or so, the red line has maintained and behaved itself with around 1,500 stocks declining, and the number of advances have been about 1,000 as well. So the market is down, but not necessarily out. The only thing we'll have to monitor from here on is what happens to the volatility and the upside. The India VIX, which had seen a cool off in the last couple of trading sessions, has begun to rise once again. So it's moving towards that 15 mark. So that's something we'll keep an eye out on. And now the fulcrum seems to have shifted from 22,900 to 22,800. So 22,800 put fairly active, premium of 150 rupees, telling you that there would be support around 22,650 to 22,700. On the way up, 22,800 call writers active, premium 176 rupees, telling you once again that levels just shy of that 23,000 mark, closer to 22,950, 22,975. There will be supply coming in. And if you want to get a little more adventurous, then maybe the 22,850 call, which has a premium of 150 rupees, tells you that 23,000 would be a stiff resistance for the frontline index itself. These are options that expire next Thursday, which is the monthly expiry for the Nifty itself. Fresh shorts added on M&M, so just keep an eye out on that stock. A lot of long positions added on names like JSW Energy and KEI Industries, both of them buzzing on the back of brokerage notes. But just keep an eye out on Chambal Fertilizers and Bandhan Bank as well. Both these stocks are on our radar. They've seen open interest jump, but they're very close to the threshold levels beyond which they may enter F&O ban. Currently, we have Manappuram in F&O ban. Can Chambal Fertilizers and Bandhan Bank enter as well or not is the question we'll get an answer to in the evening today.
The usual suspects, right, who's entering the F&O ban. Mangalam, thanks for that F&O update. Manish Hathiramani of Deen Dayal Investments is joining us now for a quick chart check. Manish, good afternoon. Thank you for joining in. Now, it's almost become certain that 22,750, 22,800 is a very strong support zone for the index. What if we go below that on a sustained basis? Where does the Nifty head to? And in case there is a sustained recovery, do you use that to reduce your positions and couple that up with your stock recommendations as well for the afternoon?
Good afternoon, Hormuz, Mangalam and all our viewers. Thank you so much for having me on the show. Well, I feel both our main frontline indices have gone range bound. Let's start with the Nifty, which I feel is currently sideways between 22,700 to 23,050. If we break the downside, I feel we can slide to 22,200. And if we get past 23,050, then the next target should be 23,500. Bank Nifty is sideways again between 48,600 to 49,600. Again, if we break the downside, we should go down to 48,000. And if we go up, we should go up to about 50,000, which is the next resistance. Midcap is the only one where we have seen some kind of a bounce. However, I feel we should not jump into it immediately because we have a resistance at 52,300. Working with my calls for the day, because I feel we are very close to the supports of 22,700, I'm actually working with 3 buy calls, 2 frontliners and 1 mid-cap. The first one is on Vedanta for a target of 465, stop loss of 415. We have bounced from the 400 support and thereafter we have crossed the short-term resistance of 420. The next one is ONGC for a target of 252, stop loss of 229. Here too, like Vedanta, we have bounced from 220 and crossed the resistance of 235. The mid-cap stock would be Indian Hotels for a target of 825, stop loss of 705. After a consolidation phase around 690, we have crossed the hurdle of 700.
All right, we take that point. So for the frontline indices, are you saying we're in a no-trade zone right now, Manish?
We are in no trade zone and we are really tickling around that 22,700, which is a strong support.
All right, Manish, thank you so much for sparing time and joining us today on the show with your views on the index and on specific stocks as well. By the way, speaking of specific stocks, Cyient is another one that has slipped to the lows of the day, now 6% lower there as well. So midcap IT is taking a bit of a beating in today's session. Beat Cyient, beat Coforge, both of these stocks seeing some bit of underperformance in today's trading session. Coforge too at one point of time was down almost 4.5%, still holding on to those losses. Take a short break, more on the QSR sector on the other side. Stay tuned.
Forgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. HSBC presents CNBC TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Breathe out a little half.
Then there's
Welcome back. We're looking at the quick service restaurant segment. Remember, a couple of weeks ago, we had done this on Editors Roundtable, and now there are a bunch of brokerage notes also turning positive on the QSR space. So just let's look at what's happened. Over the last few quarters, there's been a lot of weakness, and the third quarter seems to have shown some signs of improvement. That's what we've seen in the same store sales growth. This is Westlife India's McDonald's. If you look at, KFC's Sapphire Foods as well, it's still a negative 3%, but marked recovery from what we've seen over the last few quarters as well. Jubilant Foodworks has been doing a lot better. Burger King too has seen a recovery from the previous quarter itself. Pizza Hut India, we've been looking at numbers from Sapphire Foods and Devyani. Out there too, it's turned positive after almost 7-8 quarters of negative same-store sales growth. And Domino's, which had been doing a lot better as compared to the industry, has only gotten a shade better with 12.5% like-for-like growth in the third quarter itself. The fear was that, there is a lot of competition eating away from the platforms itself. Now look at that. While revenue from quick service restaurants is increasing, the revenue growth from Zomato and Swiggy's cross-order value is reducing. So, over the last few quarters, if you look at it, it's down to 16.8% in the third quarter itself. So the question is, what exactly has changed for QSRs for everyone to suddenly turn positive, or have they turned a corner itself? The first thing is inflation has shifted urban consumption towards affordable treats. We know that these companies have increased their value offers on both delivery and more so in dine-in. The companies have rationalized their stores from dine-in to focus on delivery as well. And even the new stores that are opening, they're opening in tier 2 and beyond towns itself, where there is already some sort of latent demand. A lot of the companies like Jubilant Foodworks, which already have their own delivery fleet, have waived off their delivery charges, and McDonald's in the Mumbai region itself has started with their own delivery fleet, rather, that is. There have been high markups on platforms like Zomato and Swiggy. Our colleague Abhishek keeps posting on X every once in a while that his restaurant menu is a lot lower than what they're charged on Zomato and Swiggy. And then there have been innovation on menu and new product launches as well. There's been McSpicy range, Domino's has that cheesy volcano, etc. And earlier there was competition coming in from local chains as well. Now reports suggest that 80 to 100 local pizza outlets have closed in Ahmedabad itself in the last 10 months. So assuming that, competition from all ends is waning, inflation is moving towards these companies, moving towards value offerings, can they make a bit of a comeback or not? So what we'll do is, this was a rehash of what we had done about a couple of weeks ago. Yesterday, there was a note that came in from Goldman Sachs. Arnab Mitra, who's the India consumer analyst, joins in to focus on the quick service restaurant space itself. We'll get his perspective in and his top picks. So take a short break, come back, we get chatting with Arnab Mitra.
Sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally, on international grounds, and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanath.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes.
Welcome back. Since we spoke about QSRs, Goldman Sachs had said that the tide is turning for India QSR, where the players are now gaining share within the food delivery market. Remember, we had a conversation with Arnab Mitra earlier itself, sometime a couple of quarters ago, where the company said that the incremental sales of all the quick service restaurants was lower than that of Zomato and Swiggy, telling you that they were losing market share. He said the same for a lot of the retail and quick commerce players as well. So now that, quick service restaurants may be gaining market share, he's come out with this note saying that delivery channel and dine-in have seen a marked recovery. Arnab Mitra now joins us. Arnab, you've been on top of this, the trend, capturing the trend of both quick service restaurants and the retail space itself. Now that there is a revival, let's ask you the basic question. What are the factors that are causing this revival? And the second part is this just a cyclical recovery from a low base, or do you think something has structurally changed?
Sure. Thanks, Manglam. I think if you look at the data which we captured in our report, it was quite stark that about 4 quarters back, we had 27% growth in the food aggregator GOV, while the organized QSR had grown just 9%. So it showed a huge loss of share to new restaurants, regional chains in the delivery channel. What we've seen this quarter is the organized QSR companies which are listed put together in delivery terms grew around 21% compared to the food aggregator ecosystem, which grew around 17%. So that's where the data point came in that this tide has turned. It was anyways turning over the last few quarters, but this is the first quarter where the growth picked up above the food aggregator growth. The other one is the dine-in, which has been negative and actually declining for many quarters, has turned positive this quarter. Now, to answer your question on what has really changed, so see, in the consumer industry, QSR is probably the only industry or only segment which is a bit cyclical in nature. And the reason for the cyclicality on the demand side, it's a very discretionary category. So when the economic conditions are great, the growth can be very high. And when there is a bit of a tough economic condition and the consumption slows down, growth can be very bad. On the supply side, it actually has low entry barriers. It doesn't cost a lot to open a small restaurant. So what we tend to see in this industry is cycles of overcapacity and oversupply leading to slowdown. So what we've seen last year, coming out of COVID, we had really strong growth in the QSR industry for obvious reasons. And all restaurants chains started adding very large number of restaurants. Also, a lot of standalone restaurants opened, a lot of regional chains were expanding because of the availability of the aggregator network, which had expanded. So in fact, one interesting data point is FY23, the listed space that we track added 33% new restaurants over FY22. And you can only imagine how much more was the addition if you were to add all the new chains and all new standalone restaurants that opened. Today, if you see it, we are going to add about 10 to 12% restaurants next year on the base of FY25, based on the guidance from various companies. So the supply side, which had gone very aggressive in terms of addition, has started moderating. And to our mind, that's one of the key factors playing out here. A lot of restaurants, anecdotally speaking, probably were making losses and therefore have shut down. And the pace of supply addition has slowed down. So I think that's one factor which gives us confidence that this is not just a low base bounce, but fundamentally the industry is getting back into some normalized supply. On the demand side, Mangalam, there's another dynamic playing out here. I think all the QSR chains had focused a bit on the premium segment coming out of COVID. So we had heard about the gourmet pizzas and the premium burger ranges coming out. Also, the price hikes were very high in 2022, partly because of input cost inflation. Pizza prices had gone up 20%, fried chicken prices were up in double digits. So I think affordability, the focus on value, that had slightly gone on the back burner in that high growth phase. What we are seeing is companies dial back into value. So we have seen no price increases for the last 24 months. And there are some companies who have actually given back value to the consumer by waiving delivery fees and offering lower price products. So I think this demand side also is responding to that stimulus that the companies have given in terms of their own strategy. Now, what makes us slightly more positive also is that the catalyst like the income tax cut, which will start coming in from the June quarter, and lower food inflation, which we are seeing in the last 2 quarters, possibly will start also playing out.
Right. Arnab, good afternoon. Actually, thank you for joining in. And so, do you expect this trend, this shift from premiumization to a more affordable value proposition as a sustainable trend? Do you expect that to continue? And will that result in more people preferring to eat out rather than compared to order in?
Yeah. So I think QSR fundamentally, value is the core bedrock of the QSR industry of the world. So I think it's absolutely important for QSR to give value to consumers because the growth is going to come from new consumers. It's very low penetration industry. The organized share is extremely low in this industry. So that I think is absolutely an essential component. I would not put it specifically dine-in versus delivery. What in fact we wrote in our note is within the delivery channel, the QSR is now gaining share. And of course, dine-in is having its own comeback. So for both dine-in and delivery, it's extremely important to have this value segment. And therefore, we think in both, we are seeing an improving trend. However, specifically on dine-in, an additional point is that most of the restaurants are now charging a premium price on the delivery channel compared to when you dine in the store. And that could have some role in shifting, getting the dine-in traction back because end of the day, it's a value business. And the value is more in dining in compared to delivery, as if you just take the prices that the consumer have to pay at the end of the day.
All right, that makes perfect sense. Just before we, leave you, Arnab, I wanted your thoughts on 2 things in particular. One is that when you started, you said that when the economy is good, QSRs do a lot better. When the economy is sluggish or the consumer environment is sluggish, QSRs don't do as well. Right now, the tide has turned despite the consumer sentiment not actually being very good as reported by other FMCG companies. That's point number 1. Secondly, what would make these aggregators and platforms come back? That's the second point. And the third one is that I see your picks. You prefer Sapphire, Devyani as the long-term structural opportunity in KFC. You also like Westlife, given the company's brought back focus on value. What's conspicuous by its absence is Jubilant FoodWorks. Is that largely a valuation call?
Yeah. So I think on your first point, I think a lot of these restaurants we cover are actually completely dependent on the aggregators for their delivery business. So it is not really a call aggregator versus QSR, but QSR versus the non-chained QSR market, where the QSR market had shifted dramatically away from the chained QSR in terms of share, and that's probably coming back. And that's what's giving us, to your question, that's why you're seeing a growth pickup without the macro picking up, because it's a bit of a share gain within that whole ecosystem of eating out. If the macro picks up, we should see more pickup from where we are right now. And remember, a lot of these companies are still just about in the positive or in the slightly negative SSG territory, despite the trend that we spoke about. So this pickup trend would probably strengthen if the macro also is supportive. Now, to your second question on why our preference for fried chicken as a segment, that's really driven by a couple of things. We had done a lot of research, looked at fried chicken as a category across the world. It tends to be less competition long-term because it is a slightly more value-added format in terms of, the supply chain requirement of fresh meat. The capex per store is much higher. So world over, the market share concentration in fried chicken is higher. So we feel long-term competitive risks are lower. And secondly, the current penetration of the fried chicken market is much lower in terms of number of stores. So our preference for the fried chicken category is largely to do with the lower competition and longer runway for growth, while all chains should benefit in this upside.
Appetite. We will have a conversation about this once again, but for now, thank you for putting this perspective for all our viewers, running a little short on time. What we'll do is, on that note, thank Arnab, take a short break, come back, focus on the markets once again.
$1,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think the trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. It's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariffs.
Back with us here on Halftime Report. There is a slight recovery on the Nifty, back above the mark of 22,800 at 22,820 is where the index is currently. But what's not doing well, though, is the entire mid-cap IT space, be it Coforge, be it Persistent Systems, be it Oracle Financial Services. Most of these names trading with losses of anywhere between 3 to 5% in today's session. Coforge is down 3%, Oracle Financial down 4%, and Persistent Systems too trading under pressure with losses of close to 3%. What's only doing well, though, today is Godrej Industries. It was doing well yesterday, was up 20%, and it continues with that trend today as well. We'll take a short break. Up next is a commodity corner with the Trump tariff concerns prevailing across industries, and to know how the shipping industry is taking a hit due to the tariff uncertainties, Manisha Gupta caught up with Christopher Cook, who is the managing director of South Asia at Maersk. We'll listen in to that conversation as she quizzes him on the disruptions in the global trade and the impact on freight rates.
cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
Welcome back, and it's time for Commodity Corner. As we just mentioned, how is the shipping industry coping with these Trump tariff uncertainties? Manisha Gupta caught up with Christopher Cook, who is the Managing Director of South Asia at Maersk. Let's listen into excerpts of that conversation.
The freight rates did see an acceleration at the start of last year as a lot of capacity came out of the market, and then goods had to be transited, or we had to redeploy our networks around the Cape of Good Hope. We've seen in the second part of the year, we saw a bit of a cooling off. Okay. Honestly, the freight rates are very much defined by supply and demand. And we've just announced our global results just last week. And we're still projecting that global trade will grow by 4% this year. And Maersk anticipates to grow along a similar line.
How would you look at India then? If you're looking at 4% of global trade growth, how does India fit in?
Well, India, we've seen a solid growth in India, and actually some of the larger commodity groups, when we look at the apparel segment, when we look at the automotive or cold chain, these are all growing robustly. And we anticipate that there will be a good solid growth in the coming years, and actually we're designing our networks to support an increase in demand out of India, and I can talk a bit more about that.
Oh, well, absolutely. I would love to know on how is India's export numbers vis-a-vis the import numbers, and what commodities really do feature in exports and in imports.
Perfect. So we've seen the export numbers growing 2% year over year in the last 5 years. We expect that to continue. I just mentioned the growth in the apparel segment, 14%. We've seen the automotive segment growing around 12%, and cold chain around 9%. So those are some solid growth numbers. North America remains the largest trading partner, but we see some growth in some of those European, African, Latin American markets. Imports is a bit slower, and in fact, a large part of the import market is driven by waste and scrap, and some of those volumes have reduced over the last year.
Chris, when we look at 2025, and as you said, the 4% growth is what you look forward to in this year as well. The way this year is started with so much uncertainty, and also talking about India's major trading partners as well, do you see an increase in that number also?
Yeah, so, you know, and uncertainty is something that we're really trying to find ways to support our customers and reduce. And one of the things that we've just launched in the last week is a new network which will, towards the second part of the year, bring 90% reliability. So that's one of the ways we're trying to buffer some of this uncertainty for our customers, and particularly that'll support growth into the European market and into North America. So there will be more capacity, and we will bring a much higher level of reliability, 90% in fact, against the market standard in the last year, which is around 55-60%, which Maersk also leads, but clearly if you say 1 in 2 ships are late, that's not a great position to be.
That's the Gemini collaboration network that you're talking about?
That's correct, exactly. The newly announced Gemini collaboration we just announced.
Talk to us about more details onto this. What would it really mean for India? You are the second largest when it comes to shipping lines in the world. How does it make your place more solid in this space?
Well, if I just take North America, we've just the service that or the extra capacity we brought for North America not only gives the opportunity for growth, but it also means that we will bring a 5-day faster transit time for our customers, and then we're bringing this 90% reliability commitment. And then into Europe also, we've added 2 additional services to support growth into those important markets, UK being one of the largest markets for the apparel and textile segment. So important that we can support that growth there.
Also, when you look at India's trading partners, which countries do you see trade increasing with?
So in addition to North America and into the United Kingdom, we see strong growth also into the UAE. The CEPA agreement that was announced 18 to 24 months ago, this is seeing very robust growth. Africa for the automotive segment. And then we see growth for cold chain products, particularly Europe and North America.
Would you say the fresh produce trade also seems to have increasing globally, especially with India?
Yes, you know, certainly the growth in fresh produce and also manufactured products is certainly growing, and as the population of the world grows, also it needs to be fed, and India is supporting that growth.
It is. Chris, a final word then. How would you and what would you strategize as you get into 2025? I mean, I know these are still early days and we still don't know on how the first quarter really would end. But what is it that you at Maersk are strategizing, especially for India?
So we just finished or just announced our 2024 results. We had our 3rd best year on record. One of the things that we're really focusing on as we go into 2025, of course, is ensuring this new network that we've just announced, the Gemini cooperation, goes live successfully, that we can continue to support our customers and give them reliability in their supply chains, I think these are, and then help them navigate the uncertainties which we've talked about today. I think these are some of the key elements that we want to support as we go in 2025.
Where is sustainability on your priority here? Because almost everybody, and since we're talking about biofuels and hydrogen and renewables and energy transition, etc., what is the company's goal when it comes to that?
So in 2040, we want to go. We want to be net zero. We're very proud that in a few weeks' time we're actually going to be naming one of our new vessels, which is able to be fueled with eco-fuels, e-methanol in this case, will be named here in Mumbai. And our strategy really is to decarbonize our ocean fleet and then all of our landside operations. And we have a stage plan that enables that over the next 15 years or so.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए। फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं उसमें संगम नोच पर फीकल कोलिफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है जो 2500 MPN प्रति 100 ml से एक कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor,
Stocks flip again with mid-caps feeding the pressure. Auto, healthcare, energy are the big drags, even as metals manage some green. IOC Chairman Arvind Singh Asani tells CNBC-TV18 in an exclusive interaction he is confident of receiving dues towards LPG sales. He also points to a pickup in fuel offtake and an improvement in refining margins. The open offer for Religare Enterprises, triggered in September 2023, has finally concluded, with the Burmans emerging as the promoters of the embattled MBFC. The stock gains in relief. Walmart-backed PhonePe is gearing up to go public in India, but stops short of announcing a timeline. PhonePe was valued at $12 billion as per the last funding round in January 2023. Hello, good afternoon. You've tuned into Business Lunch, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in. Today, Friday, seems to be a bit dull coming in for the markets. So markets have come off the day's highest point. Like you can see, Nifty is trading in the red. It was trading in the red even in the morning, but that fall seems to be a bit intensified from the day's highest point. Opened up a slight bit in the green is what we saw at one point of time, and then it just went down. Right now, trying to make the comeback from the day's lowest point. Sensex too is trying to make that comeback, but doesn't seem like that is happening. As of now, the Nifty and the Sensex both are down almost 0.6% in trade. Mid and small cap, sharper pressure and sharper fall coming in for the mid and small cap. 1% decline for mid cap, 0.5% decline for small cap is what we're seeing. They were holding on to green for most part of the first half of the trading session, but then we saw a decline coming in. Contributors, we have L&T, Tata Steel, Hindalco, HCL Tech, which are among the top pullers for the market. While in terms of the top drag, we have two private banks that are coming in: ICICI Bank, Kotak Mahindra Bank. M&M, I beg your pardon, continues to be under pressure, while Infosys is also something that is under pressure. Advance decline ratio clear in the favor of declines as of now versus advances. So yes, that is something important to watch out for. And there's only one sector today trading in the green, that is the Nifty Metal, that is managing to hold on to some bit of a gain in today's trading session of almost 1%. So yes, surely keeping an eye out on that. In terms of movers for that, Nalco, SAIL as well as Hindalco among the top movers in the Nifty Metal. But yes, that's what we're looking out for in terms of the market. As of now, we're seeing red on the screen coming in, at least for the benchmark indices, and pressure coming in for broader markets as well. But let's move on, and Indian Oil Corporation is on our radar. Now, Q3 was a weak quarter for the company, with gross refining margins coming in sharply lower. Earlier today, we spoke to the chairman of the company, Mr. Sani of the Indian Oil Corporation, who's discussing his Q3 numbers, performance, outlook for the company going forward. Listen in to what he had to say.
Once we have been given the subsidy amount of something around 22,000 crores or something for the industry in 22-23. And now again there is some deficit, and we are very much confident, and our government is totally seized to the situation. And they we are in talks with them, and we are very confident that by the end of this quarter, we will be in a situation wherein my balance sheet will be healthy enough to support my working capital as well as my capex requirements. Availability is not an issue today. Availability of energy, availability of crude is more than what is required by the world today. So that supply demand is driving the total cost of procurement of crude for me and for other OMCs also. Any crude coming to India will come on economic considerations only. That is one. We will have intent. The intent has been given by government. We will follow that intent. But any decision of crude procurement is taken based on economics only. That is the only driving force for me.
Okay, let's move on. Crompton Greaves Consumer Electrical introduced two new tech platforms, Nucleus as well as X-Stack, which is aimed at enhancing energy efficiency, performance and reliability of its products. The company's MD and CEO Pramod Ghosh says that they see better times ahead for the quiet brand Butterfly, and also talks about a bunch of new products that are in the pipeline. Listen in.
We are looking forward to Butterfly turning the corner insofar as the growth trajectory is concerned, and profit trajectory you already see. The turnaround has definitely taken root, and so we do see better times ahead for Butterfly. There will be product categories that we are not currently in that we will start to sell, but also better and closer to the consumer heart. Suffice it to say that we are working on a bunch of products.
Right.
Not only products which are already available in the market, but taking those products and trying to see how we can come up with something that is different.
Yeah.
Yes, you will see us entering some of the large market segments where we leverage the Crompton brand, the Crompton distribution, the Crompton service, but also come up with a product. There was some subdued demand that we'd seen in some of the quarters that have gone by after what was a very strong first quarter, benefiting from what was a hot summer. So, with the government putting more money into people's hands, as you noted, an early onset of summer, we are optimistic about our demand pickup going forward. And, as we are learning now, with changing climate, not only will summers sometimes start early, but they will also last longer. So yeah, I can't say I'm thrilled at global warming, but occasionally it helps us.
Okay, on that note, let's move on and get you an exclusive. Sources tell CNBC-TV18 that electronics and wearables manufacturer Boat is looking at filing for a 2,000 crore rupees IPO soon. Rachna is joining in with us to give us the details on this one. Good afternoon, Rachna.
Thank you, Winnie. Good afternoon. We have learned from our sources that consumer electronics brand Boat is making yet another attempt at going public, this time planning to raise rupees 2,000 crore rupees through an IPO in FY25 and 26 at a valuation exceeding $1.5 billion. Sorry. However, we also understand from our sources that valuation could be a sticking point this time too. But this comes after almost 3 years when the company made its first attempt before ultimately withdrawing from the IPO. While the amount of the fundraise is essentially the same, what's different this time is that unlike the last time, Boat is now going to take the confidential filing route, just like the food delivery giant Swiggy did for its IPO last year. The confidential filing is expected sometime next month. This comes at a time when Boat's revenue fell 5% in FY24 to about 3,000 crore rupees, but the silver lining was that the company halved its losses to about 70 crore rupees and turned EBITDA positive. While the audio segment remained pretty much flat in H2 FY24, Boat still holds about 26.7% market share in India's wearables markets. Sources also indicate that a consolidation is underway in the sector, with Boat seeing a sales boost during the Diwali season after several sluggish quarters. But then why the confidential way? Well, this confidential method was introduced by SEBI in November 2022, allowing companies to privately submit their IPO documents, keeping sensitive business details under wraps while evaluating market conditions. There are 3 key reasons why companies take this route. First, it helps them protect competitive information. So if a company decides to delay or cancel its IPO, its financials and business strategies remain undisclosed to rivals. Second, it provides greater flexibility in IPO timing, giving 18 months to launch their IPO after SEBI issues their observations, in comparison to the normal route where you have about 12 months to file. And the third is that it shields them from public scrutiny, helping them avoid any speculation, investor concerns, and potential legal challenges. And all of these make sense for Boat, considering this is their second attempt at going public, especially because this is the first time when they attempted to go for an IPO. Apart from the market conditions, there were concerns about its China manufacturing and the links to China, and its rise in business after the ban of Chinese goods by the government had been applied. We saw Swiggy also go through this route and take up this strategy of filing confidentially. So we will be watching out for how the Boat IPO plays out.
Okay, Rachna, thank you so much for that and giving us the latest update on this front. But let's move on, and changes from the FTSE's India March 2025 semi-annual review will be announced today, with adjustments scheduled to take place on 21st of March. Vivek is joining in with us to give us details on this one. Vivek?
Expecting the announcement to come post-market hours today, given the fact that the FTSE, based out of UK, will come out with the list as far as the semi-annual index review is concerned. March 21st is when the adjustments will take place. Which are the stocks? 10 inclusion candidates. So far, IIFL Capital, remember, has made these estimates. So far, not anticipating any exclusions. IIFL Capital, the alt desk, expects 10 stocks. Which are the stocks? 361 WAM, Blue Star, Fortis Healthcare, Apar Industries, Crisis, of which Fortis is expected to garner close to $65 million worth of flows. Other set of stocks include Bajaj Housing Finance, BSE expected to see flows of close to $76 million, Keynes Technology, Premier Energy, as well as IndusInd Bank. So these 10 stocks could make the cut within the FTSE, the all cap index or the all world index, and that'll be something interesting to track come Monday.
Interesting to track come Monday. Thanks so much for that, Vivek. But earlier today, we spoke to Vetri Subramaniam, Chief Investment Officer at UTI AMC Management Company, to get his take on the valuations in the market and the pockets of opportunity that they see. Let's listen in to what he had to say.
We've been concerned about market valuations for a fairly long period of time. The sell-off, which is sort of, accentuated right from September, I would say, breaking it up into the components that you said, as far as the large caps are concerned, we would, the way we look at our consolidated equity valuations, I think it's back within the fair value territory. It's still not cheap, but it's within fair value. Where we still find the valuations in aggregate expensive is really in the mid and small caps. Particularly, I would highlight mid cap valuations. These are at a record premium to their own history and at a record premium to the Nifty. So we would be slightly uncomfortable in that space. Same holds for the small caps as well, though the small caps have seen a little bit more of a sell-off, but in aggregate, still not something that we are particularly excited about. I would still point to banking and financial services as the sector where I have the maximum amount of comfort. Into the sell-off, we are seeing some assorted pockets, in autos and in maybe things like power, which are starting to look more reasonable. But if you ask me to, name a sector, this is the only one where I'm still very, very comfortable. Outside of that, it's more about stock selection.
Okay, on that note, we're going to slip into a short break, and after the break, we'll come back, talk about gold prices that have come off record highs on profit-taking. Details on the story on the other side.
Specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is, before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live.
Welcome back. Thanks for staying tuned to Business Lunch on CNBC-TV18. Now let's shift focus to the commodity space. Gold prices pulled back on the back of profit booking after hitting record highs levels yesterday. Manisha Gupta is joining in with us to give us more details on this one. Manisha, finally we're going to see some respite in gold?
Well, can't be for too long because most of the factors that we're looking at are still supportive for gold. But well, yes, we have seen an all-time high of 29.55 in the gold prices yesterday, and currently trading around 29.30 or thereabouts. So we've come off by nearly $25 to $30 from all-time highs. For the Indian markets, yesterday we saw an all-time high of 86,500. We are trading at around 85,800 or thereabouts. So 700 to 800 rupees per 10 grams has been shaved off from there as well. But the gold prices clearly continue to be in support because we are looking at prices, we are looking at support from the global central bank buying, the global trade war, the tariffs also seems to be leading to some uncertainty and buying because of that as well. And then the US dollar index has come off its highs, also supporting gold prices. The reason that you're looking at a bit of a profit taking right now in the overnight markets, that is one, because gold had seen 9 days of constant all-time highs. So there is a bit of an overbought situation on charts there, and that has led to some decline. But markets will tell you that there is opportunity buying that you should be looking at. If you look at the gold and silver ratio, well, that's at really near all-time lows, and the markets do see an opportunity in buying in gold because of that as well. The second thing really is about the kind of buying that we've seen in the US markets, where US really seems to be buying physical gold from Singapore, UK and various European countries. That in turn would also be supportive. We have seen gold prices gain up by 28% in the last year, 14% up in this year as well. And most banks and brokerages believe that we will continue to see higher highs, at least in the first half of this year. And these opportunity buying levels will continue to be seen as well.
Okay, Manisha, thank you so much for that. But on that note, let's move on. And earlier today, we actually spoke to a China expert, Andy Rothman, to understand the dynamics that are shaping up in the ongoing tariff war between US and China. He said that the tariffs will only have a modest impact on China since it has turned less export-driven. He said that a lot will depend on whether China will be able to boost a domestic demand and restore confidence among entrepreneurs with regulatory reforms. He also spoke about the turnaround underway in the Chinese market. Listen in.
I have to wait a little bit longer to see if this is the real deal, but I think odds are that it is. And I say that because things have been getting worse in the Chinese economy, and Xi Jinping is acknowledging that. And what we're seeing now is yet another step in a process of course correction towards pragmatism that's really been underway since September of last year. So it's not just a one-off thing if we talk about the February 17th meeting between Xi Jinping and the tech entrepreneurs. It's part of a process. When confidence comes back that the regulatory environment is improving, remember that there's a tremendous amount of liquidity sitting in the Chinese banking system right now. Family bank deposits, and this includes a lot of very small businesses, those bank deposits have grown by almost 90% since the beginning of COVID. That's a net expansion in savings of almost 10 trillion US dollars. So to put that in context, that's more than double the size of Japan's GDP. So when people start to get their confidence back, they'll start drawing down on that savings. And we could really see spending take off, hiring take off, and possibly the domestic market take off as well.
Okay, on that note, we're going to sip into a very short break, viewers. And as we sip into the break, here's some good news coming in for you all. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on the screen.
On YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. HSBC presents CNBC TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization and show.
Welcome back. Thank you so much for staying tuned into Business Lunch on CNBC TV18. Now let's move on. And the US Senate on Thursday narrowly voted to confirm Kash Patel as the director of the FBI, the country's premier federal law enforcement agency that is there. Now Patel has was confirmed on a margin of just one vote in the 100-member Senate. His confirmation followed persistent doubts about his qualifications and concerns that he will go after President Donald Trump's advisories. Now, a Trump royalist who was and has fiercely criticized the agency, the Indian origin Patel will inherit an agency gripped by turmoil since Trump's return to power in January. Now, moving on to some national news updates, a flag meeting between India and Pakistan is underway. Amid several cross-border firings seen recently, the two countries are expected to discuss the recent incidents that took place in the Pooch area and Jammu and Kashmir. In the meeting, which is underway near the line of control, the focus of the meeting is to address ceasefire violations, addressing Pakistani's military's activities along the LOC and prevention of cross-border infiltrations. And on that note, we're absolutely out of time on Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, you have Midcap Radar.
Events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Mariah has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, you know, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Mariah back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Mariah Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanat.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And
It is Friday. It's time for Midcap Radar. We are counting down to the end of the trading week, and I'm presuming that the bulls will also be counting down for the end of the week. I'm Hormas Patakia. You're watching us live from the CNBC-TV18 Motilal Oswal studios. With me is Vivek Iyer. Vivek, good afternoon. Then after what has been a directionless, lackluster, uninspiring week, we are finally seeing some action, but that's not the action that the bulls were hoping for.
You're absolutely right, Hormaz. The Nifty struggling to defend the crucial 22,800 mark. Focus on the mid-caps. Last couple of trading sessions, they've bounced back from intraday lows. But today, haven't seen that pullback as yet. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stock slip again with mid-caps feeling the pressure. Auto, healthcare and energy are the big drags. Metals buck the trend.
JSW Energy surging on the back of a brokerage upgrade. The stock has rallied nearly 5% after Morgan Stanley issued an overweight rating with a price target of 545 rupees, expecting a compounded annual EBITDA growth of 24% till FY28.
The open offer for Religare Enterprises, triggered in September 2023, has finally concluded, with the Burmans emerging as promoters of the M-Battle NBFC. The stock gains in relief.
Macquarie upgrades L&T Technology Services to an outperform rating and raises its price target on the stock to 63.50, citing a steep discount in valuation to its peers. The stock surges over 4%.
Samvardhana Motherson under pressure after key customer Mercedes-Benz gives a muted CY25 outlook. Stock down nearly 4%.
The price action that we have seen over the last week, or possibly over the last 8 to 10 trading sessions, and even today, is reminding me of this ad from Fevicol, where the bulls are desperately telling the index pakde rehna, chhodna nahi, for that 22,750, 22,800 zone, and that is exactly where the index is meandering around for a better part of this trading session as well. The broader markets were outperformers yesterday. Can't say the same in today's session, particularly the mid caps. The mid cap index is now down almost 1.25%. The small cap index was fairly resilient until almost an hour ago, and it almost seems like that, but it's still extending its losses as well. 0.6% lower for the small cap index. So far, both the indices are still in the green for the week. But what are some of the big movers in the broader markets? Vamakshi is joining in to tell us the mid caps that are moving around in today's trade. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. After 2 days of outperformance that we saw from the broader indices, the mid-cap index has finally succumbed to the bears. When you look at the top losers today, Ipca Labs is the top loser as far as the mid-caps are concerned. That stock is down nearly 5%. Biocon is another counter that is reeling under pressure. We also have Muthoot Finance down nearly 3.5%, and Sun Pharma Advanced Research, that is Spark, is also down somewhere around 3.5%. Mid-cap IT stocks in particular seem to be reeling under a fair bit of pressure as well. Cyient is trading at the day's lowest point, down nearly 6.3%. Oracle Financial Services also down in pressure, around 4%. Coforge and Persistent Systems are some other counters that are declining in trade today. But on the flip side, when we look at the metal index, that is bucking the trend. Nalco is up at the day's highest point, up nearly 4%. SAIL, Welspun Corp, as well as Jindal Stainless are counters that are surging in trade as well. Apart from that, let's also look at the stocks that are gaining momentum in an otherwise weak market. Vijaya Diagnostic, that stock has surged by almost 8.5%. JSW Infra is another counter that is up nearly 7% in such a weak session. Godrej Industries also, was up yesterday, continues to be in an upward momentum today as well. And L&T Tech Services also seeing a good uptick of almost 4%. And lastly, let's look at some moves that are being driven by volumes. On the upside, we have Century Ply, that stock is up 7%. Maharashtra Seamless is another counter that is seeing good gains today. Asahi India, on the other hand, is down nearly 4%. And CIA Automotive also under pressure. The company reported its numbers, missed estimates, the stock under pressure as of now.
Thank you so much, Vamakshi, for joining us and giving us a sense of the moves that we are seeing across the broader end of the markets. Let's move on and let's welcome Hemen Kapadia from DR Choksey FinServ for a technical check on the market. Good afternoon, Hemen. Where do you see the market currently? Nifty struggling to defend the 22,800 mark, and mid-caps reeling under pressure today.
A very good afternoon, Vivek. Thank you for having me on the show. Like you mentioned, 22,750, 22,800 is what the Nifty has been clinging on to multiple times. Expiry week, the holiday, 22,500, 22 is the next level. I still feel that we might hang on to 22,750, 800 till the expiry. Vivek.
Himain, good afternoon. Thank you for joining in. You know, you mentioned your XT, at least until expiry, you go on to 22,750, 22,800. But if we go below that, just in case, what happens next?
22,522 hormones. And then I would request one thing. The mid-cap radar should become a small-cap radar. But anyway,
So in that
You wouldn't
case,
want that.
in that case, Himain, which are the mid caps or the small caps or even the large caps that you're recommending this afternoon?
okay, markets are too oversold, Thomas, frankly speaking. So we're trying to turn around, which is not yet happening, obviously. Two stocks. Firstly, a buy call on ABB at 52.40. Stop loss 51.40. Target 54.40. Deeply oversold, positive divergences, crossover buys by the mechanical indicator. The other one is a bit more safer, but an underdog. Asian Paints, positive seen on the daily as well as the weekly. Buy at 22.40. Stop loss of 21.70. Target of 23.80. It's trying its best, deeply oversold, rounding bottom forming. Things are improving on the weekly chart also, almost.
Thank you so much, Himain, for joining us on Mid-Cap Radar, and hope to see you once again soon. You have a good weekend. Let's now slip into a short break. The management of Mahindra Lifespace Developers joins us on the other side. Stay tuned.
Under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on the ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at minimalists, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happening.
Welcome back to Midcap Radar. Well, the sell-off has intensified, but we have a special management. Amit Kumar Sinha, MD and CEO at Mahindra Lifespace Developers, joins us now. Good afternoon, sir. Thank you so much for joining us. Mr. Sinha, first up, give us a sense of why exactly you're going ahead and doing this fundraise, close to 1,500 crore via the rights issue. What will be the total equity dilution? What will the funds be used for? What is the total debt? And if you're using it to reduce debt, what will be the debt post-reduction?
Yeah, thank you for having me. You have multiple questions. So we had planned to scale our business. In our previous discussion, we talked about that we're trying to grow our business significantly faster than what we have done in the past. Our aspiration is 5x in 5 years. So that requires funds. And as you know, Mahindra Lifespaces has been designated as a growth gem for Mahindra and Mahindra Group. So this is in the same direction that we need funding to support our growth aspiration. The funds will actually be used partly to pare down the debt for the time being, because we'll not use all the funds immediately. We'll use it over a period of time. And also for our land GDV accumulation. We have done a tremendously aggressive job in the last 11 months of this financial year, reaching almost 18,000 crore of GDV acquisition already. So we want to maintain that growth momentum, but in a very, very prudent, financially accretive way. So this rights issue allows us to pare down the debt in the short term, but also allow us to fund for the growth capital. Our operating cash flows are healthy, so they will also continue to contribute to that. Your second question was, I can answer the equity question.
Yeah, it was on debt, which you answered that, yes.
Mr. Sinha, good afternoon. You mentioned you want to use part of those proceeds to pare down your debt, but the primary intention is to continue, you need funding for growth. If you could share with us the mix as to how much percentage of that fundraise do you plan to use for growth and to pare down debt as well?
So right now, I would put this around 50-50, right? Because we are not going to use all the funds immediately to put into land or GDV. So I'll put down, reduce, we have roughly 1,300 crore of debt. We'll not touch the short-term debt, but the long-term debt on the residential side, we'll try to use most of it and pare down the debt. But I think and the remaining is available as a dry powder for us to use for GDV acquisition, but prudent GDV acquisition, not just, hey, we have funds, let's acquire anything that makes sense. But we'll be going to be very careful about it. So 50-50 is the short answer to your question.
A two-part question as a follow-up to that, Mr. Sinha. How much is the debt currently, both short-term, long-term, on the books? And if you mentioned prudent GDV acquisition, is there something that you have zeroed in on currently in a particular geography? If you could share more on that.
No, so overall debt, we have roughly around 1,300 crore. So that's going to be which is short-term as well as long-term. And then we have a lot of projects lined up for investment, a combination of society redevelopment, given we have done some very marquee redevelopment projects, one in Mahalakshmi just last week, early this week announced, we've done in Lokhandwala. So we're getting a lot of inbounds for society redevelopment, but they don't require too much capital. But then we have joint development, which require a decent amount of capital. And then outright, especially in Pune and Bangalore, that required sufficient amount of capital. So we're going to be allocating funds based on the quality of the pipeline and the closure ratio that we see with these deals coming through.
Mr. Sinha, any plans in the future to monetize, the rental or the annuity income business? You do have Mahindra World City, Jaipur and Chennai. Would that be an avenue that you look at, either a REIT or an IPO for that particular arm?
those assets are quite different from what the REIT profile looks for. See, REITs are more suitable for annuity income generating assets, and our IC businesses have mostly one-time lease premium. So it's like a sale. It doesn't generate a lot of like rental income over the year. So they cannot be monetized the way a commercial real estate can be monetized. However, our monetization includes outright closure or sale of land assets in those locations. So we have brought 3 locations already to the market: World City Jaipur, World City Chennai, Origins Chennai, where Sumitomo had invested. But there are 2 other locations: Ahmedabad, Origins Ahmedabad, and Origins Pune. Those are available for monetization. Our goal is to bring them to the market at the earliest.
Mr. Sinha, the other question, you just briefly alluded to the Mahalakshmi project. What is the GDV there? What is the timeline there? And so when will the project complete? When do you start revenue recognition? And last time you spoke to us, you told us about the second cross lane project in Lokhandwala in Andheri. So what is the update over there? Is that on track? We believe last time around you had told us that revenue potential of close to 550 crore.
Let me just, maybe I'll repeat that. So let me just cover the Mahalakshmi, then I'll cover the Lokhandwala. Mahalakshmi, the GDV is 1,650 crores. So it's a mid-sized project for us, but it's going to be a marquee project for us because this is our first project after a long time in, let's say, the premium neighborhood of South Bombay, around South Bombay, right? It's in a partnership with Livingstone Infra. So we're going to work very closely together to create a marquee product. The approval process is just starting because it's in a way society redevelopment kind of a project. So it will take another year to 15 months to get the project launched. And then from that point onwards, we put RERA date of 5 years, but typically we target 4 years for the project to complete, and where you realize all the pad, etc. that you just mentioned. So that's the life cycle of Mahalakshmi project. The Lokhandwala project is 1,000 crores. It's a slightly smaller, but it's a very nice location. We're really excited about that. That project will also go through the society approval and PAAA agreement, etc. Which will take another year to 15 months. Then we'll launch, and then it will take another 5 years for it to complete. We'll try to do it sooner.
All right, Mr. Sinha, thank you so much for spending time joining us today. Wish you good luck for the rights issue and look forward to speaking more on this platform. That is the management there of Mahindra Life Spaces approving a fundraise through the rights issue process. Take a short break, but before that, here's some good news for our viewers. India's business news leader is now just a click away, introducing the CNBC-TV18 all-new app, where we get access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app right away from the Google Play Store or on the App Store.
People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think that trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. It's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Welcome back. The Nifty is now below 22,750 and Mahindra is still the top loser at the lowest point of the day, 6.5% lower now on the stock. Also among the top losers include Adani Ports, Bharat Petroleum and Tata Motors. But speaking of Tata Motors, another Tata Group stock, Tata Steel, where its MD and CEO TV Narendran has called for a strategic policy to address the risks which manufacturing companies are facing due to the global trade shifts. Now, in an exclusive conversation with my colleague Shivani Bajaj, he talks about the US tariff impact on the steel sector and concerns around cheap Chinese steel imports. Listen in.
Most countries and geographies are going to look out for themselves for sure, right? So we as a country obviously need to look out for ourselves. We also need to take a longer term view because supply chains are getting optimized differently. Earlier it was just getting optimized on cost. Now it is getting optimized looking at the strategic value of manufacturing value chains and other value chains. So I think we need to look at it from that perspective. The tariffs in US will impact us directly and indirectly. For whatever we export as a country, it matters what the tariffs are. As Tata Steel, we also export from Europe to the US. So there is a direct impact from that point of view. The indirect impact is whatever doesn't go to the US ends up somewhere else. So which will have a bearing on international prices and it will have a bearing on the margins in India. So I think one needs to really look at this strategically and have a policy which addresses the risks that manufacturing companies and other companies are getting exposed to because of this situation.
Well, sir, you spoke about, the concerns that the steel industry particularly has, and on those lines, what is the status of the anti-dumping duty that the industry has constantly been asking for? What is the timeline? Do you have any sense?
So I think we've represented to the government for some safeguard duties. We've had a lot of conversations with the governments and they're looking at it very seriously. I think there were a number of queries which we've answered as an industry, as Indian Steel Association. So we're hoping that we will have some news sooner than later because this is a problem which has been going on actually for almost 2 years. China has been struggling to recover and has been exporting more than 100 million tons of steel, and its impact is being felt. So I think, and now with the actions being taken by the US government, the situation has become even more dire.
Yeah. So, is there a price difference? Can you give us a sense about the price difference between the Indian steel and the import steel that we currently have?
So I think there are two things we need to look at. If you look at it from a cost point of view, Indian steel is competitive. India is one of the best places in the world to produce steel, and Indian steel industry, which has invested significantly in the last 10 years, has built very modern and efficient steel plants. The different issue is at what prices are people willing to sell, because if you look at the profitability of the Chinese steel industry, it's pretty much negative. Most steel companies in China are losing money. But in India, the steel industry is largely private sector dominated. So unless it's profitable, it doesn't make sense for the steel industry to invest in new capacity. And steel industry has been at the forefront of private sector investment. So I think it's a matter that we need to take a longer view. India is blessed with a lot of iron ore, and there's a great opportunity to convert that iron ore into steel and make it in India.
Well, a very interesting conversation there with Tata Steel. And remember, the metal index is one of the few indices that are doing well in what is essentially a very weak trading session. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है, और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए। फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं, कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं,
Hello, good afternoon and welcome to your stocks on CNBC-TV18, coming in live from CNBC-TV18 Motilal Oswal Studios. Thank you so much for tuning in, and I'm Vinny Motiwala. We'll take you and solve all your stock-related doubts with our experts today. And joining us today on the show, we have independent market expert Shaina Mukaddam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to solve all your stock-related doubts. And markets, nothing pretty coming in on that picture as well. So Vaishali, today, in terms of the markets, 22,700 now. That's where the Nifty is at. It's below the 22,800 level today. Levels to watch out for, Vaishali.
Yes, hi, good afternoon, ladies. So yes, market has become quite at ease actually. It's unable to make a trend. Right now, I would say now 22,720, that has been the level which has been tested time and again, and from there on we see a bounce. But today, I think, Reliance is getting into some selling pressure once again. It is overall the pharma, the IT pack, which is showing some weakness. So we need a good selling coming from almost all frontline stocks, which would trigger a further sell. So right now, let's wait and watch. The bias is a bit corrective. There is a word of caution. 22,700 is now the final level to watch. If that is what we break, then we are seeing a downslide, or else we would just say it's a sideways move and wait and watch till 23,000 is the resistance.
Okay, sideways moves, 23,000 is the resistance. Keep an eye out on those levels of there. But on that note, let's get started with all those stock-related queries. The first query for today, we have Mitesh Parmar, who's writing to us from Rajkot, holding 100 shares of Titagarh Rail, and this is at a price of 1,600 rupees per share. Currently, the stock is halved almost. 784 is what it's trading at. Now, he wants to know if he should continue to hold this or look to sell this at the current levels. Shaina, let's start with Titagarh Rail. We have seen that, railway stocks, a lot of the coverage systems are coming into place. A lot of orders these companies are getting. But we've seen the stock actually start seeing a fall, especially coming in from last June sometime. What is the outlook overall on the fundamentals for Titagarh Rail, and what would you advise the viewer to do?
Well, I would advise that he continues to hold. You mentioned order book. So order book is very good. They have got more than 13,000 crores in hand of order book. So that is not the issue. The issue that we are seeing in the last, say, 3 quarters, 9 months, is that the execution has not been able to keep up to the mark, and we are seeing disappointing numbers. And on back of it, if you see, even the stock price has corrected by more than 40% if you take it in over a couple of months. So all in all, the investor has actually, it's difficult to make money in such a combination of events, but I would believe that at the current level, it makes sense to continue to hold because as we know that there is a absolute commitment by the government that there is going to be an increase in capital expenditure over the next couple of quarters, and whatever slowdown we've seen in terms of execution, in terms of the slowdown in Vande Bharat trains, other trains, and also the safety measures for railways, all those things, orders will pick up and execution will pick up. So I think one can continue to hold, and you can hold it with a stop loss if you like, but otherwise I would say it's slightly risky, but hold.
Slightly risky, but hold. Execution has been a concern in the last few quarters. So we'll watch out for that, and if execution picks up, maybe we could see some bit of an improvement here. But Vaishali, on the technicals, what's your view coming in? Because almost the high for Titagarh Rail was around 1,800 levels, right? And the viewers bought it at 1,600. So it's near those peak levels. Now it's halved. What is your view on the technicals?
So I would say, yes, there is very good retracement taken place, and I think the stock is already in the oversold zone. But it's very hard to tell exact support levels. But I would say for a longer term scenario, one should start, in fact, adding more if the stock were to go further down towards 700 levels. Add more to average out your cost and wait for a turnaround, and you'll get your good returns.
Okay, wait for a turnaround and continue to hold the stock. That's the view coming in from both our experts. Let's move on to the next query for today. Shubhankar is writing to us from Thane. He's holding 16,000 shares of Central Bank of India. This is at a price of 49 rupees per share. Wants to know the long-term view on this one. He's ready to hold this for 3 years or more as well. What should he be looking out for now? And should he add more stocks at the current level as well? Shaina, what's your view on Central Bank of India? Is this one of the stocks that the viewer should hold, or maybe, get out of it and look at some other name, even though he has a long-term view?
Well, there are a couple of positives as well as negatives. The positive being that the government has recently said that they are going to allow some of these 5 PSU banks to raise funds through QIP. Now, about 2,000 crores each. The government has about 93% equity holding in Central Bank of India. So, while, on the operational front also, things are okay. Valuation's not expensive, 1.2 times price to book. Everything seems to be okay. But that would not be my top pick in the PSU space, but for the fact that we don't know exactly who is going to pick up the stake, if at all the government disinvests, and whether it will be a stronger hand or not. So my best bet would be either you switch to a strong large cap bank, or you hold with a strict stop loss, because this is going to be news driven in terms of stock performance.
Okay, keep a stop loss specifically because it is mainly right now news driven is what Shaina is saying, and maybe we could see some bit of a move on that front. Vaishali, your view on the technical front for Central Bank of India?
I think technically when I'm looking, since the view is for a longer term period, I think it's quite well placed. I don't see any worry in this stock, because once you see when PSU banks start picking up, I think this stock can again go towards 65-70 levels. So according to me, it is a hold.
Okay, hold coming in for Central Bank of India from Vaishali. Let's move on to the next query for today. We have Prasanna Chidambaram, who's writing to us from Chennai. He's holding 18 shares of Berger Paints, and this is at a price of 618 rupees per share. He's holding them since 2021. Okay, so now he's a long-term investor. He wants to know if he should continue to hold or look to sell this one. China paint sector and paint stocks overall also have been under pressure. We're not seeing that pickup in momentum, demand trends actually shaping up for the paint sector as a whole. Berger Paints, as your view, what should the viewer do now? Hold, sell?
Well, the year again paint sector was also disappointing, as well as you saw the numbers also. They have shown an increase in volumes, but at the cost of, softer prices. Raw material prices also were pretty elevated. So we have seen quite a disappointment in numbers in the past. Having said that, I think with the government having left more money in the hands of the middle class, taxpayers, discretionary spend and the paint sector is likely to show some bit of momentum going forward. If there is a stabilization price and volumes are able to move up, I think the remaining next couple of quarters should be better. The stock having corrected, I think valuations are not cheap, but given the quality of management, I would believe that one can hold it for now, keep a stop loss, and then look for a bounce to switch.
Okay, and Vaishali, what's your view coming in on Berger Paints? Is a suggestion of even averaging a good bet right now for Berger Paints, or they should just hold or sell?
So I think according to me, technically, if I were to look at the stock, the worst is really over. And right now it is at 489 level. So if one has to average out, I think 470 is a good ideal level to get into. And my technical range comes to around 470 as support, and 460 was the low. I mean, that's what we had seen. And 520 is the near-term resistance. So one can have a relook at 520. But according to me, I think both Asian Paints, Berger Paints, both look quite okay. I don't see much of a corrective move coming from here on.
Okay, surely watching out for that. But let's move on and to the next query for today. We have Swapnil, who's writing to us from Pune. He's holding 38,000 shares of IRB Infra. This is at a price of 51 rupees per share. Wants to know if you should continue to hold or look to sell this one. What is your view coming in on this one, Shaina? For January, the toll collection seemed like it was up for 19% for that month, and the company has also highlighted how momentum is expected to continue. So IRB Infra, what is your view coming in? Do you think the view should continue to hold this?
Yeah, I believe that, at current levels, it makes sense to continue to hold. As you mentioned, they are showing very good momentum. It's been over the last couple of months, actually. They've shown a good jump in the toll revenues. And, with more than 34% market share, they are the largest in the sector. And they've got a big order book, huge order book. Actually, their order book is around 32,000 crores, which is actually, even if you look at the execution over the next 2 years, the management has indicated it will be more than 10,000 crores. So basically, the upside is there. The balance sheet, while there is debt on the books, quite high, but I think it is pretty stable and they will be able to manage the growth without dilution. So I would say that an investor can continue to hold.
Okay, investors should continue to hold IRB Infra. And your view, Vaishali?
So I don't see any problem with this stock. Of course, like all stocks, this too has seen good corrective move. But when I'm looking at the weekly as well as the daily chart, I think 45 has been the strong base. So as long as 45 levels are held on, I think the stock can bounce back to good levels. And if not, I mean, these are the opportunities when stocks really correct like this. These are the opportunities to average out or keep adding these stocks. So I would say just stay put. 45 is a level to watch. The view gets negated if 45 is broken, but till then, hold on and add more.
Okay, hold on and add more. That's a view coming in from Vaishali. But on that note, we're going to slip into a short break. And as we slip into the break, here's some good news coming in for you. India Business News Leader is now a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or you can just scan the QR code on your screen.
नोच पर फीकल पॉलीफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 एमपीएम प्रति 100 ml से ये कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is, before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled.
Welcome back and thanks for staying tuned into your stocks on CNBC TV18. We still have our experts with us to solve all your stock-related doubts, Shaina Mukaddam as well as Vaishali Parekh. Let's move on to the next query, ladies. This one is coming in from Sandeep Reddy. He's writing to us from Telangana. He's holding 350 shares of Swiggy. This is at a price of 565 rupees per share. Obviously, the stock is currently at 364 rupees per share. Wants to know the long-term view on Swiggy and also wants to know whether you should currently look to hold or sell at the current levels. What's your view coming in on this one, Shaina? You know, given that it's a recent listing, Zomato has been there for a while, but with Swiggy versus Zomato, what should the viewer do right now?
Well, I would suggest it's better to be with the market leader. So Zomato would be my pick. So I would suggest switching to Zomato. In fact, in an earlier segment, I believe Mangalam has explained very nicely how these guys are losing market share to some of the QSR segments, companies, and they're seeing some softness in the GOVs going forward. So also, I think in quick commerce, there is a lot of competition and this is affecting the margins, which we saw in the third quarter, and that is not likely to change in the near term. Also, being a new listing, we have that overhang of potential selling over the medium term from original investors. So what I would suggest is to switch to Zomato or to some other stock, but I would exit.
Okay, you would exit Swiggy. That's the word coming in from Shaina. Vaishali, I know you don't have much on the technicals to judge it, but any view on Swiggy?
Well, I think it is showing signs of reversal. So I would say to those who are holding, keep a near-term stop loss of 340 and wait for a target of 440. This is the level where we can have a relook and compare it with Swiggy and then take a call. But for now, not in a hurry. Hold with a stop loss 340 for 440.
Okay. Next query for today is coming in from Nikita Nagpal, who's writing to us from Mumbai. She's holding 200 shares of Newgen Software Technologies. This is at a price of 1,400 rupees per share. Currently, the stock is at 976 rupees per share. Wants to know whether she should continue to hold or look to sell this. Your view on this one, Shaina?
I would say switch or exit. That would be my view. Here the valuations are extremely expensive. It's a smaller IT company, small cap, and valuations, if you look at it, EV by EBITDA is 30 times. And if you actually, correlate it with the numbers are really disappointing. If you go with the last quarter numbers, they're seeing a slowdown in the India business. So I would say you should exit. Better to be invested in some large cap IT as of now.
Okay. Better to look at large cap ITs and, get out of the stock is the word coming in from Shaina. Vaishali, your view on this one, because in the last 1 month, we've seen the stock specifically see a correction coming in. So does it make sense to hold this average sell? What's your view?
So I would say, of course, when there is a bounce back coming in, these stocks are going to take a while to really show some momentum. So I would say go into better stocks like probably, why not TCS, Infosys. In fact, even Keynes Technology, from what we are seeing today, it's showing a lot of strength. So I would choose these stocks.
Okay. Maybe you would look at some other names coming in there. But let's move on to the next query for today. We have this query coming from Rohit Kumar, who's writing to us from New Delhi. 200 shares of Raymond is what he's holding. This is at a price of 2,065 rupees per share. Since September 2024 is what he's holding the stock. Wants to know for the long-term perspective, your view on Raymond. Shaina?
Well, yeah, unfortunately, the investor bought it just after the demerger of the lifestyle from Raymond Limited. But nevertheless, from current levels, I believe in terms of valuation, if I compare it with other real estate companies, now this Raymond Limited has both the real estate as well as the engineering as of now. Real estate is expected to be demerged pretty soon, next couple of months. They have got the approvals. Most of the approvals are in place. So there you will have good value unlocking, because in terms of the business potential, they have got huge land parcels still at Thana, which actually entity is estimated to generate around 7,000 crores of revenue. They have got other 4 tie-ups, joint ventures in Mumbai for redevelopment, which is quite a big, which is a sizable revenue potential over the next couple of years. And in terms of valuation, it is below, it's around 9,500 crores of market cap. So even if you look at a revenue from real estate, just real estate, around say 2,500 crores, which is absolutely doable in a year, I believe that valuations look attractive and value addition. I mean, you will have some value unlocking with the demerger. So you hold as of now, and in fact, I would say you could also, if you see any dip, you could also add and average the cost.
Okay, that's the view coming in on Raymond. Maybe some value unlocking is also what we could watch out from the real estate side, is the highlight coming in there as well. So could continue to hold. Vaishali, your view on Raymond Limited. What should the viewer do right now?
Well, we have seen good erosion in this stock as well. And I think currently it is at a very good support level. So I would say take 1,300 as a support, and I would strongly advise that average out at these levels, because in all likelihood this will retest the levels of 1,900 to 2,000 for now.
Okay, let's move on to the next query for today. We have Vignesh Iyer, who's writing to us from Telangana. He's holding 75 shares of Trent at a price of 7,301 rupees per share, currently making a loss on this one. Wants to know if he should continue to hold, sell, average. Your view on this one, Shaina?
I would say hold, do not average as of now, simply because the valuations still remain expensive despite the correction. And we've seen some bit of slowdown coming in the last quarter. Of course, the growth, if you look at it on an overall 9-month basis, is very strong in terms of both revenue as well as profitability. So over a longer term period, maybe 2 years, 3 years, valuations will start again coming back into looking interesting and attractive. But at the same time, I think it will go into a phase of consolidation. They have a lot of initiatives, new store addition, so I would say hold with a long-term view.
Hold with a long-term view. That's the word coming in from Shaina. On the technicals, Vaishali, Trent, what should the viewer do? Last 6 months, yes, we've seen a bit of a correction like Shaina was mentioning, but valuations still seem expensive. That's a concern she's highlighting. Charts indicating anything different?
So chartically also, of course, this has seen good corrective move, but I don't think this is the end of the correction. If market were to correct further on, or if the stock was to see further weakness, this is likely to go towards 4,500 levels. And in my opinion, that would be the level that one can add, because the buy price is way too above. So I would say average out at 4,500 levels.
Okay, 4,500 levels is what you're expecting, and one could average out at that level because the buy price is higher. That's the view coming in on Trend from Vaishali as well. But okay, that was the last query for today, ladies. So thank you so much, Vaishali as well as Shaina, for joining with us on the show, and a happy weekend to both of you all as well. But with that, viewers, we're going to wind down this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Up next, your closing bell.
Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go. Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show.
To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up a bit mixed. Taiwan index is holding on to gains of 0.6%.
If a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs.
On the Nifty, we need to break above the high of 23,050.
So we do see better times ahead for Butterfly.
About 0.2 lower on the Nifty, about 0.5 lower on the 0.3 lower on the Nifty Bank.
Large caps are concerned, we would, the way we look at our consolidated equity valuations, I think it's back within the fair value territory.
We as sector are required to grow if the Indian growth story has to continue.
That means almost all consumers in China are either entrepreneurs or work for an entrepreneurial firm.
The mid-cap index was actually up more than about 0.5%, and now it's down nearly about 400 points.
Exports are growing meaningfully at 15 to 20% rate.
The FTSE, based out of UK, will come out with the list as far as the semi-annual index review is concerned.
What has been a directionless, lackluster, uninspiring week, we are finally seeing some action.
Good afternoon, hello and welcome to Closing Bell. We're coming to you, of course, live as always from the CNBC-TV18 Motilal Oswal studios. And Surabhi Upadhyay with me in the studios today is my colleague and friend Nigel D'Souza. But beyond the cheer that we have, because it is Friday, market's not a very cheerful place today. It's disappointing for the bulls, and it's also disappointing because that mid-cap hope that was building up in the last couple of trading sessions, that seems to have fizzled to an extent today.
Well, not too bad, Surabhi. Not too bad, I'll say, because this Friday is at least okay, compared to what we were seeing last Friday.
Oh, that was a full sell-off.
And if you'll say last 12 sessions, the Nifty has ended lower by, 11 out of the 12 sessions. But still, it's not too bad. And I'll say that because in even today's trading session, the Nifty went to that crucial support, which is 20,720. That's the level we went to. And this level is very, very important. That's the crucial level that you're looking at. Otherwise, you could easily see another 4% that gets taken off from the Nifty from here. And we started with a single support. Then we called it a double support, triple, quadruple. Now it's quintuple. Because today as well, we have gone to that mark. So in the last 1 month or so, The quintuple lows is what we're looking at. Quintuple times we have gone to that particular mark and we have bounced out there. And the bulls, they're coming into fight at that mark, Surabhi. And stock-specific action continues, right? So the Nifty is down 150 points or thereabouts. But for the week itself, both the mid as well as the small cap indices are up close to under 1.5%. So there is some pullback. And select stocks, I think you had pointed out in the morning about Religare. The stock has now moved to the high point of the day. So the news came out, but it's building on to gains as we speak. The auto space, that's a space that's very, very nervous with regard to tariffs, with regard to reduction of duties, and how much can it earn, can it hurt some of these automakers. But, if it doesn't play out, those fears don't play out, I'll tell you what, this could be one of the best buying opportunities. Mahindra & Mahindra, I think from the top, the stock has lost 15 to around 20%. So that's one of the big, nervous stocks for this week itself.
Oh, yeah, and big volumes on M&M on this decline today. And M&M itself has been testing its 6-month trading lows. And we're very close to those levels of around 2,700 thereabouts on Mahindra & Mahindra. Pull up a 6-month chart on M&M. Let's see, because today the volume action, price and volume action is pretty significant on the downside. So that's the breach of the 6-month zone. But let's see, there's still an hour to go. Whether it's a decisive breach or not, we'll ask the technical experts as we go along. But it's a weekday. There is no taking away from that. If you look at the large cap screen, apart from M&M, banks have been a big disappointment today. The bank Nifty is down about 0.9%, so not much support coming in from the larger names. Axis, ICICI, many of these stocks, SBI, all of them are down. In addition, you've got some tech names which have again not really helped the bulls case today. Infosys, Tech Mahindra, many of these names down. Reliance is down. Bharti hasn't contributed. So the problem for the market is that barring metal stocks, which are actually shining quite bright, and Nigel will tell us more about metals in a bit, Hindalco, Tata Steel, a couple of these stocks are doing really well, even Coal India for that matter. So the material stocks, metal stocks doing well. Beyond that, there's not much buzz in the market on the upside.
Well, Surabhi, on Monday morning, I'd given 2 stocks to track this week. One was Vedanta and one is Hindalco. Hindalco, because of the valuation argument, it came out with a set of numbers. The street ignored it. But the valuation, there is a comfort out there. They've said that, with regard to this tariffs, it'll be either neutral to positive for the company. So, I think in this week itself, the stock is up close to around, I think, 7-8%. So it's seen a good run from 600 to 650. Vedanta as well from around 410. It's moved to around 435 because that has the special situation that's playing out there. So both these two have done quite well. But let's get a technical check.
Yeah, absolutely. Just want to point out some names from the mid-cap space, and then we'll discuss more as we go forward, because there is a mid-cap unwind that started again. Look at names like Cyient, Sirma, names like Biocon, Radico Khaitan, Piramal Pharma. Piramal Pharma, for instance, rallied 11-12% earlier this week. And now very quickly, those gains are coming off as well. So pressure in the broader market for sure today. Let's go across to Mitesh straight away and understand what you can perhaps do in the last hour. Mitesh, good afternoon and happy Friday afternoon to you. Happy, I think, only if someone managed to short the bounce really well today. But otherwise, it's disappointing. What are your trading calls now?
Good afternoon, Surabhi. It's indeed a happy Friday. We went short, but we have some real spreads on the Nifty because, see, I've not got a decisive break below this 22,800 levels as well. So, you don't know whether you want a short future immediately or you just want to see, have some negative bias positions, which is what you do when you make a bear spread on the Nifty options. And that's the way we are trading because on the index, last many days, we were holding 22,800. Today we are trading below that. But given that we still have 1 hour left, we are like only 30 points below that. So we don't know whether it's a decisive break or not. So we'll wait and watch till then. You need to keep your powder dry. And on the stock side, I have one buy and one sell. Tata Steel is something which I like. It's given a breakout. In fact, metals you were discussing both you and Nigel. I think is one sector which has an extremely well and still looks strong technically. So Tata Steel is a buy with a stop at 138 for targets of 146. And Divi's Lab is on the sell side call. Divi's, I would suggest selling with a stop just above levels of 58.50 for targets of 56.35.
Okay, so those are some sell calls that you're working with. Mitesh, what about M&M? People who hold the stock are now wondering. I mean, maybe they didn't blink till 10% fall, 11%, 12%, 15%. But now, watching this fall, they're wondering what to do, book some profit. Or those who don't have the stock are probably wondering, should we enter now? What's your advice?
So, M&M, just if you look at the weekly chart starting from July of 24, there have been about 8 to 9 attempts and the stock has touched levels of around 2,700 and not had a weekly closing below that. I think today could be the day. I think M&M now, unless it captures 2780 again, good chance that we'll see some kind of corrective move. It is one stock which hasn't done that till now, and that correction could take the stock to about 2,500 in a normal case scenario. Maybe if something worse happens, much lower. But I think this would be a breakdown, and anybody holding the stock, my advice would be to exit and. Or if you get a pullback to about 2780 levels, still that's an exit. Only closing above 2780, 2790 will convince me that the decline or the corrective move is over.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's turn our attention to the tech space. And mid-cap IT, well, those stocks are trading under pressure after global IT firm Endeavor cut its FY25 revenue guidance. Vamakshi joins us to help us out with a quick analysis. Vamakshi?
Well, absolutely, Nigel. The guidance cut from Endeavor is really impacting the mid-cap IT stocks. When we look at the, the guidance that was cut, it's cut its FY25 revenue guidance to 8.5% to 9% as compared to 10 to 11.5% earlier. The company said that Q3 will be impacted by weak macros. This does have a bearing on all of these mid-cap IT names, especially since we've seen, stocks like Persistent System surge higher by almost 38% in the last 1 year. Coforge was also up nearly 14% in the last 1 year. In fact, analysts also say that Mercedes' subdued guidance also impacts companies like KP Tech as well as Tata Elxsi. So overall, that is driving the pressure on the mid-cap IT space right now.
Okay, all right, Vamakshi, thanks a lot for that. Prakash, what do you make of mid-cap IT? Anything you like out there?
IT as a pack is likely to actually get under pressure soon. It's begun with mid cap. It will probably even extend to the large cap names, which probably are looking okay right now. But my sense is IT is one pocket that has escaped the clutches, and now it's time for IT to also kind of capitulate a bit. So I won't look at anything at this moment. But at softer valuations, there's a company called Sagility. Came into the public domain some time back after the revamp of the Hinduja business. I think if you look at that, at some point it starts getting into attractive territory. It made some highs post the listing. Isn't very off the mark in that sense yet, but I would believe, and I don't go by this. If Accenture comes up with something, I can understand it impacts the large ones, the trends which the large IT companies would have to grapple with. Endeavor comes and tells you that there is still stress, but overall there is stress, notwithstanding what these companies are doing for Indian companies as well. So I would wait for some more time for the froth to settle, for the not froth, but for the dust to settle, if you will, and then buy into some of these names, smaller names. Sagility is only one that right now features on my list.
Okay, all right, got that, Prakash. Prakash, I wanted your view on some of these steel companies. Because steel stocks in today's trading session, they're doing a relative outperformance. And there is this buzz that maybe, in fact, we can see some kind of protection coming in from the government of India. So let's highlight, 5 top points as to why steel stocks are buzzing today. One is we have commentary coming in from Mr. TV Narendran, who spoke to CNBC-TV18. He said they presented concerns to the government with regard to safeguard duties, and he believes that they're taking a serious look at it and they're expecting some good news anytime soon. Most countries, he says, they're looking out for themselves, and India must as well do the same with a long-term view on the supply chain optimization. So he's making a solid pitch out there, and that could be the key reason that the street believes, after we have heard from the JSW group, both Mr. Jindal, Parth Jindal, we have heard from Mr. Jayant Acharya as well. They have made a solid pitch, and they're saying sometime in February it's coming. So the street is likely to think that maybe it's coming in the near future. So that's point number one. Point number two, Trump's tariffs, well, they made the globe nervous, but it could strengthen this domestic ferrous company's plea for protection from the government of India and could force their hand, because if he's going to do something that's going to disrupt the ferrous industry globally, then maybe they'll have to work a little bit faster and try to put some kind of duties in place to protect the Indian industry, because China, they will have to dump their steel someplace or the other. So that's going to be important. Point number three, Q3 FY25 EBITDA per ton could improve by around 1,000 to around 1,500 rupees per ton on a sequential basis, because the street is factoring in higher volumes. Coal costs could be relatively lower, and margins as well, we could get a bit of a booster shot because of steel prices being flattish or maybe mildly higher. So all those points play out in their favor. Point number four, there are hopes that global steel prices have bottomed out and sell. Chinese non-integrated steel producers, well, they are earning gross margins of roughly around $180, $185 per ton. That's 20% lower than the 10-year average. And they should be making losses as well on the EBITDA parameter. So that's the hope that steel prices move up from here on. Another couple of factors that we have highlighted during the course of February is ArcelorMittal. Well, they painted a better positive picture for calendar year 2025 with regard to global steel demand. And also, we know the JSPL's promoters, they have bought more than 0.5% stake from the open market just in the last 20 days or so. So put all that together, the ferrous stocks are excited in today's trading session. Prakash, what do you make of them, and what's the top pick that you have from me? I think that buzz is getting very loud that something is coming. Hopefully something does come about, because there's been a lot of pre-buying on those expectations.
I do agree. There is an imminent imposition of anti-dumping duty of some sort of protection, which also gives the domestic steel companies the ability to continue ramping up their capacities, especially the likes of JSW, JSPL. They've been investing a lot into that. SAIL has been showing some numbers which are quite outliers, in that sense. So I would believe there is this whole timing issue, and it's a cyclical sector. If you recall 22 December, when actually the numbers had peaked out, the prices had peaked out, actually the numbers started moving down from there. So this is exactly the reverse. The prices have bottomed out. The steel prices globally aren't sustainable at these levels. They will probably start inching up as rebuilding Europe, especially Ukraine and all, will start. I said there's going to be a huge amount of demand, and China is likely to participate very actively in that. So think about the second order effects of these peace talks. And if China were to start taking that so seriously, the production in China will probably get diverted to a lot of these newer markets or consumption pockets which will emerge. So I'm quite bullish, but ferrous, non-ferrous is the choice that you make. But on the non-ferrous side, you already know that. Look at how Nalco and Hindalco have bounced back. I think Vedanta is just at the cusp of that demerger. I don't know when that happens, but today, the value that it offers, all the underlying businesses that it straddles are doing exceedingly well or are poised to do well. So I would believe that there's a tactical up move that's possible in Vedanta, but on a stronger, longer-term basis, I would still like Nalco on the non-ferrous side. But ferrous, SAIL probably offers you some sort of comfort in terms of valuation multiples as well.
Okay, got that, Prakash. Well, in fact, my colleague Shivani, she spoke to Tata Steel's MD and CEO, Mr. TV Narendran. He spoke about the US tariff impact on steel sector and also concerns about cheap Chinese steel coming into India. Let's hear out what he had to say.
We've represented to the government for some safeguard duties. We've had a lot of conversations with the governments, and they're looking at it very seriously. I think there were a number of queries which we've answered as an industry, as Indian Steel Association. So we're hoping that we will have some news sooner than later, because this is a problem which has been going on actually for almost 2 years. China has been struggling to recover and has been exporting more than 100 million tons of steel, and its impact is being felt. So I think, and now with the actions being taken by the US government, the situation has become even more dire. Things we need to look at. If you look at it from a cost point of view, Indian steel is competitive. India is one of the best places in the world to produce steel, and Indian steel industry, which has invested significantly in the last 10 years, has built very modern and efficient steel plants. The different issue is at what prices are people willing to sell, because if you look at the profitability of the Chinese steel industry, it's pretty much negative. Most steel companies in China are losing money. But in India, the steel industry is largely private sector dominated. So unless it's profitable, it doesn't make sense for the steel industry to invest in new capacity. And steel industry has been at the forefront of private sector investment. So I think it's a matter that we need to take a longer view. India is blessed with a lot of iron ore, and there's a great opportunity to convert that iron ore into steel and make in India.
All right, so that is Mr. Narendran talking about the long-standing demand of the steel sector to get some more protection against dumping of steel, Chinese steel or Chinese steel that's being routed through other countries in the ASEAN region. Okay, just a quick check back on the market. 123 down, so it's okay. I mean, not too much changing. For the time being, it seems to have stabilized around the current zone. Again, I'm focusing on some of the stocks that are losing a lot of ground in the mid-cap market once again today. Some of the names include the pharma pack. Piramal, we had mentioned earlier, but Piramal is not the only one. Walkout is slightly lower as well. There was news on Cipla this morning, but I don't think that's quite helped the stock. Cipla, the gain also fizzled out as we speak. Prakash, okay, so the other aspect is that this week what we've seen is some of the industrial stocks, power stocks, industrial stocks, defense. One day a week, they all had a flash in the pan kind of a move. One day it was defense, yesterday it was power. Today I think all of them are cooling off. But in general, PSUs tried to pull back a little bit. In this arena, would you look at picking anything, or is it best to stay away? Power, industrials, PSUs?
So, it's, I think stock picking at this point in time will be extremely bottom up rather than top down. And from that perspective, if you look at some of the names in the power value chain, especially transformers, a lot of ground has been undone in that sense. If you look at the overpricing or overvaluation that you had in some very good companies like Voltem, I'm just taking an example. Look where it is in the last 3 months. It's lost so much of ground, but the underlying business, it just got stronger. So when you're talking about renewables to be such a focus area, evacuation of power, transmission of power is going to be something you can't ignore for too long. So this is an area which will do well. I don't think the tariffs will impact the transformer value chain. People in the transmission value chain were exporting to the US in the last couple of years, at least very actively. So there will be a pickup. But overall, from a buying into the market perspective, I think there's still some ground that the sell-off needs to cover, the valuation needs to temper down. So I would give it some more time. Maybe March is the month when you would kind of start getting some bargains. We're already seeing valuations come off, but the news flow is being used to sell rather than to buy. So that's the mood of the market at this point in time. But so not in a hurry to allocate capital immediately. There's no runaway opportunity that you're missing out on, but lots of work to be done in terms of keeping stocks on your watch list.
Okay, while we're talking about stocks that are down, the ones that are up, some of them are already on your screen, and power is doing really well. Transformers and rectifiers, it's had a decent week. I mean, today is of course a good action. Overall for the week as well, gains are 6-7%. There's JSW Energy, which continues to chug along quite well, and even beyond the power space. Look at EQ Lighting. EQ Lighting is suddenly surging on massive volumes. It's a smaller stock, I think 1,500-1,600 crore rupee market cap. But it seems that there's suddenly a big buyer, 15% up on EQ Lighting. There's Dollar Industries that's moving higher. Subros is having a good afternoon as well, up about 8%. Auto components and auto, Prakash. And before we let you go, I have to ask you this, right? The damage on Mahindra & Mahindra. Even M&M had a relief day. The other day it pulled back a little. Yesterday, I think it was. It pulled back quite well. But, this is serious price damage that has happened on the stock. The verdict is still out. We don't know. Tesla, our colleagues are telling maybe even with the duties, they could come in at 30-35 lakhs. We have to really see. And whether then that really disrupts the playing field for M&M. So word on that. And in general, auto stocks, I mean, what to do with this whole tariff confusion right now?
So I think M&M has been exceptionally beaten down. I mean, if you look at Maruti Suzuki today, in spite of all this talk about import becoming easier for passenger cars, Maruti hasn't lost much of ground. So as the other names which could probably would have got impacted. But M&M has come into this because the timing of this whole Tesla entry coincides with their launch of the new electric platform. Why aren't we talking about Tata Motors getting impacted so badly? Because, it's like Tata Motors actually sells more electric cars than M&M. So if there were to be any impact, it should have been there as well, but it's not. So what I'm trying to tell you is that M&M needs to kind of get its new launches proven on the ground. And once that happens, things will become easier. And with Tesla's entry, potentially the market only grows faster. What happens is Tesla will also need to back it up with the charging infrastructure. And if the charging infrastructure grows, the public infrastructure grows, I don't see any reason why anybody who makes, a value for money kind of vehicles, which are based on technology, which is very sound and futuristic, won't do well. So I think it's just a question of sentiment. In fact, it's a very good time to buy into M&M because come monsoon, then you'll probably see the tractor segment contribute so brilliantly. And so would its SUV segment continue to do or chug along on the conventional side. So I don't see any reason. It's just that the market needs a reason to beat down stocks. And some of the times what happens is the news flow kind of just helps you do that very easily. but I don't see any fundamental change. In fact, they could probably do a fundraise for some of the group companies which contribute to the M&M stock as well, which is almost like $200, $300 out of this current price is from other companies. And those companies are also likely to do much better. So not something that I would really be worried about. In fact, it's a good time to enter if somebody doesn't have it in the portfolio.
Okay, all right. Prakash, thanks very much for that. We do have to take a quick break. And by the way, have a great weekend. Have a good one, and we'll connect again next week. Let's see where we are. Have to take that break. When we come back, we will have Rajesh Kothari joining in of Alpha Accurate Advisors for some perspective on this market.
Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. HSBC presents CNBC-TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that
Welcome back. Before we continue forward, just some perspective in terms of how India has done vis-a-vis a lot of other markets today. Well, we've underperformed some of the markets in Asia, which were either flat or positive. Right now, Europe is not doing too much. Wall Street futures, they're also, flashing a little bit of red for the time being. The market to focus on is this one, the one on your screen. The Hong Kong Hang Seng has completely blown past today with a move of 4%. And if you're wondering what today's trigger was, it was Alibaba earnings. The Alibaba listed shares in Hong Kong, they rallied almost 12-13%, and in the US shares had rallied about 8%. And there's so much excitement about a lot of these large tech giants now reporting improved earnings, not just Alibaba, even Lenovo's numbers, which came out earlier in the week, they were very, very well received. And by the way, now let's pull up that contrast between the Nifty and the Hong Kong market, the Hang Seng. The Hang Seng is up almost 15-16% so far this year. We're down about 4%, so it really hurts. That's Nifty today. We should pull up a year-to-date chart to look at that comparison. That's of course today. Yeah, 12 months, Nifty has not done much. If you look at year-to-date, we're down. Year-to-date, 2025, we're down about 4%, whereas the Hang Seng has rallied. This big tech rally and that meeting with Xi Jinping and the industry leaders, it really seems to have sparked something big and something new. And this is exactly what we actually discussed with Andy Rothman, founder at Synology, on the Chinese market. What is fueling this rally? Is it real? Are more investors going to pile in? Because the dispersion between India and China in the equity market sense is looking fairly significant right now.
I have to wait a little bit longer to see if this is the real deal, but I think odds are that it is. And I say that because things have been getting worse in the Chinese economy, and Xi Jinping is acknowledging that. And what we're seeing now is yet another step in a process of course correction towards pragmatism that's really been underway since September of last year. So it's not just a one-off thing if we talk about the February 17th meeting between Xi Jinping and the tech entrepreneurs. It's part of a process. When confidence comes back that the regulatory environment is improving, remember that there's a tremendous amount of liquidity sitting in the Chinese banking system right now. Family bank deposits, and this includes a lot of very small businesses, those bank deposits have grown by almost 90% since the beginning of COVID. That's a net expansion in savings of almost 10 trillion US dollars. So to put that in context, that's more than double the size of Japan's GDP. So when people start to get their confidence back, they'll start drawing down on that savings. And we could really see spending take off, hiring take off, and possibly the domestic market take off as well.
Okay, so that's some perspective on the China market. And the big question here for India is that if the China market really starts doing well, and the mainland Chinese markets as well, will it further pull away FPIs who've anyway been deserting Indian shores? Well, let's move on and get some perspective going with Rajesh Kothari, Managing Director of Alf Accurate Advisors. Rajesh, before we start talking India and what you've been doing in this correction, actually just your thoughts. I mean, from an Indian investor standpoint, I'm sure you're very carefully observing what's happening in China. And the thing is that even Indian investors, whether it's retail investors or HNIs, suddenly everybody wants a piece of the action. And I have heard a lot of retail saying, okay, which China funds are open? Should we start putting in the money? But your thoughts on whether this poses a new challenge for our market recovery?
Hi, Shruvi. I think sometimes access to information becomes your enemy, So narratives plays the role. And from last 4 years, we have seen that. And I think the only lesson to be learned, at least by the retail investors, more importantly, because generally they fall into this trap, is not to believe in narratives and look at the actuals, the fundamentals, the ground reality, and do what you understand the most. Because if you start doing the things which you don't understand, exactly 1 year back, everybody was talking about India, and nobody wanted to talk about China. And exactly 12 months after that, China has outperformed India by 40%. And now everybody wants to talk about China. Same thing is for gold. 36 months back, 24 months back, 12 months back, nobody said invest in gold. And today when I meet some large family offices or even HNIs, they say, Rajesh, should we consider now gold? Gold has already done the best of it. So I think sometimes you need to a little bit sit back, relax, think twice, don't get into the euphoric trade, either side of it. Just analyze two simple things between greed and fear. Where are we? Be it asset class, be it stock, be it equity market, be it India, whatever you are doing in terms of investment. On that greed and fear pendulum, where are we? And it's always better to be a little bit greedy when others are fearful and be a little bit fearful when others are greedy. If you follow this simple common sense of human behavior, at least you will not lose money. I don't know how much you can make more, but at least you will not lose money.
Okay, so don't go into fashionable investing, much like fashion trends, right? We chase whether it's a boot cut that's in or a straight cut that's in. Last year it was India. Right now it's China. But Rajesh, you're saying that don't go with what's fashionable. Go with what's right. So speaking of that, now let's come to the correction here. First question, I mean, in the middle of the week, we were getting a little hopeful and it seemed like the market is bottoming out. At least the process of bottom formation is on. What do you think? Is the worst of the pain for mid-caps over?
Well, I think from the three different parameters, the trinity of the three things. The first is look at macro. The macro side, the inflation is cooling down, which is good. The interest rate, RBI has done the first rate cut after a very long time. That is good. The banking liquidity is improving. That is good. So first, the macro side is coming to your favor. Now let's look at the micro side. On the micro side, the third quarter corporate India growth, if you look at BSE 500, it has been around 10%, which is not bad. In second quarter, it was just 5%. First quarter was also very low single digit. From low single digit, we are now at least 10%, which is good news. And because of the union budget, 1 lakh crore gift, probably this will now improve. And maybe from September quarter onwards, I mean 2Q FY26, you will see good double-digit earnings growth, maybe 12%, 14%, 15%. So that is basically the micro. So macro is turning in your favor. The micro has already started turning in your favor. And the third part, very important part, is the valuation. Because that's where the margin of safety comes into play. So today, if you look at the Nifty, we are below 10 years average price to earning multiple. Very simple valuation metrics I'm using. Where are we on 10 years average PE? Of course, in last 10 years, ROE has improved, the corporate balance sheet has improved, the digitalization has improved, India rank in terms of GDP has improved, and many more things happened in last 10 years. So I'm not entering into debate, should we trade it structurally better PE compared to what it used to be? But even if we assume that 10 years PE remain as it is, today we are trading below 10 years PE. And it means it's a good time to invest in. Now, does it mean that market will not go down tomorrow by another 3, 4, 5%? Who knows? It can go. But when you have a 3, 4, 5 years investment horizon, I think that if you invest today, at least from the multi-cap perspective, chances that you will make good double-digit returns with a 3+ year time horizon is in your favor. Coming to mid and small cap, yes, there was a valuation froth, but unfortunately, we should stop using this terminology mid and small cap. Because in India, out of 5,000 listed companies, only 100 are called large cap as per regulatory definition. It means only 2% of India is large cap. But reality is somewhere else. Because India's largest fastener company, or India's largest mall which is listed, or India's largest bearing company, or India's largest luggage company, or India's largest plywood company, they all are largest, but they go into mid and small cap because they are not top 100 by market cap. So I think we should stop using these generic terms, whether mid cap looks good or mid cap looks bad. I don't think so. I think the top 500, 600 companies, which are listed part of it I'm talking about, which makes 100 crores plus reported net profit after tax, that's the universe where one should invest starting now. There might be another 5-10% decline, which is possible. I'm talking from 100 to 500 company, 100 to 600 company, but the good pain is already there. We are seeing many stocks are down 20, 30, 40%. We are seeing the correction in valuation, but the earnings growth is now going to improve. Of course, one needs to be selective, and that's the universe we would like to play within. Moment you go out of 800 company, from 800 to 5,000 company, that's where there is a lot of growth. And that's basically is what I would say micro cap rather than using the word small cap. And that's a part which is going to be a tricky part because a lot of poor fundamental companies, poor quality companies, poor balance sheet companies, poor governance companies, stock price went up 10 times. So do I see bottom there in near terms? May not be. I think there is a good pain is still left from 800th company to 5,000 company. So 3 buckets, top 100, 100 to 800, and 800 and beyond. The third part is where you need to be a little bit careful. And that, please remember, that's 4,000 companies. So, 70% of market is basically there, where at times you get stuck.
So Rajesh, finally that brings us to the question that everyone has on their mind. If people have some cash to deploy right now, because obviously you're getting better levels, better valuations, where to look? Should they go back to the erstwhile leaders? And we've had that, these flashes in this past week. One day was very good for defense stocks. One day it was some of the industrials that look good. Or should they, look at, safer areas like, say, pharma or banking? Where would you put new money to work?
Where do you think there'll be growth? because there is no sector which will guarantee you the growth. It is a company. So forget the top-down view. Right now, it is going to be more bottom-up. The top-down has worked beautifully in the last 4 years. But from now on, for next 18 months, focus on the stock specific. Let me give one example. There are broad headlines in newspaper that Indian consumer is under stress because India's largest FMCG company has reported 2% growth. But if you look at India's largest retail company, is also the consumer company, has reported 40% growth even in third quarter. So consumer is not under stress. You need to be relevant in terms of product. So what I'm trying to say is that, for example, in consumer space, we prefer discretionary. In capital goods, we prefer power capex rather than road capex and railway capex and defense capex. In automobile and auto ancillary, we prefer more auto ancillaries. In pharma, we prefer more CDMO, and so on and so forth. So every segment, you need to further do the micro segmentation and pick your winner, which is a growth, ROCE, and cash flows. These three things are most critical, of course, provided the valuations are reasonable.
Rajesh, have you made any portfolio tweaks in the fall? Maybe you can't talk individual stocks, but some idea in terms of how much has the drawdown been? Have you altered your strategy in any way?
See, basically, our strategy is causality. Be quality conscious in what we buy and be agile enough to get out of it. So discipline exit strategy is always our key differentiation, and we keep doing it whenever we think it requires. So say, for example, capital goods exposure, we have reduced by about 300 bips, 3-4%, because a lot of stocks have went up through the roof. So good amount of profit booking, we have done. In last 6 months, we moved more into pharma. So pharma is right now almost 9-10% of the portfolio. Specialty chemical, after 4 years, we are liking it again. So from 0%, almost 0%, we are right now about 3.5-4%. Banking and finance, we have increased a little bit within banking and finance. We like the largest consumer banking finance company. Again, we made it almost like very low, and from that low exposure, we are now back to 3%. So likewise, so every sector, wherever the valuation have already discounting next 3 years earnings, we are basically have reduced, taken profit on the table. And wherever we think from here, we are seeing next 2-3 years going to be very, very solid growth. That's where we are putting money.
Okay. All right, Rajesh, we will leave it on that note. Thanks very much for joining in. Appreciate that perspective today. Well, we do have to take a very quick break on that note, I think. Yeah. And we'll come back on the other side. We'll, of course, have the latest from dealing rooms. We'll have Nimesh joining in on D Street Chatter. And then, of course, some final trading calls coming up with Nitesh as well.
Mariah back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
Now right, leg. With team golds and individual silver and Pan-Asian recognition under her belt, Mariah Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanat.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions. And we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Welcome back. Well, the markets again go down to around the 22,720 mark, and we're bounced off there. And the Nifty Bank, that's still protecting the 48,800. So it appears both those two levels extremely crucial. Nimesh joins us to help us out with what he's picking up in D-Street chatter. Hi, Nimesh.
Hi, Nigel. A bit of a pullback. So clearly the bulls are looking to fight it out, and 22,800 seems to be defending at this point in time. So that's a very crucial level to watch out for, I guess. But today the fall is largely dragged by a couple of sectors. One is, of course, the IT names which are under pressure, and the other segment is the pharma names. So both these two sectors are the big culprits of dragging the Nifty largely down in today's market. Flow seems to be quite mixed. So there is no big sell-off, so to speak, or a rather big buying as well. So it's kind of a mixed day as far as flows are concerned. A bit of selective buying is back in the PSU basket as well. But I guess the important level to watch is 22,800 on the Nifty. And remember, we have a truncated week next week and also the expiry. So if the Nifty sustains about 22,800 levels, the feedback is that you might see a bit of a short covering as well, because in many stocks there is a lot of shorting happening as well. So watch out for that level of 22,800 on the closing basis in today. But I guess from a flow perspective, it's largely a mixed day. But the big sector to drag is clearly IT and pharma.
IT and pharma. Okay, got that. Nimesh, what about individual stock names? What's the action? What's the buzz you're picking up?
Well, the first name on my list is BSE, Bombay Stock Exchange. The stock is well down 2 or 3% in today's market. But the last couple of days, there is a bit of buying interest is back. There was a report about a large, global fund buying. I also understand some domestic mutual fund has been accumulating BSE at these levels. So that's the first stock. Though in today's market, there are buy flows, is what I understand. The second name is NHPC. We saw a big move yesterday. Even today, there is a follow-up buying, is what I understand, from larger FIs. So after a long time, some bit of buying has emerged in stocks like NHPC at low levels. So that's the second name. The third stock is Indus Tower. Every now and then there is a sense of some supply coming in from larger FIs. So again today there are aggressive sell flows at a leading FI desk, and looks like some large FIs are sellers in Indus Tower. And the last is Trend. Even Trend seems to be under pressure today, but there are buy flows which are emerging. So I understand the leading long only fund is an active buyer in Trend after the massive correction we've seen from the top. But again, there is a bit of short in Trend. So watch out for if there is a potential short covering next week ahead of the expiry.
Okay, all right, got that. Nimesh, thanks very much for all the chatter today, and of course through the week as well. With that, let's quickly head back to Mitesh and take some final trading ideas and calls. Let's get the screens up as well. It's actually looking good. That quintuple bottom, as Nigel has been talking about, 5 times testing the zone, and the bulls are fighting back. 22,800 is back on the screen. It's really saying something for the zone of 22,700 to 800, right, Mitesh? And the mid-cap index also trying to cut the losses. What are the trades now?
That's exactly what I was saying. Don't go short in the future. You're still not short of a proper breakdown, either you're short of a resistance. So I think taking option spreads would be a good idea till then. But yeah, I think we'll wait it out on the index. But on the stock side, I have a BTSC and one estimate. So on the BTSC side is Coal India. trading near the day's high. The stock on the hourly charts is showing some kind of reversal. So BTST here will stop at 367.5 for targets of 375. And on the selling side is Dixon Tech or STBT on Dixon Tech. Keep a stop just above the levels of 14,100 for target of around 13,750.
Okay, all right. Got it, Pritesh. Thank you very much for the trading calls. You have a fantastic Friday and a great weekend, and see you again with the markets next week. Well, with that, let's move on. Nigel has actually hopped across to the wall to tell us about what's brewing with Vedanta. Now, we all know that the company soon will be looking at a demerger and 5 separate individual independent entities will come to being. What can this mean for shareholders? Nigel, over to you.
Well, that's right. There is a special situation playing out in Vedanta, and it could possibly be a case of re-rating. Let's break this down for you. Well, this week, the shareholders and creditors have approved Vedanta's demerger plan. And the management expects the demerger to conclude by the end of Q1 FY26. Remember, the board had approved the demerger in September 2023, and the company has already secured the NOCs from the exchanges. Now, post the demerger, the existing shareholders will receive 1 share each of the new entities, and this will result in 5 listed entities with separate focus on aluminium, oil and gas, power, steel, as well as iron. Now, the existing business, that the existing listed company, that's Vedanta Limited, will house the domestic and the international zinc operations. They'll also house the copper business. Now, the demerger will allow each business to focus on its core strength so that it could offer near-term potential unlocking of value and also maybe a re-rating of sorts. MK, for one, they believe that investors would be more bullish on Vedanta Limited, Vedanta Aluminium, as well as Vedanta Power. On the valuations front, well, the current listed entity that trades at sub 5 times EV upon EBITDA. That's assuming EBITDA of around 50,000 crore rupees in FY26 and a debt of roughly around 60,000 crore rupees. But the demerged entities, well, they could command a higher multiples on an EV upon EBITDA basis of roughly around 6 to around 7 times, depending on the nature of business. Bulk of its value, though, comes in from the aluminium business. That's because it's well placed. It's focusing on higher captive sourcing of alumina, coal, as well as bauxite. That's what could lower the cost of production from aluminium and thereby better EBITDA. Vedanta Limited, well, that will house the zinc businesses, which includes the 63% stake in Hindustan Zinc and also the international zinc business. But keep in mind, there'll be a mild negative value as well that you'll have to ascribe for its copper operations since it's shut. Its oil and gas, power, iron, as well as steel businesses, all of them will get a multiple of roughly around 5.5 to around 6 times thereabouts. Therefore, the sum of the enterprise value of the individual businesses will be approximately 2.7 lakh crore. That is higher than the existing EV. And X of the net debt in books, there could be some potential upside for equity shareholders as well, as it's evident on the screen. All of this should play out in the next few months. Hence, there's a special situation playing out for Vedanta, and that's why the stock could relatively outperform its peers in the near term. So let's see whether or not there is some value unlocking that is remaining for shareholders.
Okay, all right. Indeed, Vedanta looking quite interesting at this juncture, given that special situation that has arisen. Let's move on and welcome in our next guest on the show. Jay Bala of Cash the Chaos is joining in. Jay, hi. Good to have you on. We all remember last time you said that, yes, there could be a bit of a bounce in the market. There could be some respite to the bear attack. But before we talk about, what your view is now looking at the week, I want to start by what you're making of this non-stop Hong Kong rally and, the serious amount of money that's pouring in over there. It's not just the Hang Seng. I think the Hang Seng Tech Index is the one that's really leading. It's up almost 70% in the last 1 year. Individual Chinese tech stocks are rallying 50, 60, 70%. What do the charts indicate? Is this just one of those flash-in-the-pan China trading moves, or is there something more?
I am seeing I've been bullish on the Hang Seng Tech Index since 2023, so this is a bit delayed. But in the medium to long term, this is only a corrective bounce to me. As far as including the China mainline index, that I'm not that bullish on it. I'm anticipating that to peter out quite soon. In fact, when one of the fund managers in the US said we'll buy everything, I told Prashant that he'll probably be making money in the short term, And the Hang Seng Index, the Shanghai Index is likely to drop to somewhere close to 2200 in the medium term before a bottom is put in place. So this is a temporary rally. I don't see this as a sustainable move. I don't think the Indian markets are falling because money is moving to Hong Kong and China. It's got some, its own, endothermic reactions.
Okay, all right, Jay. A market participant actually asked me that Jay has been very, very correct, and he's talking about an medium-term bounce could possibly be on the cards. But what is the ultimate target on the downside for you as things stand right now?
Yeah, that is it's an evolving question, Nigel. At the moment, my objective remains the June 4th low for the large cap index. The mid cap and the small caps have achieved those levels. But the 22,724 that it registered a couple of sessions ago, that's absolutely crucial. Crucial for the large caps. Any expansion below that will lead to possibly a very sharp fall that will probably take the Nifty directly to 22,100 and then later on to 21,280. So 22,700 is absolutely crucial. My preference is for the short-term bounce to come through. It's come through for the small cap index. It's rallied from sub 15,000 to 16,000. But the large caps not responding to support levels and the time cycles at February 18th is a sign of weakness. So I'm a bit, little bit cautious once again about even the short-term bounce. In January, I had anticipated the markets to bounce 24,100, but we got a bounce only till 23,800. Even now, we're not even getting that. It's just meandering around 22,700 levels. So I anticipate the bounce to pick up, but let's see how the week closes today.
Okay, all right. Jay, I request you to stay with us for the time being. We slip into a short break. As we do that, here is some good news coming in for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or from the Google Play Store. Or you can scan the QR code that's up for you on the screen.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on the ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think the trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually consumers were already shopping.
Welcome back. Well, let's continue the conversation with Jay Bala of Cash the Chaos. So, Jay, now let's come down to strategies. Till there's further clarity on, what is the counter trend move, how long does it last or not? What are the interesting stock ideas that you're working with right now?
Yeah, I'm staying with the broader market, Surbhi, and with that said, you just want to attempt at the cash register ringing. So you might want to reduce your positioning to 1/10 of your usual allocation because both these are bullish sides. And the first one is Vijaya Diagnostics. Probably some of the bulls and bears needs to get some admission, and jokes apart, I'm anticipating this to do well as long as it can hold about 814. So bullish view on that. And the second stock is Stuffcraft. It's once again a mid-cap stock. As long as the stock can hold about 675, it looks bullish. The run-up from the early part of last year looks incomplete from a price structure point. So as long as 675 can hold, I think it'll probably make an attempt to fresh 52-week highs.
Okay, Stuffcraft, got that. Jay, also, all that glitters has been gold so far. And gold has been a big outperformer. But you're calling for a near-term pop, a peak out there, and then you believe that both gold and silver are headed lower. Tell us levels out there.
See, gold is just a corrective decline, and it's probably very close to this leg of the move. And I anticipated gold to start correcting from 2850 to 2880, but it's slightly exceeded that. It's come to 2900 and plus. Probably it'll from a medium-term perspective, we still have 3,200 objective. But we could see gold, COMEX gold drop to somewhere close to about 2,400 first, but maybe even slightly shorter, and then resume its bull run to 3,200. But when it comes to silver, I'm not that bullish on the medium term. The short term, I'm anticipating a drop below $26. And the trigger for that bearish setup will come if international silver breaks below 31.9. Before that, it's just a potential. I'll wait for the trigger to come below 31.9 with a stop at 34.5.
Got it. Okay. All right. What about crude oil prices?
Yeah, crude is probably completing a counter trend move. It'll probably complete somewhere around 78, 79. And then it'll probably drop below the September 2024 low it registered last year. I'm expecting it to drop to something like $65. Probably that's, usually crude tends to move in tandem with US equity markets. Probably some correction is due for the US equity markets after a little more higher upsides. Once the DeepSeek low registered a few weeks ago, once that's broken, probably this will crude will act in synchronicity with the equity markets.
Okay, so where does US markets pull back to? You want to give us a level on Dow or the Nasdaq, S&P 500, one of them?
Yeah, just like nothing is getting the Indian markets up, nothing is taking the US markets down. But that's the reason why I'm keeping the low registered for the US markets, the DeepSeek low to break down. So if the Nasdaq were to break below the January low, Nasdaq 100, the spot levels, if that were to go below the DeepSeek day low, I think that will mark the beginning of correction. Once that's broken, there's a deep correction due for it, 35 to 40% drop. But until that point, it's clocking higher highs. We want the low taken out before we can confirm a very sharp drop of 30 to 40% is coming for the Nasdaq.
Okay, all right, Jay. Appreciate you joining in. Thanks a lot for joining in on this Friday evening and giving us all of those views. By the way, we'll start winding down for the week. Then it wasn't such a bad week, actually. The Nifty, but it ends with a mild negative bias. But the point this week was, even after the pullback we've seen on Friday, both the mid and the small cap indices go home with gains of around 1% to around 1.5%. So that's good. With regard to today's trading session, well, we at least managed to protect the 22,700 mark on a closing basis. So we have popped off there. Very, only 50 points higher from there. The Nifty Bank as well, it went below that 48,800 mark, but that as well did pull back from those lows. What did well? Religare, one of the big movers today. The Burmans have taken over. That was up 15%. Godrej Industries, good bounce out there. Stock up 9%. JSW Energy up close to around 6%. A lot of power demand is what we have been hearing about. NMDC Steel, SAIL, Tata Steel, all of them going into the weekend expecting to hear something with regard to some duty protection. Let's see whether or not there's something that comes about. Piramal Pharma, from the recent peak, the stock has seen a big correction. Swiggy, that stock goes on with a cut of close to around 3.5%. So big downtick is what we've seen on that one as well. And in terms of stocks, it was a very forgetful week for Mahindra & Mahindra stock. Ended the week on hopes that we'll see some kind of positive news flow because of the kind of bookings that we got. The fear is now we're going to see some imported vehicles at lower potential duties. So that's why that one's down close to around 6% for the day. And for the week, it's lost close to around 10% of its market cap. From the frontline names, you have Adani Ports as well, which is down 2.5%, and BPCL as well under some pressure. Metals, that was the bright spot for the week itself. That goes home with gains of close to, the index goes home with gains of 5%. And in today's trading session, Hindalco as well did pretty well. But on that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere. Editor's Roundtable comes up next.
And getting things done, delivered on phone or WhatsApp, it was an existing behavior, and therefore it wasn't that difficult. It's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
The Nifty and Sensex end with cuts for the second straight week, but mid-caps have outperformed. Auto and pharma stocks have fallen the most. On today's edition of Editors Roundtable, we take stock of the week gone by, decode India's QIP fundraising spree, and put the spotlight on China's big equity rally. I'm Surabhi Upadhyay, and with me are editors Nigel D'Souza as well as Nimesh Shah. Guys, finally, thank God it's Friday. But I guess for the market, it's a bit of mixed feeling. We haven't fallen, at least the falling has stopped. But Friday, kind of put a lid on some of the recovery as well.
Well, it was more of a recovery as well in the broader market stocks. And that was a bit of a relief, Surabhi. Clearly, the kind of carnage we've seen in the broader markets, the mid-cap index down 20, micro-cap down 21, Nifty 50 down 22%. And after that, such a sharp fall, a bit of a respite was also helpful. So a bit of recovery in the broader market stocks this week. That was a kind of a relief. But if you ask me, we are still not out of the woods. So next is going to be crucial. We have an expiry as well, truncated week. So Wednesday we're having a holiday. So that's a good news. But yeah, I mean, the pain doesn't seem to be over yet. And the overall feedback I'm getting is maybe till mid of March, you might see that pressure in the broader markets because of the leverage selling or whatever you call it. That might continue for the next another couple of weeks.
So maybe some more days of pain ahead, maybe.
Yeah. Well, and normally towards the end of March, we have that tax harvesting as well that we normally see. Since we're going to be looking forward to an India versus Pakistan game, I'll just put it in cricketing parlance. If you're out of form, you could either try to smash it out of the park and maybe lose your wicket. Or maybe you just try to guard your wicket, hold on, maybe don't score too many runs, but at least hold on to your wicket. I would view this week positively in that sense, because at least we didn't give everything away. Yeah. Otherwise, if you look at the stats, last 12 trading sessions were down, 11. So
Absolutely.
12 out of 13 sessions, you're in the red.
At least we managed to save the wicket.
Yeah, indeed. But let's take stock first of, what went on in this week itself. So a quick recap of what went on in the week. The 22,700 mark, well, that got protected yet again. And that's the quintuple low that we're talking about, because 5 times we've gone to that mark and we have not broken that particular mark. So the quintuple low is important. Just take a look at it in the screen. Less than a month, we have gone numerous times to that mark, and we have bounced off that. The markets this week, well, you'll say the Nifty, well, it ended mildly in the red. The positive is the mid and the small cap indices were up close to around 1.5%, and I'll take that positively. Another positive that I saw was select stocks. You have the promoters that are coming in there and chipping in. JSPL, the promoter, bought close to around 0.5% from the open market. Maharashtra Seamless, another smaller company, they bought close to around 0.5%. So promoters coming in there, showing the faith and trying to buy in some stock. Both these two stocks, by the way, had corrected close to around 25 to 30% from the recent peak. And, coming out there and buying close to around 0.5%, that's viewed positively. Besides that, the sector of the week was the metal index. Remember, it got smashed when we were seeing a correction. So pulling back some of those losses, you have the rupee that is relatively weaker. Metal stocks, they actually gain from there because to import your material becomes a little bit more expensive. And all eyes on what the government is going to do, what kind of protection we can see from the government of India with regard to the steel companies, because that has been the big cry out there, and many of them believe that it's in the offing. So metal stocks were the toast, this week itself. And, guys, the markets have been relatively underperforming, a little bit of a jittery. But a couple of positives on the economy perspective, and some of those fundamentals actually are looking better. One factor being, Pankaj Tibrewal in his note that he writes at the end of the quarter, he has said that the Nifty 500 companies, the earnings growth is 8.5%. That's better than quarter one as well as quarter two. So that's one positive. The second factor is, the government capex has started picking up. That's good news. The RBI, they have addressed that deficit that we were seeing with regard to liquidity. The repo cut, you have the OMOs, you have the swaps as well. So that's taking care of that. And lower crude oil prices and well-behaved dollar index, you like that as well. And as most of the notes this week pointed out, that post this correction, and if you're factoring in the earnings growth of around mid-teens in the next 2 years, well, then the Nifty is trading a little bit lower than its long-term averages. So put all this together, market's jittery, but maybe on ground, some of those fundamentals have actually improved.
Okay, well, lots to track, and we have our guest joining us as well. We have Mir Vora right here with us on Editors Roundtable.
Hi, Mir.
Hi.
How are you feeling?
Not bad after such a lot of traffic.
I thought you said not bad after this kind of market, but okay.
No, I really got stuck in traffic today.
But so is the traffic worse or is the market worse?
I always prefer the markets to be better.
But Mir, what's the sense now? We've seen a much needed correction, so to speak. Mid-cap index down 20, small-cap down 21, micro-cap down, Nifty 50 down 22%.
Yeah.
What's your sense now? Given the earnings, given that there's a bit of ease of liquidity as well, are we done for the time being, or there is more pain?
I hope we are done for the time, because you mentioned how much the indices are down.
Yeah.
But if you look at the small cap 250 index, the median stock was down more than 35%.
Correct.
Even though the average might be 22-23%.
Correct.
So it's been quite a sharp, quite a brutal correction over the last 1.5 months. My guess is, all the factors that we talked about, the dollar, FII selling, little bit of cyclical slowdown, government ordering, all those did contribute. But if we are sticking to the 6.6% GDP growth target for FY26, then there is no reason to believe that this is going to sustain for a while. Because if 6.6% happens, then I think we have to be back on the cyclical uptick, and that's what the market should be responding to going forward. So I think the cyclical downturn has been discounted to some extent, to a great extent, I would say. And now if we stick to the 6.5, 6.6 GDP for FY26, then I think valuations are pretty much okay.
So, Mir, you'll be in the camp, since you spoke about traffic as well, and we're talking about the markets looking better, you would be in the camp that says that fundamentals, actually things are looking much better now in comparison to, say, a couple of weeks ago, because I was looking at even the fast-tag collections. In the month of January and February, it's improved much better. So that's telling you there's a recovery on ground. And we also spoke to an OMC, IOC. They also said that demand is much better in quarter four in comparison to the previous couple of quarters. So fundamentally, things are improving on ground. And in fact, valuations as well are a little bit more comforting. Is that the take you would take?
Absolutely. So, in fact, valuations have more than corrected for the slight deterioration in fundamentals we saw in the previous quarter. This is the quarter ended December. But markets always tend to look ahead. And apart from the data points that you did mention, power demand also seems to have picked up power volumes. So I think, as I said, it was a cyclical downtake, and if we go for a cyclical uptake, then I think valuations are more than compensating for that.
So, Mir, then how will you position now? If you're expecting a cyclical recovery in the overall market economy, and plus the earnings as well, and we've seen the correction in many of those sectors and stocks, how would you position now? What are the sectors you would bet on from here?
So I would really take a bet on financials to start with, because this sector has been the worst impacted, not only in the recent correction, but actually over 1.5 to 2 years. And because of combination factors, RBI keeping liquidity tight, crackdown on unsecured loans by the RBI again, and the DXY anyway supporting a stronger dollar, leading to FII flows for a long period of time. And FII has maximum exposure in the financial sector because of the MSCI weightage of almost 35-40%. So we have seen the worst of selling as well as liquidity tightening impact on the financial sector. And when I say financials, I'm talking about the big NBFCs and big banks, private sector banks. And that, fortunately, is a big weight in the overall index, whether it's the Nifty 50 or Nifty 500.
Yes.
So I think that's one sector, the big NBFCs and banks to bet on. Again, base case being, we are in for a cyclical recovery. So that should be the first to do well in a cyclical upturn, both because valuations are good and we've seen the deterioration in fundamentals impacting this sector the maximum. Credit growth is the big thing to watch for. We went down from almost 14-15% credit growth to 10%.
Yes.
For a country like India with a nominal GDP growth of 10-11%, like 10% credit was like rock bottom, you know. Yeah. It can't go. If it goes worse, then we are in for trouble.
But that's improved to 12% now.
Exactly. Yeah. So hopefully that's a cyclical recovery that we are talking about.
But speaking of course, market action, I guess some of the buzz in terms of fundraising is back. I mean, we're hearing about more IPOs coming to the market. There are some blocks that have started happening. Exactly. So that tells you that people are, like slowly warming up. Yeah. So Nimesh, what are you tracking this week?
Surbhi, given the kind of fall we've seen in the broader markets, I was just looking at the QIP data of last 1 year. In the last 1 year, the India Inc. has raised nearly 1.4 lakh crores by QIP. Okay. And of that, nearly 2/3 of the companies are now trading below the QIP issue price. So that's the startling data. 1.4 lakh crores raised, the value now is close to 1 lakh, which means they're down almost 27%. Having said that, there are some winners, some small winners, but there are a large list of losers as well. I'll first talk about some companies which are still trading above the QIP price. And the most notable name in that is Lloyd Metals. Nigel tracks it very closely. They raised a 1,200 crore QIP, and from there, the stock is up almost 71%. Coforge is another big name, is still up 69% from the QIP price. Likes of Wokhard up 25-26%, Shyam Metalics up 23%, and the likes of PG Electroplast and Polymedica. These are the only few gainers which are still above the QIP issue price. But the list of losers is quite large. As I said, almost 69-70 companies, which is 2/3 of the companies, are actually trading below their issue price, QIP prices. The notable names there is, for the first name is of course Zomato, one of the highest company in terms of fundraising, 8,500 crores that they raised. The stock is still down 8-9% from the QIP price. Adani Energy Solutions, that stock is down 31% from the QIP price. They also raised close to 8,400 crores. Warren Beverages, we all talk about, it's a market leader in that space. Still, after the fundraising of 7,500 crore, is down 17%. Godrej Properties, Prestige Estate, the real estate names are down 20-25% from the QIP prices, and PNB is down 8-9%. So this is a broad list of some companies that I've identified. This list only is talking about companies which have raised funds over 1,000 crores. The list is quite large, and there are a lot of smaller companies which are down 20, 30, 40% as well from the QIP price. But I just want to give a couple of things, and then you'll ask Mir as well. See, the good part about it is that because it's a QIP, the funds have come into the company. So what we have to track is 3 things that the company can use for. One, are they paying off the debt? If they're paying the debt, you will see their impact in the very near future in terms of financials, in terms of bottom line. So that's something to track for. Or they can do a capex, the impact of which will come in the next 3-4 quarters. Or they may go for an inorganic acquisition or an inorganic opportunity. Again, that could be a bit of a binary event. But the fact is that the companies are sitting on cash after the money that they've raised by equity. So point is, one need to see whether there could be a kind of a fishing ground for a lot of the fund managers to look at this kind of a data for a potential winners in this list. Mir, coming to you, I just read out the whole list to you. Across sectors, across companies, we've seen a lot of stocks are down below the QIP price. What's your sense? Would you look at this bucket in terms of identifying opportunities in the very near future?
You mean the stocks which have done QIP? Yeah. Of course, definitely. Yeah. Because in most of the cases it is growth capital. Yeah. Right, and by nature, at least our style is of growth investing. So we do like good companies which raise money for good purposes, for growth. I think that's definitely a space to look at.
One more thing, Mihir, that I wanted to sort of chat about, and this is latest data that came out from the NSE, their market ownership tracker. So we all know, obviously, FPI ownership has been going down. Domestic institutions have been, loading up on the market. By the way, the combined ownership, whether it's through the domestic mutual fund route or the direct route, people buying equities, that combined ownership of Indian individuals has overtaken FPI ownership of the market for the first time since 2006. It tells you about the huge churn that we've seen in the last many months. That's one data point. The other data point that I wanted to talk to you about was a reducing share of promoter ownership. Second consecutive quarter, even for NSE, all NSE listed companies, that number has come down to, I think, just about 50, little over 50%. For the Nifty 50 companies, promoter ownership has now come down to about 49%. So promoters are selling, and Nimesh has been telling us about the selling, non-stop blocks, right, all through 23, 24. Is this at all a cause for concern, or or is it okay? Promoters go, some strategics come in, and it doesn't really matter for shareholders. How do you look at it?
I think we've discussed this in the past.
Yeah.
I'm not too worried.
Okay.
And it is a function of price beyond a point. At a price, some promoters will come and send a bit of stake, probably for personal purpose, buying a flat in,
or bring it back into the equity market.
Something,
or bring it back into the equity market.
Equity market through their family offices.
Yeah.
A lot of people are doing that.
Yeah.
So I don't think it's a cause for worry. I mean, there is a bit of stake sale, but it's not something that I would say they're exiting the business altogether and not doing anything with the money.
Okay.
Sylvie, just to add to your point on the retail ownership at the highest in the many years, the way to look at it is the corporate balance sheet is strong. The only leverage right now in the system is the retail leverage. The bank balance sheets are strong, government balance sheets are strong, corporate balance sheets are strong. And look at the kind of list I read out, right? Almost 1.4 lakh crores was raised by the corporate India. So even their balance sheet is strong in terms of having cash. The only leverage in the system right now is the retail participation.
The excessive trading leverage.
And that could be a bit of a scary in the very near term.
Okay, well, we have lots to discuss. Mihir stays on with us. We'll take a very, very quick break. After the break, I also want to put the spotlight on what's happening with the China market. While we are discussing a slowdown and a fall here, the Chinese market is soaring. So what's going on over there? We'll talk about it after the break.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है, और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए।
Welcome back. You're with us on Editors Roundtable, and we've been discussing, of course, the consolidation in the local market, the slight revival in the mid-cap arena. But the biggest global story of this week really has been the non-stop rally in the Chinese markets, and more specifically in the Hong Kong Hang Seng, even more than the mainland Chinese market. So what's really going on? Let's, put the spotlight on this. Now, the Friday moves first up. This was Friday. A lot of Asian markets were flat to slightly, negative or very mild gains. But look at the Hang Seng, 3%. Actually, by the time it ended, the market closed out. This was an intraday market trade that I took. It was almost a 4% move on the Hang Seng. The Nikkei is slightly higher. The Kospi was flat, and the Nifty, we ended down about 0.5%. But it's not a Friday story at all. This story has been in the making since the start of 2025. Look at the huge disparity in the distinction between the Hang Seng, which is up almost 19%, and the Nifty, which is down 4% so far this year. Let's go a little deeper. Like I said, this is more a Hong Kong Hang Seng story right now than a mainland Chinese equity story. So the Hang Seng, like we said, is up about 18.5%, 19%. The mainland indices, the Shanghai Composite in 2025, about 3.3%. The CSI 300 index, about 3.8%. So what's happening with the Hong Kong index? Actually, even if you dive in a little deeper, you'll realize it's the Hang Seng Tech Index that's really caught the investors' imagination. The index is up about 34% so far in 2025. But I tell you what, this is not a story that's just started this year. It's been in the making for the past 6 months or so. Because if you look at the last 1 year gain of the Hang Seng Tech Index, it's almost 70%. What has this index done? It peaked out in Jan 2021 when all the noise around tech entrepreneurs started in China. The peak was 10,300 almost. It crashed to a low of 2,720. And now the recovery, it's a very, very impressive recovery. It's come back to a level of about 5,000 800, which means the index has doubled from the peak. I mean, the increase is almost 111% from the low, that is. So let's move on and talk about what are the factors that are leading to this. Couple of factors. Number one, DeepSeek. The world is absolutely enchanted with this low-cost AI model that the Chinese are able to make. Then it's not just DeepSeek. There's recovery in Chinese tech earnings as well. Look at Alibaba's numbers. The stock was up 15% in mainland in the Chinese trading on Friday, 8% on Wall Street trading. And it's not just Alibaba. Even stocks like Lenovo have outperformed expectations this quarter. Then, of course, the big event was the Chinese president's meeting with the industry leaders and entrepreneurs, and the fact that Mr. Jack Ma was present in this meeting. That has really, sent a very positive signal out there. What did the Chinese president say? Mr. Xi Jinping is now saying that he wants a very open and fair sort of relationship with Chinese industry. No arbitrary seizures or no sudden inspections, which is what we remember, which is what happened immediately after COVID, which is where the big tech crackdown was happening earlier. That seems to be now changing, and there seems to be an olive branch that the government is giving out. Last but not the least, obviously, valuations. Look at China valuations. MSCI China is trading at about 11-12 times one-year forward earnings. MSCI India is still trading at almost 20 times. So there's a very clear valuation difference. The question is this the real deal? Or is this another flash in the pan trading tactical rally in China? This is the Hang Seng chart of the last 1 year. The thing is, we've heard this before. We've seen this before. In May, there was a bit of a trading fillip that came through because of stimulus measures. Again, in September, there was a big rally. We thought this is the big China stimulus, but it fizzled out. And now this is the third wave going up. Just to jog your memory, a lot of stimulus measures have been announced by China in the last 1 year, starting with monetary measures. They cut the reserve ratio requirements. They cut the reverse repurchase rate as well. Then there were measures for the property market, and there were measures for the equity market. Some of them were very interesting, easier buybacks, getting a lot of the index funds and ETFs to invest more money, telling Chinese local mutual funds and insurance companies to increase their holding of local stocks. So all this has happened, but the rallies have fizzled out, which is why I'm asking, is this the real deal? Because now you have the tech companies moving higher and all the past 1 year stimulus. So will the dragon really start firing again? Because if that happens, Indian investors will watch very carefully, and they will wonder whether this further complicates the issue for us with respect to FPI flows. And that's really the question I want to put to Mihir. Mihir, we were talking about market ownership, and of course it's domestic investors here. We own the market here. But FPI selling has really broken the markets back. Now, I don't know about selling or not. The fact is, with China doing what it's doing right now, if this continues, do all hopes kind of go out of the window of us getting more foreign money?
See, till about a month and a half ago, I would have said that India versus China was not the thing, in the sense, because we have seen China stimulate its economy many times in the past, but it's never worked to attract flows away from India into China, right? And even in the last quarter of the last year, 2024, we did see big stimulus measures being announced, but that again didn't move the needle that much as far as flows into China are concerned. I think the Chinese tech story has somehow grabbed the attention of FPIs in the last month and a half, and I've been talking to a few fund managers. There is intense action, more so, not so much to be in the tech space, but for the first time, they feel that they've been underweight on China for so long that to continue to be underweight might lead to underperformance in the short term. So if you look at the FDI flows, they are still negative.
Sure.
FDI flows into China have collapsed, almost down to zero from $50-100 billion a year. If you look at the last 3 years, it's virtually down to zero, and there is net outflows of FDI.
But
so the longer-term investors are still looking at China with suspicion, which was the original story. The risk, the geopolitical risk of China being closed to business, you never know when some businessmen will go to jail, etc. Those risks remain. So FDI is collapsed, but the tactical guys, the more easy money, which is easy to move around, with the FPI money, has probably moved a bit to China tactically.
The Bank of America Securities actually said that this could be a first pivot from just being a tactical trade to being a tactical market, a trading market, to being an investable market. Right. I don't know. And if that shift happens again...
Maybe just to take this point forward, one of the counter argument to this whole China doing well is because of the MSCI, the way the composition is, and the fact that India is a part of the MSCI, there is no China-dedicated fund or India-dedicated fund. It's an EM fund. So if the fund flows into EM for a China reason, would India be also a beneficiary of that?
Certainly, but that needs to have substantial money moving into EM, which is still not happening because the dollar has done so well. The Nasdaq is also under. So we have to compete with a lot of things, including now China's tech.
So coming back to, like, for instance, you said financials, and that's a theme that you like.
Yes.
The problem is financial stocks move higher when that big FPI pipe opens up again.
Correct.
Do you think financials can do well even without, the FPIs returning?
They should, because ultimately in the medium term or long term, obviously valuations and growth equation, that's what drives the stocks. But we also need to realize that not only have FIs sold in India, but they are also still retaining the net short positions in the Nifty futures and some of the stock futures. So if that becomes a trigger, and for me, the biggest trigger will be stability of the dollar, and which we have now started seeing in the last couple of weeks. DXY from September to September 24 to now moved from 100 to 110. It was a massive move against all the currencies, which, basically it was US dollar and nothing else versus everything else, so to say. But now we have seen the last 3 weeks, it has come down from 110 to 106, 6.5. So my view is that even if it stabilizes at 106, 6.5, that scare or that horde of money which was going to rushing back to the US may stop, and that probably is enough. You don't even need the rupee to go back to 85.
We can have a breather at least. Like this week, we can just, holding our own would be perhaps something, positive that we can take.
Absolutely. So I guess take a breather, watch the match over the weekend, enjoy the India-Pakistan match on Sunday, and come back fresh on Monday morning.
That's very, very good advice, Nimesh. I'm definitely going to take that for sure. Mir, thank you so much for dropping by and giving us perspective on the market. Well, with that, we're out of time. It's curtains on this edition of Editors Roundtable. Stay tuned to CNBC-TV18. News and updates continue.
फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं, या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं, कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं, उसमें संगम नोच पर फीकल कोलिफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 MPN प्रति 100 ml से ये कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty declined for the second straight week after a lackluster Friday. Mid-caps and small-caps bucked the downtrend to regain some lost ground. Auto and pharma stocks are the top losers due to Trump's tariff threats. RBI Deputy Governor Rajeshwar Rao flags concerns over excessive borrowing in the unsecured loan segment and the euphoria in the derivative capital markets. Says financial entities have a responsibility to ensure customers fully understand the risks involved and leverage products and speculative investing. A QIP conundrum for India Inc. 95 companies raised a record 1.4 lakh crore through qualified institutional placement in 2024, but shares of only 26 companies are trading above the QIP price and two-thirds are trading below those levels. Indian Oil Corporation Chairman A.S. Sani says that he is confident of receiving subsidy from the government for its LPG under recoveries. Tells CNBC-TV18 that talks with the government are ongoing. Also says that the Oil Industry Development Fund that was announced in the budget remains on the drawing board as of now. Tata Steel's TV Narendran calls on the government to formulate a strategic policy to address risk from global trade shifts due to Trump's tariff war. Says the situation has become more dire for the industry due to Chinese steel dumping. Wearables major board sets sail towards an IPO yet again after withdrawing its draft papers in 2022. Plans to raise 2,000 crore rupees at a valuation of over 1.5 billion. However, will take the confidential filing route this time around. The Burman Group takes control of Redigare Enterprises, gets designated as promoters after a prolonged boardroom battle with the ousted chairman Rashmi Saluja and staving off a counter-offer from a US-based investor. Burman Group entities now hold over 25% in the company after completing the open offer. Stock jumps 18% in trade. The US Senate confirms Kash Patel as the new FBI director, promises radical changes to the law enforcement agency that's been attacking for a long time. Elon Musk's wealth has eroded by $35 billion since the start of 2025. Gautam Adani is second on the list with a wealth erosion of $12 billion so far this year. Right, let's start with what was a tepid trading day and week on Dalal Street. Sensex and Nifty ended in the red for the second week running, losing more than 0.5%. Nifty dropped below the 22,800 mark. Mid-caps and small-caps saw sharper cuts today. But for the week, both the mid-cap and the small-caps index managed to regain some lost ground. Surbhi Upadhyay is here with a market wrap.
Well, thank you very much for that. Indeed, a quiet week, but one that bulls will still take with both hands. And the reason I say that is that quiet is much better than non-stop fall, which is what we've been dealing in the, in the market for the past many days. So this week was about consolidation. The Nifty over the 5 trading sessions is down slightly, just about 0.5% thereabouts. But the story is that the mid-cap index and the small-cap index, the broader market, this started showing some recovery. So the mid-cap index up about 1.6%, small-cap index up 1.4%. The Nifty has tested the consolidation zone of 22,700 to 22,800 for 5 days in a row. 5 times we've gone back to those lows, dipped around those levels and then bounced back. The good news is that this zone is still not broken. However, difficult to say whether the worst is over or not. Right now, it's probably being seen as a bit of a pause and some confidence returning back into the broader market. Let me quickly talk about some of the stocks that were the key movers and shakers on Friday. Mahindra & Mahindra has been a story for the week, actually. The stock was down 6% on Friday. It's down about 9 to 10% for the week because this Tesla fear is very real. And the market is, wondering whether there'll be too much of disruption. The stock has also had a dream rally. So people are using this as an excuse to perhaps book some profit. Nifty Bank has been an underperformer as well. At least on Friday's trading session, it was down almost 1%, leading the large cap declines. So, a lot of the large names like ICICI Bank, Kotak, Indus, and most of them were struggling throughout the trading session. Let's talk about some of the other Nifty losers on Friday. You have names like Adani Ports, Adani Enterprises, BPCL, Tata Motors, Wipro, Dr. Reddy. So as you can see, it's really cutting across sectoral lines when it comes to the large cap space. One area that has done very well for the week and actually, over the last couple of days is the commodity space. Both energy stocks and in particular metal stocks doing very well. the metal index was up and about. On Friday, by the way, Hindalco, Tata Steel, Coal India, these were the stocks that were doing very well. And for the week as a whole, the Nifty metal index has put on 5%. So that's an interesting thing to keep in mind. When I talk about the broader market recovery, where was it seen? Largely in PSU stocks. One day it was some of the defense names. On Thursday and Friday, a couple of the power names started getting very, very excited. The power space as a whole also, even non-PSU power stocks, they had a very good session on Friday. Stocks like JSW Energy, for instance. The market is still in very, very uncertain territory. It's too early to say, like I said, whether the worst is over or not. And what seems to be compounding the issue is the money that's pouring into Chinese stocks, particularly in the Hong Kong stocks, because the Hong Kong market was up 4% on Friday. The Hang Seng is up almost 18% for this year, contrasting very, very sharply with Nifty's 4% decline. So this Chinese competition, along with the continued uncertainty on tariffs and all the headlines coming in from the US, adding to a volatility. But for now, at least a pause in the selling, and that was good news on Dalal Street.
Right, thank you, Surabhi, for that. Moving on, Reserve Bank Deputy Governor Rajeshwar Rao has addressed concerns over excessive borrowing in the unsecured loan segment and the euphoria in the derivative capital markets. Speaking at the NSE's annual conference on finance, Rao said that financial entities have a responsibility to ensure that customers fully understand the risks associated with speculative investing.
Of late, we have seen some concerns of excessive borrowing in unsecured segments and from the derivative euphoria in the capital markets. The temptation of short-term gains can easily overshadow the long-term financial security of individuals. Financial entities have a duty to ensure that the customers fully understand the risks associated with the leveraged products and also of speculative investing.
SEBI chairperson Madhvi Puri Buch said that the regulator doesn't feel the need to make a comment on the valuations of small and mid-cap indices following the steep correction in the broader markets. Mid-caps and small caps have fallen nearly 20% from their highs. This comes almost a year after Buch flagged certain pockets of froth in the broader markets.
Do you think large part of that froth is out since you had, alerted investors at the start of it?
On mid-caps and small caps, I think that at the point in time when the regulator felt the need to make a statement about it, the statement was made. Today, the regulator feels no need to make an additional statement.
Crude oil prices remained on track for a weekly gain. This as falling inventories of US gasoline and distillate raised expectations of solid demand. Concerns over supply disruptions in Russia also supported prices. Similarly, gold prices are also on track for the 8th straight week of gains. This as concerns over US President Donald Trump's tariff threats continue to fuel safe haven demand. Indian Oil Corporation's chairman A.S. Sani said that the company is confident that it will receive LPG subsidy from the government to make up for under-recoveries incurred. Speaking exclusively to CNBC-TV18, Sani said that economic considerations will dictate any decision regarding procuring more crude from the United States. Take a look.
Once we have been given the subsidy amount of something around 22,000 crores or something for the industry in 22-23. And now again there is some deficit, and we are very much confident, and our government is totally seized to the situation. And we are in talks with them, and we are very confident that by the end of this quarter, we will be in a situation wherein my balance sheet will be healthy enough to support my working capital as well as my capex requirements. Availability is not an issue today. Availability of energy, availability of crude is more than what is required by the world today. So that supply demand is driving the total cost of procurement of crude for me and for other OMCs also. Any crude coming to India will come on economic considerations only. That is one. We will have intent. The intent has been given by government. We will follow that intent. But any decision of crude procurement is taken based on economics only. That is the only driving force for me.
India needs a strategic policy to address risks faced by manufacturing companies. That's the word coming in from Tata Steel CEO on Trump's tariff war. Speaking to CNBC-TV18, TV Narendran said that US tariffs will impact India directly through exports. He added that America's actions have made the situation more dire for the industry due to Chinese steel dumping.
So most countries and geographies are going to look out for themselves for sure, right? So we as a country obviously need to look out for ourselves. We also need to take a longer term view because supply chains are getting optimized differently. Earlier it was just getting optimized on cost. Now it is getting optimized looking at the strategic value of manufacturing value chains and other value chains. So I think we need to look at it from that perspective. The tariffs in US will impact us directly and indirectly. For whatever we export as a country, it matters what the tariffs are. As Tata Steel, we also export from Europe to the US. So there is a direct impact from that point of view. The indirect impact is whatever doesn't go to the US ends up somewhere else. So which will have a bearing on international prices and it will have a bearing on the margins in India. So I think one needs to really look at this strategically and have a policy which addresses the risks that manufacturing companies and other companies are getting exposed to because of this situation.
What is the status of the anti-dumping duty that the industry has constantly been asking for? What is the timeline? Do you have any sense?
So I think we've represented to the government for some safeguard duties. We've had a lot of conversations with the governments and they're looking at it very seriously. I think there were a number of queries which we've answered as an industry, as Indian Steel Association. So we're hoping that we will have some news sooner than later because this is a problem which has been going on actually for almost 2 years. China has been struggling to recover and has been exporting more than 100 million tons of steel and its impact is being felt. So I think, and now with the actions being taken by the US government, the situation has become even more dire.
Right, onto a CNBC-TV18 exclusive. Electronics brand Boat is planning to hit the Dalal Street in the next fiscal year. Sources have told CNBC-TV18 that the company is planning to raise 2,000 crore rupees. This is the second time the company is planning to make its market debut. Rachna Dhanrajani joins us now. Rachna, what are your sources telling you?
Right, we have learned from our sources that consumer electronics brand Boat is making yet another attempt at going public. And this time it's planning to raise 2,000 crore rupees through an IPO that is planned in FY25 and 26 at a valuation exceeding $1.5 billion. However, we also understand from our sources that valuation could be a sticking point. But this comes after almost 3 years when the company made its first attempt before ultimately withdrawing while the amount of the fundraise is essentially the same. But what's different this time is that unlike the last time, Boat is now going to take the confidential filing route, just like food delivery giant Swiggy did for its IPO last year. The confidential filing is expected sometime next month. This comes at a time when Boat's revenue fell 5% in FY24 to about 3,000 crore rupees. But the company's silver lining came in when the losses were halved to about 70 crore rupees and reported a positive EBITDA. While its audio segment remained flat in H2 FY24, Boat still holds a 26.7% market share in India's wearables market. Sources also indicate a consolidation is underway in the sector, with Boat seeing a sales boost during the Diwali season after several sluggish quarters. But the question is, why the confidential way? This confidential method was introduced by SEBI in November 2022, allowing companies to privately submit their IPO documents, keeping sensitive information under wraps while evaluating the market conditions. There are 3 key reasons why companies take this route. First, it helps them protect their information from competition. So if a company decides to delay or cancel its IPO, its financials and business strategies remain undisclosed to its rivals. Second, it provides greater flexibility in IPO timing, giving companies 18 months to launch their IPO after SEBI's observations have come in, compared to the usual 12 months. And third is that it shields them from public scrutiny, speculation, investor concerns, and potential legal challenges. All of it makes sense for Boat, considering this is their second attempt at going public, especially because the first time, apart from the market conditions, there were concerns about its China manufacturing links and its rise in business after the ban of Chinese goods by the government had come in during COVID. Swiggy also recently took this strategy and took it for their IPO strategically well, as we saw it play out. So we will be watching out how the Boat IPO plays out.
Right. Thank you, Rachna, for that comprehensive update. Time for a short break. Coming up next, a QIP conundrum for India Inc. Share price of about 2/3 of the companies that raised funds last year is now below the QIP price. More details when we return.
Polls advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India's sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America. And Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Safe.
Welcome back. Last year saw India Inc. go on a fundraising spree with stock markets touching record highs. 95 companies raised nearly 1.4 lakh crore rupees through qualified institutional placements. But two-thirds of these shares are now trading below the QIP price. Nimesha is here with more details.
With sharp fall in the broader markets, I'm putting the spotlight on the companies that raised funds via QIP in the last 12 months. Interestingly, the Indian companies, more than 90 companies have raised funds via QIP, and the cumulative amount raised is close to 1.4 lakh crore. But with the kind of sharp sell-off we have seen in the broader market stocks, that value of this fundraising has now fallen below 1 lakh crores, which means there is a cut of nearly 27 to 30% from the QIP price for all these companies. Interestingly, there are only few companies which are still trading in the green. green. So the ratio is close to 1:3. One stock is in the green and 3 stocks from the QIP price is in the red. Some of the notable gainers after the QIP issues are the likes of, say, Lloyd Metals. That stock is still up 71% from the QIP price. Others like Coforge up 69%, Vocard is up 27%, and the likes of PG, Polymedicure, and Sham Metallics are the few stocks where the stocks are still trading above the QIP issue price. But there is a long list of stocks where the stocks are trading much below the QIP price as well. Among the larger names, the first stock on my list is Zomato. That company raised close to 8,500 crores in the QIP, and the stock is now trading below the QIP price, almost down 8%. Adani Energy Solution is another name to watch out for. The company raised close to 8,300 crores via QIP, but the stock is now down nearly 31% from the QIP price. Similar is the case with Varun Beverages. Samudra Motherson is another name. From the QIP price, the stock is still down 31%. And the likes of Godrej Properties and Prestige Estate are the few names where the stocks are trading much below their QIP price. So there has been a clear damage in a lot of these companies which have raised recent funds via QIP in the recent past. But what to watch out for would be 3 important things. Largely, when the company raises funds via QIP, it's essentially used for 3 or 4 major things. One, of course, is the debt repayments. You need to track if the companies are paying debt. In that case, the earnings will get impacted in a positive way in the very near future. So that's the first thing to track. The second would be, are they doing a capex? In that case, the positive impact may come over the next 3 to 4 quarters. And the third potential fund proceeds could be for inaugurating growth. So that's another thing to watch out for in these companies where they've raised funds via QIP. But the bottom line is nearly 2/3 of the companies which have raised money in the QIP in the last 1 year are trading much below the QIP price.
Thank you, Nimesh. For that, over 50 Indian deportees from the United States are being housed in Panama currently. The migrants are being held in a hotel along with over 250 others of various nationalities. The deportees are receiving medical attention and food as part of a migration agreement between Panama and the US. However, they are not allowed to leave the hotel while international authorities arrange for their return to the countries of origin. Many migrants were seen holding signboards from the window reading "Help." The Indian Embassy in Panama has said they have gained consular access and added that the deportees are safe and secure. India and Pakistan reportedly held a flag meeting along the line of control in Jammu and Kashmir's Poonch district today. This was done in an effort to ease tension amid a recent spike in cross-border firing. Reports suggest that both highlighted the need to maintain peace along the borders. In global news, the Israeli military has claimed that one of the 4 bodies of Israeli captives that was handed over in Gaza is an incorrect one. They claim that Hamas sent the wrong body and has demanded Hamas return the correct body. Israeli Prime Minister Benjamin Netanyahu has also ordered the intensification of military operations in the occupied West Bank. This action comes after 3 parked buses exploded near Tel Aviv. However, no casualties were reported. White House National Security Advisor Mike Waltz has said that Ukrainian President Zelensky must strike a deal on U.S. access to Ukraine's critical minerals. Addressing the media, Waltz said that the U.S. president is frustrated with the Ukrainian premier for not taking America's deal. He added that the insults out of Kiev about President Trump are unacceptable. The U.S. Senate has confirmed Kash Patel as the new FBI director. In his first reaction to confirmation, Patel promised radical changes to the law enforcement agency. He also warned those who seek to hurt America and said the FBI will hunt them down. Patel is a Trump loyalist who has fiercely criticized the agency he will now lead. Back home, the Railways Ministry has issued a notice to X to remove a few videos that had graphic visuals of women victims who died after a stampede broke out at the New Delhi railway station last week. Sources have told CNBC-TV18 that the social media giant has been asked to remove such posts within 36 hours. Meta has said that its named executive officers will now earn a bonus of 200% on their base salary. This is up from the 75% bonus that they earned previously. The change comes after a committee for Meta's board of directors found that compensation was at or below the 15th percentile compared to competing firms. The updated bonus plan will not apply to Meta CEO Mark Zuckerberg. The announcement comes just a week after Meta began laying off 5% of its workforce. Adani Group Chairman Gautam Adani has faced the second largest wealth erosion so far this year. As per the Bloomberg Billionaires Index, his fortune has declined by nearly $12 billion to $66.8 billion. This is due to a 13% decline in Adani Group stock since the start of 2025. Adani is trailing only Tesla CEO Elon Musk, who has seen his net worth erode by $35.2 billion to $397 billion. And with that's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. HSBC presents CNBC TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, standing up when you're lying down in the sand, in the dirt, that is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time, because in the
Good evening, ladies and
gentlemen, and what an absolute pleasure it is to be back here at the HUL campus for the 16th edition of the Lessons in Marketing Excellence, a property that HUL and CNBC-TV18 have very carefully, with a lot of passion, patience and perseverance, committed ourselves to for the last 16 years. It's wonderful to see all of these young, bright marketers in the room. So congratulations once again to all the teams that have made it here to the final, and we really wish you all the very best, not just for today, but in your future efforts and endeavors. But, you know, we were just chatting about our own campus rendezvous, so to speak, and what's common between Rohit and I is that we were both part of Delhi University, and both of us went to St. Stephen's College, so we have something in common there. and so did Piyush Pandey, so we've got three Stephanians in the house. Great to see you back on the Lime stage, sir. But you know, Rohit, I want to start by asking you, every generation says our generation was different. What is truly different about the cohort that you're seeing today? I mean, you know, we'll talk about what they mean to the workforce in a second, but what do they mean in terms of consumers? Because I just did a conversation with Snap. They've done a report with BCG on the consumption capacity and how the Gen Z is really driving not just behavior changes, but also spending power. How are you seeing them as consumers?
Well, I have two such consumers at home, my son and my daughter, so they're, you know, in the same almost age bracket as, you know, all of you. So I see some of them pretty close by, and I think what really differentiates, and each generation comes with a different context and has different aspirations, some common fundamentals, but a lot that's different. And I think what differentiates today's generation is, first of all, you're all digital natives.
Yeah.
You're born with, you know, a smartphone by your bedside. From morning to evening, and that really explains how it has changed how, you know, consumers consume media and how people are buying things, because you pretty much are defining the marketing landscape of the future. I also think, looking at my daughter, you know, who's a fierce consultant, a woman leader in her own right, what's really important to her is conscious capitalism, is about inclusive growth. She cares about sustainability beyond just a word, about inclusivity. So I think this notion of a very strong moral ground in the way people are taught today is really important, and therefore transparency is key as an implication, you know, with companies like ourselves. And I think finally, at the end of the day, there is a certain degree of boldness. World's an oyster. We can do anything in a world today when transformation, the growth of India, the 2047 vision of Viksit Bharat. So people have a lot of dreams of a very positive, bright future. And I think the entrepreneurial energies, each of people at your age who want to join us as well, want to do something really big, change the world. And that idealism, coupled with some degree of boldness, is, I think, what differentiates the best of the best in this generation as well.
Let's talk about the proliferation of digital brands and what that means for a company like yours. Does it make sense to build versus buy at this point in time? You've just done a big deal. You've bought Minimalist, the skincare brand. It's a 3,000 crore rupee deal that's been done. And you intend to let that run independently as a speedboat within the HUL ecosystem. But does it make sense to build, or does it make sense to buy?
So our approach to, first of all, let's be clear about what is digital brands, because digital first brands for sure, because, you know, it's quite, it's easy, or not easy, but it's easier to find product market fit by using digital medium, because you can try different things, you can optimize, iterate all the time. And we've done that. We have an incubator, started with a beauty business. We've incubated, we've created new brands. Some we have stopped, like Acne Squad. Some we have pivoted, like Novology. Some we are rolling out because we found a product market fit, like Simple and Love Beauty Planet, and they're going to offline. And that method of growth is not that different from any other so-called digital brand, first brand. So I think today we have the wherewithal, the tools, the capability to do exactly what any so-called digital first brands can do. But at the end of the day, you do need to go to serve the entire country. You need to go to offline channels. You need to be consistent. You have to innovate constantly. You need technology. You need the patience to be 16 years and still doing this brand line. And you need strategic depth and discipline. So I think that is something what we can bring. And we have various ways in which we expand our portfolio to good demand spaces. We have built brands ourselves, like Love Beauty Planners, like Novology. We have borrowed brands from Unilever and brought them into the market, like Simple, like Liquid IV that we're just launching. And when we find that we don't have a solution in either of these two spaces, we always have the opportunity to go and look at right portfolio fit, and that's where Minimalist, an excellent brand, standing for very sharp transparency and active sciences, comes into play. And let's not forget, we have a massive range of existing brands that can also stretch to wherever they can stretch. A Lakme or a Pond's can get into new spaces. Lifebuoy, our oldest brand, 100-year-old, is getting back into freshness shortly. It's getting relaunched as we speak, starting from Coombe. So, yes, so I mean, we use all tools and all levers to build our portfolio to basically be future ready.
Speaking of being future ready, and I just want to dwell a little bit more on the Minimalist deal that you've done, as well as your own experience of building D2C brands, and you gave us examples of Love Beauty Planet and a bunch of others. What has been the challenge there, and what has been the lessons perhaps that you've picked up on from the deal that you've done with Minimalist on how they may have potentially done things differently to have been able to cross the threshold of getting to a 500 crore rupee ARR number in, what, 4 or 5 years?
Yeah, I think for all of us budding entrepreneurs, entrepreneurialism is obviously fraught with risk, and of hundreds of brands that get launched. And by the way, I really encourage the ecosystem in India, and I welcome people who, bring in new things and innovation to the market. So that's a good thing for the country as a whole. So let's keep doing it. But at the same time, acknowledge that there is a risk involved, and most brands don't scale beyond 100 crore mark, and it's hard to go to 200 crores. It's even harder to go to 500 crores, and then very few make it to 1,000 crores, and so on and so forth. So I think the first thing is that there's an element of chance in getting the right product fit and having everything working for you. So within that, there are a few assets that we've scanned, and we found Minimalist as being one of those. And the brands that really do break through have a few things, I think, about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency and science and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product, and they've kept the brand very consistent, very clean, very single-minded, and they've been very careful in pricing and not trying to get ahead too soon, having the patience to be profitable even in the first 5 years, and a frugal mindset, and getting immersed in the whole world of Minimalist. They themselves sell, they have a D2C side, of course, they hack problems with the consumers, they know what's working, not working. It's that level of ownership I wish we could infuse everywhere, because that's really creates that immersion in ownership, the live and breathe 24/7 the brand. That's what makes for excellence. And when we do that in our existing brands, we see significant years of success, and when we don't take our eyes off the ball, and then we go to course correct. So really it's all about all of those things, nothing very complex, but hard to replicate.
Yes, we're here talking about quick commerce, and what a story that's turned out to be, especially in the last 2 years. People had written it off, and with good reason, because perhaps, in 2015, when it first emerged, there were many things that were not in place, including the digital ecosystem, microtransactions, and so on and so forth. Why do you believe quick commerce is the success that it is today in India? What do you attribute the success of quick commerce to? And secondly, it's not just about 10-minute delivery. It has changed the consumer expectation across a whole host of sectors. Now, today, people want 10-minute banking, people want 10-minute food delivery, people want 10-minute, e-commerce. Everything is being measured from a lens of quick fulfillment. What kind of pressure does that put on someone like you?
It's an opportunity, first of all, not a pressure, because I think so few things that we see across markets that consumers, all of us as shoppers, will start to buy from different formats. We'll start in kirana stores, in supermarkets, and then e-commerce and different kinds of e-commerce sites, and stores, brand stores. So omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think The trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually consumers were already, shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. You know, it's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it. They've been able to do that at economic levels, so they've been able to create unique economics, and that requires technology.
Yeah.
And I think the tech now is really a big driver. I've been to dark stores of one of the platforms not very far from our office, and you can see the level of tech that's involved in efficiency of even a few milliseconds, the number of steps taken to pick something up, and all of that couldn't have happened.
Has it surprised you? Has it inspired you? Both?
No, we are very inspired, and we want to work. We are working with all of the big platforms, and two of our judges are from two of those big platforms here, and we're very honored to have them. They're our customer partners. We are all in, we're making sure that we serve this mission. We have a segregated portfolio. 80% of what we sell, mostly sell in quick commerce, is quite differentiated from Kirana stores. So it's a different shopping mission that we're serving. It's more convenience. And it's really that. It's basically convenience.
But is it expanding the consumer base? Or is it just changing consumption patterns?
I think it's creating, it's feeding a shopping mission of I want it here, I want it now. And it does therefore removes the barrier to consumption. So therefore it will increase the market size, because it's just, you can get if something you need it. And I think it's also helping premiumize. It's largely a bigger urban metro phenomenon at this point. But I think the quick commerce platforms themselves are evolving their portfolio. We are going to be a very important part of their growth journey, because we create baskets. We can put in Dan, our head of our home care business, right here. If he brings in, I was being told by one of the platforms that there's not enough laundry as yet in their baskets. So the more we build the market, we'll upgrade the market. So as a whole, everybody will gain. I mean, it's not a zero-sum game.
Yeah.
But we've also got to make sure that we differentiate assortment and promotions to make sure that there's separation between a Kirana store shopping mission and a quick commerce shopping mission.
So over the next few years, 5 years is a long time in the world that we live in. So let me ask you much more near or medium term. How much do you see the mix changing, sales being driven via both e-commerce as well as quick commerce for you?
We have given a number that it's high single digits for us and growing fast. And we do expect, general trade or traditional trade to remain heart of our business, because it's very large. It's 70-odd%. So it'll always remain a very important part. And our business system will largely be anchored around, distributive, inclusive, and a Kirana-centric model. But there would be, of course, a high share of e-commerce of different kinds. Whether it's beauty.com or it's grocery.com or quick.com or even marketplace, there are different models that are emerging. And modern trade, of course, or supermarkets, modern retail is also growing. And all of this is now going to sort of lower tier cities. And we have many, many years of growth. While the share of retail, Kirana or general trade will come down, but we'll be on a much bigger cake. The pie is expanding as well. So I think there's a lot of opportunity at this stage rather than any threats at this point in India.
Speaking of opportunities and speaking of the market as well, Rohit, we've seen several changes happen over the last few months. We've got the budget delivering an income tax cut for the middle class, much needed. We've also had the RBI bringing down the interest rates. Do you believe that all of this is now going to provide the fillip that's been needed? Everyone's talking about the need for a consumption boost. Both the government and the RBI have done their bit. Do you expect things to take off? Are you starting to see any visible indication of that yet?
Yeah, the answer is yes, I do. I think the shift in the financial strategy started to shift towards more consumption from this budget, and even the last one budget that came a few months back. I think all of these moves are quite material, because we're talking of 30 basis points, around 30 basis points of impact of GDP. It's a large sum of money. It's definitely going to create stimulus for consumption. Importantly, I think maybe what's also helpful right now is that the rural economy is stronger. After many years of inflation and monsoon issues, I think This year, the reservoirs are full, the agri production is good, rainfall has been above average, and we can start to see already the signals of stronger rural growths than we did in the years before. And I think the assumption, the urban consumption crunch that we've seen the last few quarters might take a few more months or quarters to wane away, but that should normalize because it was on a high base. So I do think that given that the macro factors are turning in the favor of consumption, the institutional policies are beginning to bias that, and that some of the things that we can't control, such as weather, has also turned in our favor. And India will always remain a very underpenetrated, big headspace of consumption. Though I do think that as we go in the quarters going forward, the consumption economy, or economy driven by consumption, is definitely going to look better.
My riding, and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanath.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Well, I want to delve a little bit into your own personal journey from starting off at Unilever after FMS and where you find yourself today. Your experience of the first 2 months of operating out of a village, of getting to know the market, of understanding that India is not one monolithic market, but, an agglomeration of many, many different markets. What have been some of the big learnings? What have been some of the myths, that the preconceived ideas and notions that you had walked into this job with that today stand, abandoned?
You mean when I've started or now?
Over the course of the journey.
I think if I have to, because I went through, when I left in India in 2004, I went after that to many countries in different roles, from Vietnam to Thailand to Singapore, Indonesia, Philippines, and China, and then I came back here. In every place, I think what made my approach to the market different from the rest was that I was very comfortable in the shops and stores and understanding consumers firsthand, because that's how we were trained. My first day in the company, we were launching the Wheel detergent powder, which is a massive brand now. It was 8 rupees a kilo those days. Zada Shakti, Zada Jhag was a proposition. And Lemon, which is still around. And I was cleaning shelves. So I knew what a merchandiser does, and so on and so forth. So I think what has really held me good stead is the groundedness, the ability to then keep a good balance in as an operator and a strategist. And you find that people have either a strategic bias or an operational bias. I think what's unique about us as HUL is, most people, is that we end up creating a product, a talent product, that has got a very good sweet spot of operations and strategy, of humility and boldness. It's that thing that comes from the way careers are done here. And that is something that really helps, and agility, knowing that, every state is different. When you go to one country or the other country, or you realize that you're very adaptable and agile, and you adjust quickly, that things are different or must not carry the same rules in every new job. And I think that agility and resilience comes from the fact that we've sent people to different functions, to different regions, and we've really created a product or talent that is highly resilient and adaptive.
Let's talk about the many different brands that you've had the opportunity to work on, here in India and across your many other portfolios and your many other stints at Unilever. Rohit, brands are essentially products with stories. Take me through some of the most memorable stories that you've been able to tell through your brands. What has connected with you the most at a deep level? Which are the ones that have surprised you perhaps the most?
Well, I used to be a brand manager for Surf Excel in 1995. And in fact, I launched Surf Excel brand. It was called Surf Ultra or something else before. So it's been my first love. And Tan or Srinandan Sundaram, my home care head, is right there. When he's building it, it's more than $1 billion now in scale and going beyond 10,000 crores. So he knows I have some degree of possessiveness about this brand. But it really is a story where Surf, if you look at the Surf brand, when we all joined, we used to read marketing case studies of Lalita ji, and and how she taught value to the smart choice consumer. And the brand was a sprayed right product, which still is. And from then it moved on to Daag Dhoondte Reh Jaoge, to Daag Achhe Hain, and now onwards to where it's today, which basically it stands for liberation from all forms of stains and allows children to get dirty and also do something good. I think the brand stayed true to its who it is. It's a affiliative brand, and it's a brand that has surprised me when I come back with the level of scale. I mean, I didn't expect the Surf Excel I knew 20 years ago or even 10 years ago to now be more than $1 billion. I mean, it's because I think what we've been able to do, and people before me have been able to make this Surf Excel a premium product, available at a 10 rupee price point, a sachet for their use, and that is now taken. So our single largest selling SKU is that Surf Excel sachet powder, and now we're doing the same thing with liquid as people buy more machines.
Yeah.
And they start to use liquids, and then we're going to do the same thing with capsules, which are already in the market today, and whatever next format that comes in the world to get your clothes sparklingly clean, but also do it in a way in which you feel good and your family feels good. So I think it's a great story of a brand that's stayed true to its who it is, and also evolved continuously ahead of its times, and basically been there to serve this consumer. At $1 billion plus for one country, not many brands in the world can talk that.
No,
that
they
kind,
certainly can't, and that does deserve a round of applause. So kudos to you and your team for building Surf Excel into a $1 billion brand. But since we're talking about Surf Excel, let me end by asking you how you've managed to find the balance between work and life, or life and work, whichever way you'd like to prioritize it at different points. How have you dealt with that, and what is the advice that you would leave them with?
At the young age, and I'm talking to my kid, my daughter's 24, my son's 29, that, please work very hard, go for it, because this is the time
70 hours or 90 hours?
No, that doesn't matter. It's really about, this is the time to learn, have a growth mindset, most importantly, always be open to new things, because, you guys are full of potential. You don't have any rules, your minds are open. You must always be continuously not be fixed-minded.
Yeah.
For me, that's been a big learning in my last 3 decades of career, is that it's over a period of time become growth-minded, that, okay, I must learn, because I don't know with this country called Vietnam and what happens. I don't even understand language and so on and so forth. So being really growth-minded is really important. And do your best. And so far as whatever you're given is concerned, think like an owner. What would a founder do? If you're a founder of your own brand, what would that person do?
Yeah.
And do what that person will do. And there's, of course, got to be balance. In fact, unless we create balance, so we have moments of calm and rest, of reflection, we'd always be like a hamster on a wheel. So great people, great things don't get done. If you're only busy, you got to be actually doing something purposeful, create the right moments of balance, refreshment, re-energize, and then get back to basically producing. So high productivity is not just about being business, but having basically a very purposeful action rather than mindless action.
So be growth-oriented, be a learner, constant learner, a lifelong learner. Also have the ability to listen and take feedback and turn that into purposeful action. And at the end of the day, also have some fun while you're at it. Rohit Java, many, many thanks for joining us here. Ladies and gentlemen, a big round of applause for Rohit Java and for sharing his story at HUL with us, and more importantly, for giving us a glimpse into what the road ahead for the conglomerate looks like. Appreciate your time. Thanks very much indeed.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things, I think, about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at minimalists, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product, and they've kept the brand very consistent, very clean.
Hello and welcome to News Center. I'm Parikshit Luthra. Germany's Eurozone's biggest economy goes to the polls this Sunday in what has been touted to be the most significant election in the country's recent history. Snap elections were called after the coalition government headed by Olaf Scholz collapsed in December, while opinion polls predict the Christian Democratic Union led by Friedrich Merz to emerge as the single largest party. Alternative for Germany, a far-right party, is expected to finish second. And while the AfD might not find a place in the government as other parties are expected to refuse to do business with them, it might just end up reshaping the country's political landscape.
Germany holds a snap national election on Sunday, following the collapse of Chancellor Olaf Scholz's three-way coalition. Another uneasy coalition is the most likely result. Polls predict second place for the far-right Alternative for Germany, or AfD, which is putting forward a candidate for Chancellor for the first time. But no other main party will work with it, so forming a government is likely to be complicated. Here are the four candidates for Germany's next Chancellor. Germany's next Chancellor is likely to be Conservative Friedrich Merz. His opposition Conservative CDU-CSU bloc is way ahead in polls, but will need at least one partner. Merz moved his bloc further to the right than predecessor Angela Merkel. Last month, rivals accused him of breaking a so-called firewall against cooperating with the far right, when he passed a motion in Parliament with AfD support on cracking down on irregular migration. He has ruled out forming a government with the AfD. The CDU is pro-market and wants to cut red tape, encourage investments, and reduce energy prices to boost the economy. Scholz's coalition collapsed due to infighting, and his SPD, with 16%, has dropped to third place. But it's seen as likely to return as part of a grand coalition of centrists with Merz's CDU. Scholz presents himself as an experienced leader in command of the details. He rebuked US Vice President J.D. Vance after he endorsed the AfD as a political partner. Scholz favours helping Ukraine fend off Russia's invasion, but has recently struck a cautious tone, emphasising the need for diplomacy. The SPD wants to raise taxes for high-income earners and revive a wealth tax. Alice Weidel leads the far-right anti-immigration Alternative for Germany, which is polling second, but has pariah status among other parties in a country haunted by its Nazi past. Weidel has accused mainstream parties of disrespecting German voters in their treatment of her party. She met Vance on his recent visit to Munich when he endorsed her party, as has billionaire Elon Musk. Weidel is openly gay, but her party has become the loudest voice against LGBTQ+ rights in Parliament. The AfD also wants Germany to ditch the euro, reintroduce the Deutschmark, and potentially leave the EU, and to end weapons deliveries to Kiev and resume good relations with Moscow. The Greens' Robert Habeck is the current economy minister. His party is just behind Scholz's on 13% of the vote. Habeck's Greens want a more open asylum policy, promoting state-backed sea rescue initiatives, and simplifying family reunification processes and enhancing integration. They also want reforms to allow higher public spending.
And US President Donald Trump has hinted that a trade deal with China was possible, but did not clarify further. Trump reportedly told journalists on board the Air Force One that he has always had a great relationship with Chinese President Xi Jinping and that he looks forward to getting along with China. Hints of a rapprochement come amidst escalated tariff tensions between the two nations. Within the month of taking charge as president, Donald Trump imposed 10% tariffs on Chinese imports. In retaliation, China levied 15% tariffs on United States, LNG and coal, along with 10% duty on oil, farm equipment and automobiles. Even during his first term, Trump had signed a trade deal with China. As per the agreement, China had promised to buy US products worth $200 billion and lower some trade barriers. In global news, the Israel military has claimed that one of the 4 bodies of Israeli captives that was handed over in Gaza is an incorrect one. They claimed that Hamas sent the wrong body and has demanded Hamas return the correct one. Israel Prime Minister Netanyahu has also ordered the intensification of military operations in the occupied West Bank. This action comes after 3 parked buses exploded near Tel Aviv. However, no casualties were reported. White House National Security Advisor Mike Waltz has said that Ukrainian President Volodymyr Zelensky must strike a deal on U.S. access to Ukraine's critical minerals. Addressing the media, Waltz said that U.S. President Donald Trump is frustrated with the Ukrainian premier for not taking America's deal. He added that the insults out of Kyiv about President Trump are unacceptable. The U.S. Senate has confirmed Kash Patel as the new FBI director. In his first reaction to his confirmation, Patel promised radical changes to the law enforcement agency. He also warned those who seek to hurt America and said the FBI will hunt them down. Patel is a Trump loyalist who has fiercely criticized the agency. He will now lead. Meta has said that its named executive officers will now earn a bonus of 200% on their base salary. This is up from 75% bonus that they had earned previously. The change comes after a committee for Meta's board of directors found that compensation was at or below the 15th percentile compared to competing firms. The updated bonus plan will not apply to Meta CEO Mark Zuckerberg. The announcement comes just a week after Meta began laying off 5% of its workforce. Adani Group Chairman Gautam Adani has faced the second largest wealth erosion so far this year. As per the Bloomberg Billionaires Index, his fortune has declined by nearly $12 billion to $66.8 billion. This is due to a 13% decline in Adani Group stocks since the start of 2025. Adani is trailing only Tesla CEO Elon Musk, who has seen his net worth erode by $35.2 billion to $397 billion. Time for a special interview now. The Indian National Space Promotion and Authorization Centre has announced the launch of the Technology Adoption Fund. With a corpus of 500 crore rupees, the fund will support the growth of India's space technology capabilities. It is also designed to support the transition of early-stage space technologies developed by Indian companies into commercially viable products. To discuss that and more, we're now joined by Pawan Goenka, Chairman of InSpace. Dr. Goenka, thank you very much for joining us on the program. Give us a sense of what is the gap in funding that this Technology Adoption Fund is trying to address.
See, if you look at technology development, almost in any sector, we have a lot of work that happens in academia, which comes to what we call TRL level 3 or 4 is at that point, because then there's nobody to take it forward. The industry is not willing to take the risk with an early technology and make investment, and the academic institutions cannot take it forward to make it commercial. And therefore, we are providing this funding to bridge that gap between early technology, and there's a lot of technology in almost every area that has been developed and kind of lying on the shelf, waiting for somebody to take it forward. So gap between that and what it will take to make it production ready after doing more development, doing proof of concept, doing productionization, doing tooling, all of that, developing market. So that's the gap that we're trying to fill with this funding.
Right. Dr. Goenka, I get a sense that the total corpus of this fund would be around 500 crores. Would there be any particular technologies or particular applications within the space domain that you would particularly like to fund and support?
Well, obviously, our preference will be to fund those technologies where we are fully or mostly dependent on import. And if we can develop those technologies in-house in India, not only do we reduce our import dependence, we also get potential for exporting those as we mature further. Though we are not adverse to anything else, but that will be our primary focus and priority. If we get multiple proposals, more than what we can fund, then we'll prioritize those which will help us to develop things that we're importing today, which could be sensors, right, detectors, RF circuits, optics, all kinds of things that today that go in satellites and payloads that are by and large imported, even by ISRO.
Okay. All right. So I'd like to also touch upon the recent visit of Prime Minister Modi to the US, and the joint statement there had spoken about space cooperation, especially under the Trust Initiative and the US-India Indus Innovation. It used to be Indus X and now Indus Innovation, which also spoke about cooperation in civil and commercial space domains. Give us a sense of where both countries are now going to be working towards when it comes to space cooperation?
Well, see, U.S. Space sector is commercially much more developed than India is. And there are, as you know, many private companies in U.S. Doing good business in space, not just in U.S., but also outside U.S. India is just starting. And I think from our viewpoint, this cooperation helps us in two ways. One is sort of working with more advanced companies in commercial space, and also being able to access US market to some extent. But of course, that doesn't mean that we will put a blockade to US companies accessing Indian market. It has to work both ways. And if we have to access their market, we have to give access to our market to US companies. And that's what we'll work on. And I think overall, it will be a very good partnership because India has its own strengths in terms of tremendous level of raw technical talent that's available, which can be groomed on the basis of some of the hand-holding that might happen with advanced companies from US, and also our ability to do things at a lower cost. When you combine those two with the mature companies of US, I think it will create a win-win situation. As you very well know, there are already some companies from India that are doing business in US. Pixel, for example, has already launched 3 satellites from US, which will be used to provide data. And there is another company that's recently announced about setting up business in USA. So there's a lot of sort of momentum gathering on Indian companies doing business in US. What we're trying to do through the Technology Adoption Fund, that is not just doing business, it's also developing technology along the way. Without technology, we will not really get that kind of growth that we are looking for.
Okay, just to also speak about SpaceX, because we believe that Elon Musk is very interested in collaborating with ISRO in a greater manner. What could possibly be on the cards? It's difficult to, of course, get into the nitty-gritties of the conversation with the government, but broadly, could you give us a sense of what could be the positives out of such a cooperation?
Well, so there are 3 things where there is a possibility of working with Mr. Elon Musk's company or SpaceX and Starlink. One, of course, is using the SpaceX rockets for launching Indian satellites. As you know very well, even GSAT-20 was launched on a SpaceX satellite, SpaceX launch vehicle, because our launch vehicle could not carry that 4.3 tons of weight. So that's one. And many of our startups today are in fact using the Falcon rocket for launching their payloads because India does not have enough capacity at the right frequency right now to be able to provide them that platform. So that's one thing that's already happening. Second thing, as you know, again, very well, that Starlink is very keen to get license in India to start providing service in India. And the third thing is some of the R&D work, specifically mission to Mars, that SpaceX is very keen to move forward aggressively. They've been talking off and on with ISRO on whether there are any cooperation that is possible between ISRO and SpaceX in that regard.
Right. My final question to you would be, given ISRO's priorities and our ambitions over the next 2 to 3 years, what is the private sector opportunity to collaborate? If you had to quantify this as the amount of manufacturing that can take place in India, the financial gains to the Indian industry out of collaborating with ISRO and be a supply chain partner for ISRO in this journey over the next few years, what would that be, sir?
So as you know, Parikshit, that we have set a very ambitious target for taking the space economy to $44 billion. And private sector will play a very big role in achieving the target of $44 billion. Now, coming from ISRO, we will have 2 things happening, or 3 things rather. One is the infrastructure development. By and large, because it is very expensive, will probably be done by ISRO and InSpace for next few years. And private sector may not be able to invest a lot of money in infrastructure. For example, the new launch pad that we are developing for small launch vehicles will be fully funded by ISRO. InSpace is looking at doing a full technical center where private sector can come in to do all kinds of test and validation of their objects. So that is one thing that there will be collaboration between private sector and ISRO. The second thing will be the advanced technology development, where ISRO will focus on in a much bigger way, because now the day-to-day commercial activities will not be done by ISRO, and therefore they can focus in a bigger way on the R&D and planetary missions, as you know, have already been announced. And third thing that's very important, and I think many people don't realize that, a fair amount of business that is flowing into the private sector through NSIL, through ISRO, and also directly. Now, there are two projects that I would like to highlight in this. One, everyone knows about the 52 satellites that are being launched for defense, right? Out of which I think, if I'm not wrong, 31 will be built completely by private sector, and 21 will be built by ISRO, but a lot of content coming from private sector. So that is of the order of 25,000-30,000 crore of business that will flow to a large extent into the private sector. The second one is making the LVM3. Right now, we make only 2.5 vehicles in a year. We have now approval to make 6 vehicles in a year, that is ISRO. And this will be done through a SPV with the private sector. And this is going to be another 30,000 crores worth of business that will be, again, largely flowing to private sector. So these two projects themselves will amount to 55,000 crores of business coming to private sector over a period of time. So like that, there will be a lot of stuff that will happen.
Okay, thank you so much, Dr. Goenka, for telling us everything about what's going to happen in the space sector over the next 2 years, collaboration with Elon Musk, and also about the importance of the technology fund that InSpace has set up as well. We are going to take a short break here on News Center, but don't go anywhere. The news continues on the other side.
And they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think the trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is in certainly the very large cities where density is high, where actually consumers were already, shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. You know, it's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from India is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions. Welcome back. You're watching News Center. Apollo Hospitals MD Sunita Reddy has said that the company may look at raising equity for some of its new businesses. CNBC-TV18's Shireen Bhan explored the company's plans in a chat with Sunita and her sisters Sangeeta and Preetha Reddy at the 69th Foundation Day of the All India Management Association. Listen in.
Are we any closer to making manufacturing of medical equipment in India? The government has put out a bunch of schemes, but are we any closer to that being a reality? I want to get each one of you to come in on that. Preetha?
Yes, I think we are.
Preetha, you want to come in on that as well?
I think we are definitely closer because, you know, India is very good at re-engineering something. So even if you pull equipment apart and put it together, and then make it as a Make in India product, it's just going to take a little longer. But for example, the robot, you know, we have this high-end Da Vinci robot, but there's a company in Gujarat making robots for the knee and for multiple other uses, and they're just as good. You know, if you take the label off, you don't know where it came from. So India is doing it. Cardiac stents, mitral clips, all these very high-end products, they are exporting to other countries. So it's already happening. And they will, 80% of our imports on medical devices is from abroad. You know, we import it. But that 80 should slowly go down. You know, it should be 20 and it should be 80% made in India. I think we're on the right track. And with the fact that, you know, Sunita is working with IITs and many innovation hubs are happening, I don't see why we are not going to be exporting made in India products.
Well, exporting made in India products to actually getting people to heal in India, which is of course the government's vision as well. And we heard from the finance minister in the budget, Sangeeta, and you've just come from a conference that's focusing on exactly that, the heal in India opportunity. Everyone's been talking about medical tourism and so on and so forth. What does it realistically mean? Where are we today in that journey? What do you believe the next steps need to be?
So I think, like many things, Dad saw this way before its time. 20 years ago, when he said India will become the epicenter of healing, nobody believed him. Today, patients from 140 countries come to India for care. This sector is growing. It's because of the fact that Indian doctors are capable of giving care at 1/10 of global prices, but with the same outcomes. However, I think connecting everything that we've been speaking about, lower cost diagnostics, much cheaper medical devices, and then adding the new layer of the continuum of care, of artificial intelligence, of technology, will enable us to do so much more. So, and you know, this is a closed room, we can talk about it. About 2 years ago...
a couple of cameras around, but please go right ahead.
No, but it's something we can be proud of, that 2 years ago, Dad was in a meeting with the Honorable Prime Minister, and 4 of us were privileged to be there. And they shared that vision of what Heal in India would be. And when Dad spoke about medical value travel, the Prime Minister said, let's make this Heal in India. And then their conversation took this to 3 important dimensions. Heal in India, that patients can come to India for allopathic as well as alternate medicine. Heal from India, because using connectivity, bandwidth, Internet of Medical Things, devices, we can monitor intensive care patients in UK or US while doctors are sitting in India.
What we've seen, especially in the last few years, is this influx of private equity money into healthcare, more importantly, buyouts of hospital chains in India. And I've had this conversation with the 3 of you previously as well to ask whether that would ever be a possibility as far as Apollo Hospitals and the Reddy sisters are concerned. Would you ever consider selling out?
No, I don't think so. I think, you know, where we are today,
We have very strong cash flows. We have a strong balance sheet. We have enough money for expansion. And I think that even if we needed to take additional debt, at this time we probably don't need equity. But I think this is the time for us to grow from strength to strength. So having said that, will we look at equity in some form for some business? Probably could be open to that.
Open to raising equity in some of your businesses. So let me ask each one of you before we close on what Apollo Hospitals could look like in the next 5 to 10 years. If I take a look at your latest numbers, revenue of about 19,059 crores, profit after tax of almost 900 crores. Sunita, what could Apollo Hospitals look like 5-10 years on?
Even in the next 3 years, I think we should be close to 50,000 crores in the next 3 years. And if you're growing at 20%, clearly, 70,000 crores is something that you could see from the combined entity.
Well, that's as far as numbers go. Impact-wise, where do you believe Apollo Hospitals would like to be in 5 or 10 years?
I think we have to be able to touch, right now we do almost 10 to 15 million lives a year. We need to do 3 times that number. And we need to be able to serve patients from neighboring countries. And I think that is very important, and we're going to head out doing that. But the excitement is to be able to train more people, because there's a huge gap in skilled manpower. So 3 years, 5 years down the road, we need to really double the number of people who are available in our system. And I think that's one of our challenges.
All right, so that was the Reddy brothers speaking about what the Apollo Hospital chain could look like in 5 to 10 years from now. They were in conversation with our managing editor, Shireen Bhan. With that, it's a wrap on this edition of News Center. More news and updates continue right here. Contours of the proposed trade deal with the US.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है, और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए।
The minutes of the last monetary policy meeting have just been released, and this was, remember, the first meeting under the new RBI Governor Sanjay Malhotra, where the 6-member MPC with several new members voted to cut the repo rate by 25 basis points unanimously and chose to retain the stance at neutral. Now, during this meeting, the new governor made it very clear that high growth momentum must be preserved while also maintaining price stability. He said that food inflation outlook is turning decisively positive while voting to cut the repo rate by 25 basis points. However, he also warned about the rising global uncertainties and therefore justified the need for monetary policy to continue with a neutral stance to react to the rapidly evolving macroeconomic environment. Dr. Rajiv Ranjan, the internal member, again from RBI, part of the MPC, said that the February rate cut was the most rational and an appropriate next step for the MPC, which is in line with the sequencing path that the committee has been following, and the confidence from the decline in inflation opened up the headroom for going ahead with this rate cut. He did say, however, the heightened global uncertainty requires the MPC to continue with its neutral stance. Dr. M. Rajeshwar Rao, who substituted for Michael Patra, who's now retired from RBI, said, monetary policy at this juncture needs to maintain flexibility and that there is comfort from inflation coming down, giving RBI the space to act. Dr. Nagesh Kumar interestingly says the MPC could probably have been even more ambitious and opted for a 50 basis point rate cut to send a signal to the markets and private investors in India and outside that India will do whatever it takes to revive economic growth. But he said, given the uncertain environment we're in, perhaps 25 basis was more appropriate, and that is what he voted for, saying that the case for supporting growth could not be overemphasized. Saugata Bhattacharya again says, given the forecast inflation trajectory, the policy repo rate might soon, if not already, become excessively restrictive, and therefore the need to bring down the rates. Professor Ram Singh again saying the persistent duality in CPI perhaps between food and core inflation in recent years calls for the MPC to see through the fluctuations in food prices and deliver this rate cut. We will be speaking exclusively to external MPC member Nagesh Kumar in just a bit. But before that, let me go to my colleague Lata Venkatesh for her take on the MPC minutes. Lata, what stood out for you?
Well, you've summarized everyone's arguments that growth was crying out for some help, and I think Nagesh Kumar made that plea most evocatively. Of course, that there is now more confidence that inflation will come down, and that case also was made very well by the governor. That the Kharif harvest is very good, vegetable prices are showing signs of coming down, it being winter months. The Rabi harvest gives you confidence that inflation will continue to come down. So the arguments for a rate cut were effectively made by everyone. For me, the one thing that stood out is there is no guarantee of the next cut. If you're looking, the governor and Rajiv Ranjan are all completely silent about what should be the next step. We get some impetus from Mr. Nagesh Kumar's statement, as you pointed out, that the MPC could have even gone for a 50 bips cut, indicating that he is ready for more. But from the other members, that worry about the global environment and the fact that interest rate differential between India and the US is narrowing and inflation differential continue to remain high, that seems to be worrying. At least Augato is very, very clear about it. Therefore, we will have to wait and see. It does look that there is a lot of sympathy for growth or the lack of effective growth, and there is a lot of acceptance that inflation is headed lower, but we will have to wait and see how much importance the members give in subsequent meetings to the external problem, especially because since then and now, the rupee has depreciated by at least 2% from the time they first met in December to now. And there's a substantial, in fact, even more than 2%. I think we were around 84, 85 at that time, and now we sit at nearly 87. So there has been an over 3% depreciation of the currency, and depreciation brings with it chances of inflation as well. But I think that is best understood by Mr. Nagesh Kumar, who is not just macroeconomics, but also a trade expert. So over to our external member of the MPC, Mr. Nagesh Kumar. Good evening, sir. Thank you very much for sparing time for us. I just wanted to ask, because you have said that there is even a scope of thinking about 50 basis, you think more help is needed, and therefore the MPC should persist with more rate cuts even in coming meetings, the external environment notwithstanding?
Well, actually, the last meeting, everybody agreed that we need to support growth. And we also found that we also discussed that how fiscal policy has already done its bit in terms of sustaining the government or public investment, the capex, and also by cutting the tax rates for improving the purchasing power of the middle classes. So fiscal policy had done its bit. Now it was turn of monetary policy to support that revival of growth. And fortunately, the inflation numbers were looking better than in the past two meetings of MPC, and the CPI inflation at 4.3%, which had come after the meeting actually in January, for January, is very sort of comfortable kind of level compared to what it was in October and December. That allowed an elbow room for the monetary policy to consider normalizing the cycle of monetary policy, and with the first rate cut. One could, as I argued, that one could have been a little bit more ambitious, but given the global circumstances, we all agreed that we go step by step, and this moment, 25 basis points. And as the things evolve, maybe we can look at further actions in future.
Mm. So you understand international trade much better than most people I know. Would you worry that if the interest rate differential between India and the dominant currency, the US, narrowed too much, there can be further depreciation pressure, which can be destabilizing? So the monetary policy, better use liquidity steps rather than rate cuts. Would that be an argument at all?
Yes, certainly. I think liquidity management measures are very important. And in December policy, the rate, CRR was cut by 50 basis points. So there is, initiative or action on the liquidity front as well. But now we thought we could support the growth momentum further by having a repo rate cut. And that together, I think the transmission of liquidity to the markets could be further accelerated through the rate cut.
Well, Mr. Nagesh Kumar, on the flip side, since you're arguing about the need to support growth, and we're talking about 6.4% this year, 6.7% this year, and the big sword hanging on the markets at the reciprocal tariffs, perhaps we may not hear the outcome until April. Do you think by the time the next MPC meet happens in March, the committee would use the headroom to steeply bring down rates or cut by 25 basis points? What's your sense as to the next steps?
Well, actually, there is a lot of uncertainty, as the minutes say, and we all agreed about the evolving global, scene, global sort of environment. That trade policy changing very rapidly with the statements coming from United States every day. And so we have to really watch, and hopefully India can manage this with the Prime Minister's visit to United States, which was perceived by everyone as a success. The agreement to launch a bilateral free trade agreement negotiations, which could help India to protect its interests better. And so it may be possible that we are able to sustain our growth recovery in spite of the global challenges or challenging global economic outlook. So there is definitely a reason to be concerned about the global situation. In any case, the world trade and investment rates, growth rates have been rather subdued. And with the new reciprocal tariff talk and all that, it is, which way it would happen is anybody's guess. So, but I think India, having taken very proactive steps of this summit early on, before major announcements were made, and it's possible that we are able to take care of our interests through the negotiations of bilateral trade agreement between India and United States. We have to really keep watching the situation.
So, Mr. Kumar, Mr. Kumar, that would be a great outcome. But Mr. Trump said he will announce on April 1st or 2nd the result of their consultations and their study. And our MPC next meeting is April 6th, 4 days after this supposed decision that will come from President Trump. It's possible that he will postpone. It is possible he will say that negotiations are on, India is buying more defense and more oil, and therefore, he's ready to look at a later date. But suppose, for argument's sake, that a reciprocal trade tariff increase is announced on April 1st or 2nd, does that jeopardize a rate cut?
Sorry, what was your last sentence?
Will that make you not vote for a rate cut? Will that jeopardize the next rate cut? Assuming April 6th. You all meet on April 6th, right?
It is very hard to speculate at this stage, because when we are in the meeting, we have to look at all different parameters, all different contexts, and including the global context. So, if we find that we cannot, move ahead in the expected pace, and we need to hold the policy decisions, that decision will be taken at that time in the light of the circumstances that we have in front of us. And as you know, the things are evolving on a day-to-day basis. So, 45 days from now, what would be the situation? It's very hard to anticipate for anyone.
Well, it is hard to anticipate, but the fact of the matter is that the MPC meeting may happen just days before we finally know the outcome of what US is to do with the reciprocal tariff matter. But quickly, Mr. Kumar, what do you expect the hit on the GDP will be, the hit on inflation will be with these kind of policies coming into play, given India's export relationship with the US?
Yeah, no, I think there are several factors which give to me the confidence that inflation will remain restrained in the coming months. One is that very largely the crude prices determine India's inflation. The transmission from external to internal is through crude prices. And there are expectations that the crude prices will go downwards. We'll see some downward movement because of the Gaza, the Middle East ceasefire. There are very bright chances of the Ukraine war also. We have a ceasefire in future possibly. And so with these geopolitical conflicts coming to some kind of a resolution, there are chances of oil prices going down. There is another factor, which is United States focusing attention on expanding the output. And that may also be another factor. Global slowdown, in any case, is bringing down the demand. So if the oil prices see a downward movement, then we can expect our own internal price situation to be coming under greater control. We have also seen the agriculture growth has been good, and the vegetable prices, which were a source of worry in the past two meetings, have come down actually. And CPI inflation for January was just 4.3, much better than it was in the previous two meetings I was part of.
Yeah, I take your points, and it looks like things will get only better on the food front. There are also people who believe that if China is blocked out of the US in some goods, they will dump it on others, and probably there will be some disinflation. But I want your information, your analysis just out of the MPC altogether. I'm asking you purely as a trade expert, the question that my colleague Ritu asked you. If there are reciprocal tariffs, say 6.5%, how do you see it playing out? Do you think that our automobile industry could be impacted because we have slashed tariffs on cars and bikes? Do you think our pharmaceutical industry, there is always a danger that the US will increase tariffs on chemicals and pharmaceuticals? What, according to you, how according to you will this reciprocal play, going by what we all know at this point in time?
Yeah, well, first of all, the dependence of United States on Indian generics, the affordable medicines, is very large. And I mean, very large proportion of our pharmaceutical exports are actually directed to United States. But as we all know, the price elasticity of pharmaceuticals tends to be very low. And so if you need a medicine, you need a medicine. And so the domestic supply is not going to become available immediately. It will take time. Tariffs, the objective of the President of United States is to use tariffs to increase domestic production, which is not going to happen overnight. So my sense is that he increasing the tariffs will only result in rising prices of these products in United States, and it may not hurt India's exports very much. On auto, I think we don't export too many cars to United States. We do export some components, of course, in a very significant manner, but not the finished autos. And, so I don't see a major earth-shaking kind of impact on India. There will be, many other countries which will be perhaps affected more than India, and if we are able to continue engaging their teams in negotiations, we may be able to kind of further reduce the damage that can be inflicted on India.
Well, Mr. Nagesh Kumar, many thanks for sharing your views on that important topic, the reciprocal tariffs and the impact that is going to have, and of course sharing your insights on the MPC minutes. On that note, Lata, I'm going to thank you as well, and we're going to slip into a short break, but don't go anywhere. We're back in just a moment with more news and updates.
फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं, कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है, अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं, उसमें संगम नोच पर फीकल कॉलीफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 MPN प्रति 100 ml से एक कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicles.
Welcome to the CNBC-TV18 special. Now, IDC Chairman Sanjeev Puri believes that RBI's repo rate cut, better than expected normal monsoon and improving agriculture is going to give a boost to consumption. Speaking to CNBC-TV18's Judh Sanith on the sidelines of Invest Kerala, Puri said that Kirana store will remain the dominant channel for consumption despite the rise of quick commerce and e-commerce. Take a look.
Let me first start by saying that Indian economy, as we know, is the fastest growing. There has been a figure in between that was a little below expectation, but those are due to transient factors. And achieving a figure of 6.5% or thereabouts, that's the forecast for the year, in a situation when in the context of the stress we are seeing across the world, and in the context of excess capacities in certain regions being dumped into the rest of the world, therefore impeding exports or into India, I think it's a good achievement. Good achievement. Of course, we need to do better. We need to get into 8 and 9 and beyond. And specifically, as far as consumption is concerned, it has been a little soft in the past because of transient factors, and some on account of climate change related issues and the external sector, which has been weak. But certain things are getting better. I think the monsoon has been better this year. Agriculture is anyway improving, so this should provide some impetus. Recently, the interest rates have gone down. I think you will also find the monetary easing in terms of liquidity actions being taken by RBI. These augur well. In the budget, very strong measure was taken on income tax reduction, and that's quite a significant reduction. It's not a small reduction, right? So all of these factors augur well, and with this, I think pickup should happen. Of course,
when? That I think is the question in everyone's mind.
Of course, this is always a question that media would like a black and white answer. But as I said, the economic development is a journey. In steps, it will happen. It's not an on-off switch that suddenly it will come off. But the factors, the macros are getting favorable. So that is encouraging.
Right. Are there still some pain points that remain though? And if yes, what are they?
So rural is doing better. I think urban is the one that we have to see improving going forward.
And FMCG-wise, where do you feel the key green shoots might be apparent more than the others insofar as FMCG consumption is concerned?
Well, as I said, rural is picking up, is better. Urban, I think, because some of the factors that we spoke about now, should aid the recovery in urban areas in the over some period of time. And of course, there is a lot of channel shift that's happening in India, and the channel shift is also giving rise to newer kinds of opportunities, and it's also meeting the Bharat has become very aspirational and did not have access to the kind of products that they needed in the past. I think through that channel, that access is also, so new markets are getting created for premium products also in Bharat.
Right. Last question before I let you go. Quick commerce, e-commerce, do they continue to play a bit of a spoil sport in terms of consumption itself, in terms of the fast-moving consumer goods? Do you feel that it's an aid, or do you feel it's kind of impeding, prices and so on and so forth? And is that going to be a bit of a fly in the ointment?
See, these are all channels through which products are delivered to the consumer. Having said that, despite the fact that they've grown quite fast, the Kirana channel still remains the dominant channel and will remain the dominant channel in India, right? So that will remain an important channel. I think this channel has certain advantages in terms of being able to deal with wider assortments, in terms of being able to service the aspirations of Bharat in certain pockets, right? So there's a different assortment that you will look at for this channel. It has a particular role, and a different assortment that you look for the Kirana. Though there is some overlap will be there, it's not clinical. But I think each has a role to play. And
they can coexist.
They can coexist. Yeah.
All right. On that note, great speaking to you. Thank you so very much for doing this.
Thank you.
All right, on that note, it's a wrap on this special show, but news will continue on the other side, so stay tuned.
With Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk be able to secure lower tariffs from India without a manufacturing commitment? That remains to be seen. For the moment, what we know is that Elon Musk had a very positive 50-minute meeting with Prime Minister Modi in Washington, D.C., where everything from electric mobility to space cooperation was discussed.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty declined for the second straight week after a lackluster Friday. Mid-caps and small-caps bucked the downtrend to regain some lost ground. Auto and pharma stocks are the top losers due to Trump's tariff threats. RBI Deputy Governor Rajeshwar Rao flags concerns over excessive borrowing in the unsecured loan segment and the euphoria in the derivative capital markets. Says financial entities have a responsibility to ensure customers fully understand the risks involved and leverage products and speculative investing. A QIP conundrum for India Inc. 95 companies raised a record 1.4 lakh crore through qualified institutional placement in 2024, but shares of only 26 companies are trading above the QIP price and two-thirds are trading below those levels. Indian Oil Corporation Chairman A.S. Sani says that he is confident of receiving subsidy from the government for its LPG under recoveries. Tells CNBC-TV18 that talks with the government are ongoing. Also says that the Oil Industry Development Fund that was announced in the budget remains on the drawing board as of now. Tata Steel's TV Narendran calls on the government to formulate a strategic policy to address risk from global trade shifts due to Trump's tariff war. Says the situation has become more dire for the industry due to Chinese steel dumping. Variable's major board sets sail towards an IPO yet again after withdrawing its draft papers in 2022. Plans to raise 2,000 crore rupees at a valuation of over 1.5 billion. However, will take the confidential filing route this time around. The Burman Group takes control of Redigare Enterprises, gets designated as promoters after a prolonged boardroom battle with the ousted chairman Rashmi Saluja and staving off a counter-offer from a US-based investor. Burman Group entities now hold over 25% in the company after completing the open offer. Stock jumps 18% in trade. The US Senate confirms Kash Patel as the new FBI director, promises radical changes to the law enforcement agency that's been attacking for a long time. Elon Musk's wealth has eroded by $35 billion since the start of 2025. Gautam Adani is second on the list with a wealth erosion of $12 billion so far this year. Right, let's start with what was a tepid trading day and week on Dalal Street. Sensex and Nifty ended in the red for the second week running, losing more than 0.5%. Nifty dropped below the 22,800 mark. Mid-caps and small-caps saw sharper cuts today. But for the week, both the mid-cap and the small-caps index managed to regain some lost ground. Surbhi Upadhyay is here with a market wrap.
Well, thank you very much for that. Indeed, a quiet week, but one that bulls will still take with both hands. And the reason I say that is that quiet is much better than non-stop fall, which is what we've been dealing in the, in the market for the past many days. So this week was about consolidation. The Nifty over the 5 trading sessions is down slightly, just about 0.5% thereabouts. But the story is that the mid-cap index and the small-cap index, the broader market, this started showing some recovery. So the mid-cap index up about 1.6%, small-cap index up 1.4%. The Nifty has tested the consolidation zone of 22,700 to 22,800 for 5 days in a row. 5 times we've gone back to those lows, dipped around those levels and then bounced back. The good news is that this zone is still not broken. However, difficult to say whether the worst is over or not. Right now, it's probably being seen as a bit of a pause and some confidence returning back into the broader market. Let me quickly talk about some of the stocks that were the key movers and shakers on Friday. Mahindra & Mahindra has been a story for the week, actually. The stock was down 6% on Friday. It's down about 9 to 10% for the week because this Tesla fear is very, very real. and the market is, wondering whether there'll be too much of disruption. The stock has also had a dream rally, so people are using this as an excuse to perhaps book some profit. Nifty Bank has been an underperformer as well. At least on Friday's trading session, it was down almost 1%, leading the large cap declines. So, a lot of the large names like ICICI Bank, Kotak, Indus, and most of them were struggling throughout the trading session. Let's talk about some of the other nifty losers on Friday. You have names like Adani Ports, Adani Enterprises, BPCL, Tata Motors, Wipro, Dr. Reddy. So as you can see, it's really cutting across sectoral lines when it comes to the large cap space. One area that has done very well for the week and actually, over the last couple of days is the commodity space. Both energy stocks and in particular metal stocks doing very, very well. The metal index was up and about on Friday, by the way. Hindalco, Tata Steel, Coal India, these were the stocks that were doing very well. And for the week as a whole, the Nifty metal index has put on 5%. So that's an interesting thing to keep in mind. When I talk about the broader market recovery, where was it seen? Largely in PSU stocks. One day it was some of the defense names. On Thursday and Friday, a couple of the power names started getting very, very excited. The power space as a whole also, even non-PSU power stocks, they had a very good session on Friday. Stocks like JSW Energy, for instance. The market is still in very, very uncertain territory. It's too early to say, like I said, whether the worst is over or not. And what seems to be compounding the issue is the money that's pouring into Chinese stocks, particularly in the Hong Kong stocks, because the Hong Kong market was up 4% on Friday. The Hang Seng is up almost 18% for this year, contrasting very, very sharply with Nifty's 4% decline. So this Chinese competition, along with the continued uncertainty on tariffs and all the headlines coming in from the US, adding to a volatility. But for now, at least a pause in the selling, and that was good news on Dalal Street.
Right, thank you, Surabhi, for that. Moving on, Reserve Bank Deputy Governor Rajeshwar Rao has addressed concerns over excessive borrowing in the unsecured loan segment and the euphoria in the derivative capital markets. Speaking at the NSE's annual conference on finance, Rao said that financial entities have a responsibility to ensure that customers fully understand the risks associated with speculative investing.
Of late, we have seen some concerns of excessive borrowing in unsecured segments and from the derivative euphoria in the capital markets. The temptation of short-term gains can easily overshadow the long-term financial security of individuals. Financial entities have a duty to ensure that the customers fully understand the risks associated with the leveraged products and also of speculative investing.
SEBI Chairperson Madhvi Puri Buch said that the regulator doesn't feel the need to make a comment on the valuations of small and mid-cap indices following the steep correction in the broader markets. Mid-caps and small caps have fallen nearly 20% from their highs. This comes almost a year after Buch flagged certain pockets of froth in the broader markets.
Do you think large part of that froth is out since you had, alerted investors at the start of it?
On mid-caps and small caps, I think that at the point in time when the regulator felt the need to make a statement about it, the statement was made. Today, the regulator feels no need to make an additional statement.
Crude oil prices remained on track for a weekly gain. This as falling inventories of US gasoline and distillate raised expectations of solid demand. Concerns over supply disruptions in Russia also supported prices. Similarly, gold prices are also on track for the 8th straight week of gains. This as concerns over US President Donald Trump's tariff threats continue to fuel safe haven demand. Indian Oil Corporation's chairman A.S. Sani said that the company is confident that it will receive LPG subsidy from the government to make up for under-recoveries incurred. Speaking exclusively to CNBC-TV18, Sani said that economic considerations will dictate any decision regarding procuring more crude from the United States. Take a look.
Once we have been given the subsidy amount of something around 22,000 crores or something for the industry in 22-23. And now again there is some deficit, and we are very much confident, and our government is totally seized to the situation. And we are in talks with them, and we are very confident that by the end of this quarter we will be in a situation wherein my balance sheet will be healthy enough to support my working capital as well as my capex requirements. Availability is not an issue today. Availability of energy, availability of crude is more than what is required by the world today. So that supply demand is driving the total cost of procurement of crude for me and for other OMCs also. Any crude coming to India will come on economic considerations only. That is one. We will have intent. The intent has been given by government. We will follow that intent. But any decision of crude procurement is taken based on economics only. That is the only driving force for me.
India needs a strategic policy to address risks faced by manufacturing companies. That's the word coming in from Tata Steel's CEO on Trump's tariff war. Speaking to CNBC-TV18, TV Narendran said that US tariffs will impact India directly through exports. He added that America's actions have made the situation more dire for the industry due to Chinese steel dumping.
So most countries and geographies are going to look out for themselves for sure, right? So we as a country obviously need to look out for ourselves. We also need to take a longer term view because supply chains are getting optimized differently. Earlier it was just getting optimized on cost. Now it is getting optimized looking at the strategic value of manufacturing value chains and other value chains. So I think we need to look at it from that perspective. The tariffs in US will impact us directly and indirectly. For whatever we export as a country, it matters what the tariffs are. As Tata Steel, we also export from Europe to the US. So there is a direct impact from that point of view. The indirect impact is whatever doesn't go to the US ends up somewhere else. So which will have a bearing on international prices and it will have a bearing on the margins in India. So I think one needs to really look at this strategically and have a policy which addresses the risks that manufacturing companies and other companies are getting exposed to because of this situation.
What is the status of the anti-dumping duty that the industry has constantly been asking for? What is the timeline? Do you have any sense?
So I think we've represented to the government for some safeguard duties. We've had a lot of conversations with the governments and they're looking at it very seriously. I think there were a number of queries which we've answered as an industry, as Indian Steel Association. So we're hoping that we will have some news sooner than later because this is a problem which has been going on actually for almost 2 years. China has been struggling to recover and has been exporting more than 100 million tons of steel and its impact is being felt. So I think, and now with the actions being taken by the US government, the situation has become even more dire.
Right, onto a CNBC-TV18 exclusive. Electronics brand Boat is planning to hit the Dalal Street in the next fiscal year. Sources have told CNBC-TV18 that the company is planning to raise 2,000 crore rupees. This is the second time the company is planning to make its market debut. Rachna Dhanrajani joins us now. Rachna, what are your sources telling you?
Right, we have learned from our sources that consumer electronics brand Boat is making yet another attempt at going public. And this time it's planning to raise 2,000 crore rupees through an IPO that is planned in FY25 and 26 at a valuation exceeding $1.5 billion. However, we also understand from our sources that valuation could be a sticking point. But this comes after almost 3 years when the company made its first attempt before ultimately withdrawing while the amount of the fundraise is essentially the same. But what's different this time is that unlike the last time, Boat is now going to take the confidential filing route, just like food delivery giant Swiggy did for its IPO last year. The confidential filing is expected sometime next month. This comes at a time when Boat's revenue fell 5% in FY24 to about 3,000 crore rupees. But the company's silver lining came in when the losses were halved to about 70 crore rupees and reported a positive EBITDA. While its audio segment remained flat in H2 FY24, Boat still holds a 26.7% market share in India's wearables market. Sources also indicate a consolidation is underway in the sector, with Boat seeing a sales boost during the Diwali season after several sluggish quarters. But the question is, why the confidential way? This confidential method was introduced by SEBI in November 2022, allowing companies to privately submit their IPO documents, keeping sensitive information under wraps while evaluating the market conditions. There are 3 key reasons why companies take this route. First, it helps them protect their information from competition. So if a company decides to delay or cancel its IPO, its financials and business strategies remain undisclosed to its rivals. Second, it provides greater flexibility in IPO timing, giving companies 18 months to launch their IPO after SEBI's observations have come in, compared to the usual 12 months. And third is that it shields them from public scrutiny, speculation, investor concerns, and potential legal challenges. All of it makes sense for Boat, considering this is their second attempt at going public, especially because the first time, apart from the market conditions, There were concerns about its China manufacturing links and its rise in business after the ban of Chinese goods by the government had come in during COVID. Swiggy also recently took this strategy and took it for their IPO strategically well, as we saw it play out. So we will be watching out how the boat IPO plays out.
Right. Thank you, Rachna, for that comprehensive update. Time for a short break. Coming up next, a QIP conundrum for India Inc. Share price of about 2/3 of the companies that raised funds last year is now below the QIP price. More details when we return.
To build India's largest startup platform, it takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. HSBC presents CNBC TV18's Future Female Forward, the Women's Collective.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Good, Miraya. Come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2023 Junior Nationals, I placed team gold, individual silver and individual fourth in dressage, and I competed in the show jumping in the Children 1 category.
At the Chennai Equitation Center, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization, and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse. And that, you know, standing up when you're lying down in the sand, in the dirt.
Welcome back. Last year saw India Inc. go on a fundraising spree with stock markets touching record highs. 95 companies raised nearly 1.4 lakh crore rupees through qualified institutional placements. But 2/3 of these shares are now trading below the QIP price. Nimesha is here with more details.
With sharp fall in the broader markets and putting the spotlight on the companies that raised funds via QIP in the last 12 months. Interestingly, the Indian companies, more than 90 companies have raised funds via QIP, and the cumulative amount raised is close to 1.4 lakh crore. But with the kind of sharp sell-off we have seen in the broader market stocks, that value of those fundraising has now fallen below 1 lakh crores, which means there is a cut of nearly 27 to 30% from the QIP price for all these companies. Interestingly, there are only few companies which are still trading in the green. So the ratio is close to 1:3. One stock is in the green and 3 stocks from the QIP price is in the red. Some of the notable gainers after the QIP issues are the likes of, say, Lloyd Metals. That stock is still up 71% from the QIP price. Others like Coforge up 69%, Wockhardt is up 27%, and the likes of PG, Polymedicure, and Sham Metallics are the few stocks where the stocks are still trading above the QIP issue price. But there is a long list of stocks where the stocks are trading much below the QIP price as well. Among the larger names, the first stock on my list is Zomato. That company raised close to 8,500 crores in the QIP, and the stock is now trading below the QIP price, almost down 8%. Adani Energy Solution is another name to watch out for. The company raised close to 8,300 crores via QIP, but the stock is now down nearly 31% from the QIP price. Similar is the case with Varun Beverages. Samudra Motherson is another name. From the QIP price, the stock is still down 31%. And the likes of Godrej Properties and Prestige Estate are the few names where the stocks are trading much below their QIP price. So there has been a clear damage in a lot of these companies which have raised recent funds via QIP in the recent past. But what to watch out for would be 3 important things. Largely, when the company raises funds via QIP, it's essentially used for 3 or 4 major things. One, of course, is the debt repayments. You need to track if the companies are paying debt. In that case, the earnings will get impacted in a positive way in the very near future. So that's the first thing to track. The second would be, are they doing a capex? In that case, the positive impact may come over the next 3 to 4 quarters. And the third potential fund proceeds could be for inaugurating growth. So that's another thing to watch out for in these companies where they've raised funds via QIP. But the bottom line is nearly 2/3 of the companies which have raised money in the QIP in the last 1 year are trading much below the QIP price.
Thank you, Nimesh, for that. Over 50 Indian deportees from the United States are being housed in Panama currently. The migrants are being held in a hotel along with over 250 others of various nationalities. The deportees are receiving medical attention and food as part of a migration agreement between Panama and the US. However, they are not allowed to leave the hotel while international authorities arrange for their return to the countries of origin. Many migrants were seen holding signboards from the window reading "Help." The Indian Embassy in Panama has said they have gained consular access and added that the deportees are safe and secure. India and Pakistan reportedly held a flag meeting along the line of control in Jammu and Kashmir's Poonch district today. This was done in an effort to ease tension amid a recent spike in cross-border firing. Reports suggest that both highlighted the need to maintain peace along the borders. In global news, the Israeli military has claimed that one of the 4 bodies of Israeli captives that was handed over in Gaza is an incorrect one. They claim that Hamas sent the wrong body and has demanded Hamas return the correct body. Israeli Prime Minister Benjamin Netanyahu has also ordered the intensification of military operations in the occupied West Bank. This action comes after 3 parked buses exploded near Tel Aviv. However, no casualties were reported. White House National Security Advisor Mike Waltz has said that Ukrainian President Zelensky must strike a deal on U.S. access to Ukraine's critical minerals. Addressing the media, Waltz said that the U.S. president is frustrated with the Ukrainian premier for not taking America's deal. He added that the insults out of Kiev about President Trump are unacceptable. The U.S. Senate has confirmed Kash Patel as the new FBI director. In his first reaction to confirmation, Patel promised radical changes to the law enforcement agency. He also warned those who seek to hurt America and said the FBI will hunt them down. Patel is a Trump loyalist who has fiercely criticized the agency he will now lead. Back home, the Railways Ministry has issued a notice to X to remove a few videos that had graphic visuals of women victims who died after a stampede broke out at the New Delhi railway station last week. Sources have told CNBC-TV18 that the social media giant has been asked to remove such posts within 36 hours. Meta has said that its named executive officers will now earn a bonus of 200% on their base salary. This is up from the 75% bonus that they earned previously. The change comes after a committee for Meta's board of directors found that compensation was at or below the 15th percentile compared to competing firms. The updated bonus plan will not apply to Meta CEO Mark Zuckerberg. The announcement comes just a week after Meta began laying off 5% of its workforce. Adani Group Chairman Gautam Adani has faced the second largest wealth erosion so far this year. As per the Bloomberg Billionaires Index, his fortune has declined by nearly $12 billion to $66.8 billion. This is due to a 13% decline in Adani Group stock since the start of 2025. Adani is trailing only Tesla CEO Elon Musk, who has seen his net worth erode by $35.2 billion to $397 billion. And with that's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
That is something really, really important as a skill to have.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
So the biggest challenge for me is probably my time. Because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally on international grounds and represent my country in the big competitions.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Daraboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanath.
On my first day in office, I imposed an immediate federal hiring freeze, a federal regulation freeze, and a foreign aid freeze. I signed an order creating the Department of Government Efficiency and put a man named Elon Musk in charge. Thank you, Elon, for doing it. He's a seriously high IQ individual. Now, he's got his faults also, I will tell you that. But not too many of them, which is now really waging war on government waste, fraud, and abuse. And they're curbing inflation and saving taxpayers billions and billions of dollars every single day. And there's even under consideration a new concept where we give 20% of the Doge savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and these are the top headlines that we're tracking for you from the startup world. Wearables major Boat sets sail towards an IPO yet again after withdrawing its draft papers in 2022. plans to raise 2,000 crore rupees at a valuation of over $1.5 billion. However, will take the confidential filing route this time around. Walmart-backed PhonePe is gearing up to go public soon. Stopped short of announcing a timeline. PhonePe, then moved domicile to India in late 2022, was valued at $12 billion as per the last funding round in January 2023. Marketing company Wubba Lubba Dub Dub in talks to acquire digital media platform Scoop Whoop from the Good Glam Group, says a Live Mint report. It claims that the Good Glam Group is planning to sell Scoop Whoop for 18 to 20 crore rupees. Scoop Whoop was acquired by the Good Glam Group in a deal worth around 100 crore rupees in October 2021. The Good Glam Group did not respond to CNBC-TV18's queries. Powertrain controls and auto parts manufacturer Sedimac Mechatronics is ready to raise between 800 to 1,000 crore rupees via public issue, says Money Control. Sedimac's public listing plan comes nearly 10 months after the company secured $100 million in funding from Exponential Capital Partners, A91 Partners and 361 Asset, valuing it at $230 million. Kerala aims to have 15,000 startups and create 1 lakh employment opportunities by 2026, says CM Pinarayi Vijayan at the Invest Kerala Global Summit. In the last 8 years, Kerala saw the establishment of 6,200 startups with an investment of nearly 6,000 crore rupees, creating 62,000 employment opportunities. Those were the big startup headlines that we're tracking for you this evening. Now to a CNBC-TV18 exclusive. Electronics brand Boat is planning to hit Dalal Street in the next fiscal year. Sources have told CNBC-TV18 that the company is planning to raise 2,000 crore rupees. Rachna Dhanrajani joins us now with the details. Rachna, what are your sources telling you?
Sources have told CNBC-TV18 that Boat is gearing up for another shot at the public markets, planning to raise 2,000 crore rupees through an IPO in FY 25-26. This comes after the company withdrew from the process in 2022 due to market conditions. The company took the private funding route instead and rose funds from its existing investors that included names like Qualcomm Ventures, Warburg Pincus and Fireside Ventures. But now sources tell us that with a 26.7% market share in India's wearables segment, Boat is preparing to re-enter the IPO fray, but this time through the confidential filing route. The company's revenue saw a 5% decline in FY24, falling to about 3,200 crore. But the silver lining was that its losses were halved to 70.8 crore rupees while maintaining positive EBITDA. Despite the audio segment remaining flat in H2 FY24, sources tell us that Boat's online sales have picked up, with the Diwali season providing a much-needed boost. However, a key challenge for Boat remains the China supply chain dependence, as the company continues to source a significant portion of its components from China, and though they assemble it in India. To navigate market uncertainties and protect its business strategies, Boat has chosen the confidential filing process, a method introduced by SEBI in November 2022. This allows companies to privately file for their IPO documents, keeping financial and strategic details out of the public eye until they decide to move on. This also protects them from speculation and rivals. Boat isn't alone in taking this approach. Food delivery giant Swiggy also opted for a confidential IPO filing recently. This process provides 3 major advantages. First, it protects sensitive business information in case the company decides to delay or withdraw its IPO. Second, it offers greater flexibility. Companies get about 18 months to launch an IPO after SEBI's observation instead of the usual 12 months. And third, it helps avoid premature public scrutiny and litigation risks, all of which makes sense for Boat considering this is their second attempt at this. By adopting this strategy, Boat is keeping its IPO plans tactically flexible, ensuring it times the market right and secures an optimal valuation, which could, by the way, exceed $1.5 billion, according to our sources. We reached out to Boat for a comment, but haven't received a response yet. Back to you.
Right, Rachna, many thanks for those details. Now, moving on, natural pet treat brand Doxy Chew has raised $88 million in its Series B round led by Ekta.com. The round also saw participation from promoters, Shivansh Holdings and Podar Family Office. The brand has raised a total of $22 million in funding till date, including the current round. The new funds will be used to scale up manufacturing capabilities by expanding existing factories and constructing a new production facility. Joining me now to discuss this further is Bhupendra Khanal, the co-founder and CEO of Doxy. Bhupendra, thank you so much for taking time out and being here with us on Startup Street. You know, you're a natural pet treat brand, right? Can you take us through what you have on offer and what makes you different from the various treat brand options that are already available in the market?
Yeah, so the route that we took from the start, right? This brand actually came with the requirement that we saw for our own dog, right? Where when we give a treat to a dog, we should not be feeling guilty that we're giving something harmful, right? So because most of the dog treats are made from the byproduct of the human food industry or the leather industry, right? So technically, they are not healthy for the dogs. So what we thought is we actually built something which is very interesting. We started with a chew that is made from 100% milk, from yak milk. We started, and then later we expanded to yak milk plus cow milk to increase the production. But when we got this product to the market, right, this was insanely good. Number one, this was made with the Himalayan milk, absolutely 100% natural. We don't use any preservatives or chemicals. Third, it is very hard as any dental chew in the industry. So it perfectly fits as an dental treat, which is a must give to the dogs. Right, and it also has 60% protein, which is more than any other meat-based treats in the industry. So we actually gave the world a really good treat that it needed, and we have been doing this for the last 2 years.
Yeah, so it's a healthy option for your dogs and came about from your own need to provide your dog with a good treat. But you've raised this $8 million and it's primarily for expanding your manufacturing capabilities, right? If you could quickly tell us your current production and by how much do you want to scale this and where will you be building the new state-of-the-art facility?
Yeah, so we have dual uses for this fund. Number one is expanding the current capacity. So as we speak, we are in the chews category, we are already the number one player in terms of production in the world. So we want to consolidate on that and then take it even to a higher volumes. We want to double the capacity in next 12 months. The other main thing that we needed this fund is to do a massive global launch, especially focused on Amazon first strategy in US, UK, and the European markets. So with Amazon, so we are targeting to actually reach a lot of large customer base where we could not have reached otherwise directly through the company. So currently we're depending on the distributors. So we're planning to use both the distribution as well as the D2C strategies.
Right, okay. And you're a premium brand, right? That's how you position yourself. Can you take us through the kind of demand that you're currently seeing and what's the best-selling product and what about pricing? How competitively priced are you?
Oh, we are actually a very premium product. If we see just from the price point, like we are the costliest treat in the UK market, so you can understand, right? So we are really premium product and the brand. But the way that it brings to the use case is it is an amazingly good treat. So any dental treat from the competition, like if it is given to a dog, right? Dog usually finishes in a couple of minutes. But when a Doxychew bar is given to a dog, right? Dog takes usually 1 hour to 2 days to finish based on the health and the age of the dog. So we actually give a lot of utility benefits. And that is our biggest selling point, a nutrition with a extremely good use case.
Right. And how many orders do you get typically on an annual basis? And what's the percentage of your orders are reorders? And if you could tell us where your revenues are currently at?
Okay, so we have chosen not to bring our revenues. Some of the numbers that could be interesting. So our largest market is UK, but the fastest growing market is the United States. So we have solved more than 50 million treats so far. We have reached close to about 30 million pets globally, and as we speak, we are in 30 countries selling in both online and offline mode. And in terms of the number of stores that were present, we have already crossed over 50,000 stores globally.
All right, Bhupendra, thank you so much for joining us on the show, but we're completely out of time and we wish you all the best on this journey going forward.
Thank you. Thanks so much for having me.
And moving on, Razorpay, now over 10 years old, has had a front row seat to India's fintech revolution. And the past 12 to 24 months have also included critical milestones such as re-domiciling to India, getting RBI's approval for their payment aggregator license, and also processing over $180 billion in total payment volumes annually. We're here at Razorpay's annual flagship event, Razorpay FTX, to speak to its founder and CEO, Harshal Mathur, about what's next for the fintech unicorn. Take a look.
It's always great to look back at the journey and then see what's next. And that's been something that we keep focusing on, that, hey, we have achieved a lot in the last 10 years, but the world is just changing so rapidly. And of course, the biggest thing that is the focus for this year's event and this year's launches is AI. I've said it before, like AI is going to fundamentally change every process. Things that we see, hey, this is done and this is the best we can do, is not the best anymore. And most of our launches around that. So when we said, hey, our onboarding is the best and the best you can get, we said, like, AI changes it. It is not the best anymore. Similarly, like our developer documentation and integration is the best that can be. But the AI changes. Now you don't need to look at documentation. You just ask your AI, hey, can you integrate this for me? And it will do it for you.
Well, sounds like a very costly affair to having to upgrade your products every few years with the new technology, right? You said it's been, of course, 10 years now for Razorpay. If you sort of look back at the journey in a time lapse, and you showed us the video of that founder that really probably resonated with a lot of people in the audience, including you. Did you have such moments when you look back that stand out in these 10 years?
Oh yeah, so many. Like the startup journey is full of ups and downs. A lot more downs, a lot less ups. So the ups are a lot more visible outside. The downs are a lot more visible inside. So it's been it's been a roller coaster journey, and I couldn't be more proud of it. I think we are here because of all of that had happened. I think some of the most hardest parts were from day one, like both of us coming from completely technical background, completely non-finance background, to getting into a space of finance, to a space that's regulated, to getting a license, to starting something in that space, and then every day, like figuring out like how can we use technology to change it. And I think the focus for us, the only brand value for us was that we'll be the most innovative company that's.
But you said the downs are really what you see inside. The world doesn't see it. But what have been the biggest ups, you'd say, if that's something you can disclose?
Yeah, biggest ups, I think, Nevan, I think getting the first 100 customers was an extremely hard affair. I remember both me and Shashank used to go to co-working spaces, go to random Bangalore startup groves and say, hey, we are building a payment gateway, do you want to try it out? And there are people who say, yes, we are interested. And we'll actually go to their offices and sit and code their payment gateway for them. Because like, we didn't want them to have any reasons to say, hey, I'll take a few more weeks, I'll take a few more days. We'll say, we'll sit in your office and code it for you. Can you just give us a shot? I think, and when any customer would go live, I remember in the early days, we used to have this channel where every single transaction would be shown. So, not the names, but like a 20 rupees payment happened, 100 rupees payment happened. Every single transaction we'll celebrate. So if somebody did a large payment like at 10,000 rupees, we'll just celebrate. Hey, somebody did a 10,000 rupees on Razorpay. And so, that's the time, and today, of course, as you said, like we do $180 billion of payment volume. So there's no end to how big India can be.
You had a bit of a pause here because RBI was in the process of approving your license for the payment aggregator business. Since then, have you more than made up for the time that you had lost during the process? And how many merchants do you have now, and what pace are they growing at?
So the 1 year, almost a year, 10 months is when we were paused from onboarding, and of course that was a pretty hard time, I would say. Those are one of the downs because for a fast-growing company like us, because for a fast-growing company, when you're not growing, that's really hard because there's a large team that focuses on growth, that focuses on getting new customers, answering their queries, doing that. And we took a call, first of all, that, hey, no jobs will be affected. So we didn't do any layoffs, any downtimes. We moved our teams, reprioritized things so that we could still utilize, because we knew that, hey, it's going to get approved. Like it takes 10 months, 12 months, whatever, we'll figure our way out of it.
What is FY25 looking like now that you're close to the end of the year?
Yeah, FY25 has been actually the year of our fastest growth in the last couple of years because we came out of the embargo. So there was a lot of latent demand through the year. On an overall basis, our payment business is profitable and it's doing really well. It's growing, scaling up from there. The other aspects of the business, so the payment business is profitable and growing at about 50 to 60% year over year.
Okay.
So that's an amazing growth for that large business. The other aspects of our business, while not profitable yet, are growing at 100% plus year over year. So those are our growth drivers. So this is RazorPay, RazorPay Engage, our international business, our POS business, all of those are growing 100% year over year.
Yeah.
So a lot of growth coming out of that, and I think that's the right balance as a company, that we have one business which is profitable and growing well, and the other business is growing really fast and we continue to invest in. I think at least for the next 1 year, we expect this is how the ecosystem will be for RazorPay.
Okay.
I think in a year or two out, I think we'll be profitable at an overall level, and that's when we feel we'll be the right place to look for a listing or something like that.
Since you brought up the listing, bring us up to speed. You're in the process of re-domiciling. How much is that costing you? When is the process going to be completed, and how large a listing are you looking at?
Yeah, so the flip should take maybe 3-4 months more. I think it's not in our control. It's a regulatory process. The tax is also not in our control. So there are figures around here and there, but the actual number will depend on how the regulators value us and how much they decide that we need to pay. It's a large number, but I think it's a heavy cost, but it's a small price to pay for coming back to India, the way I would put it. I think once that flipping is done, it will take about a year and a half or something from there to go public listing at the minimum. So I'll say we are at least 2 years away from our public listing.
Okay, so 2027 is the year that RazorPay will be publicly listed?
Fingers crossed.
On that note, it is time for us to head into a short break. But coming up on the other side, a conversation with Lightspeed India's Managing Director, Anuj Bhargava, on Liftoff, a 2-day portfolio investor day hosted by Lightspeed. Stay tuned for more.
Well, yes, big promises for women in Delhi as the new BJP government takes charge. Chief Minister Rekha Gupta has assured that the first installment of the 2,500 monthly aid for women from poor families will hit their bank accounts by March 8 on the International Women's Day. Now, beyond this, the BJP's manifesto has laid several other women-focused schemes. For example, the 21,000 grant plus 6 nutritional kits for the pregnant women, 5,000 rupees for the first child, 6,000 rupees for the second, gas cylinders at 500 rupees plus 1 free refill on Holi and Diwali, 250 pink toilets with sanitary pad vending machines and feeding rooms, a woman-only police battalion for safety. Now, 6 months paid maternity leave for domestic workers is also on the manifesto. But while all of this sounds promising on paper, the practical challenges are plenty. Key questions remain. Who qualifies as poor enough to receive the 2,500 monthly grant? While what will be the eligibility criteria? The 6 months paid maternity leave for domestic workers is a progressive promise, but how will the government ensure that helps are actually getting this leave without losing their jobs? In households where replacements are hard to find, how long can domestic workers realistically stay away from work? So while the intent is clear and the promises are big, it's the delivery on ground and the fine print that will determine the success of these schemes and success of the BJP's new government after 27 years.
The brands that really do break through have a few things I think about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and
Welcome back. It's still with us on Startup Street. Multi-stage global VC firm Lightspeed is hosting its third edition of its two-day Portfolio Investor Day Liftoff in Mumbai. The event enables investors from over 100 global marquee funds to interact with leading Lightspeed India and Southeast Asia-backed startup founders. My colleague Shruti Mishra caught up with Anuj Bhargava, the managing director and head of corporate development at Lightspeed, on the sidelines of the event. Take a look at that conversation.
Anuj, many thanks for joining us on Startup Street today. And, you know, we exactly met a year back at the second edition of Liftoff, and this is the third edition. So tell us, how is this bigger, better, and what is the kind of impact you hope to make?
Thank you, Shruti, once again for having me here, and it's great to see you again. You're right. I mean, you know, this is the third time we're doing, you know, Liftoff, which, you know, is our marquee event. It brings together the best and brightest founders from our portfolio together with you know, a wide variety of global funds. And I can't remember the numbers last year, but this year we've got 40, 45 companies meeting, I think 120 investment funds across, you know, stages. This year we've also called, you know, a lot of pre-IPO funds and family offices as our companies have sort of, you know, matured and grown.
And, you know, you mentioned global investors are coming in. I want to talk about the funding picture, both domestic and globally for the Indian startup ecosystem. What are your general views on this? And also in this process, you know, what role do events like Liftoff play?
Good, that's a great question. So look, I think, you know, to answer your first question on the funding, look, I think, you know, the Indian early stage venture ecosystem is extremely robust. You know, we've obviously not seen the levels of activity that we saw in 2020 or 21.
Yes.
But I'd say there's a very healthy level of deal making going on currently. To give you an example, you know, we at Lightspeed, I think, wrote about 15 or 18, you know, new checks last year. You know, and in addition to that, we wrote about 12 follow-on checks into our companies, which I think has remained sort of fairly consistent throughout. So I'd say that the funding environment is great for early stage companies, even for growth names and late stage growth names, you know, that have pegged themselves to the public markets. Obviously, we've seen a bit of a correction recently, but the overall environment has been extremely robust. And, you know, of course, markets go, you know, in cycles, and, you know, we're seeing, you know, valuations come off.
Yes.
But we're extremely positive on the overall outlook, both on the public side and the private side, for new age companies in 2025.
Okay, let me now shift focus to the IPO market in India that saw a surge last year. Even in 2025, we've got a beeline of startups that are going to hit the bourses. What factors, Anuj, are driving interest in public market listings?
Look, I think, you know, the market in general is very hungry for new age companies. Let me give you an interesting stat. In India, new age technology companies form about 3% of the overall market capitalization. In the US, that number is 30.
Yes.
So there's a tremendous amount of scope for new companies to list. And, you know, as long as they have the right equity story, they have a large market, they have market leadership, and they have sustainable unit economics, we'll continue to see a wave of listings from internet companies even in 2025.
All right. Let me talk about some of the emerging sectors, according to you, that are going to be of interest, and your top bets, you know, the hot sectors for India and Southeast Asia.
Look, I mean, we've stayed, you know, very fundamentals focused and first principles across, and, you know, we're largely, I'd say, sector agnostic. You know, so we continue to back the best companies in India and Southeast Asia in consumer, in enterprise, in fintech. We've obviously, you know, have taken, you know, a very strong view on quick commerce as well with our, you know, investment in Dizepto, which we're very excited about. We also backed PhysicsWallah last year, which is again, you know, a company that hopefully will IPO this year.
Yes.
So you can see the spread of sectors throughout. In terms of some of the new emerging sectors, of course, look, you know, we've, as a global fund, taken a very positive view on AI. I think last year, you know, 70% of our dollars deployed globally were in AI.
Okay.
And even in India, look, I think, you know, we've been very active at all levels of, you know, AI investments, whether it's the foundation level with Sarvam, or it's the infrastructure level with, Portkey, or frankly, it's the application level with, Cure AI. We've been very active, and we, hope to continue to do that, this year as well.
It is Friday, and it's time to take stock of all the deals that took place in the startup world this week. According to Venture Intelligence, this week saw 11 deals worth $134 million. B2B e-commerce unicorn Udaan got $75 million from Lightspeed Ventures and others, while visual merchandising enabler for the auto industry Spine raised $16 million from Vertec, Axel India, Storm Ventures and Ulterior Capital. That's not all. Singular AI raised $10 million from Nexus Venture Partners and Dell Technologies Capital, while Pet Street brand Doxy Chew got $8 million in a Series B round. Meanwhile, Rare Rabbit bagged $6 million from A91 Partners. This year has seen a total of 132 deals worth $1,183 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Really good on product, because there's a lot of claims out in the market. But if you look at minimalists, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product, and they've kept the brand very consistent, very clean, very single-minded, and they've been very careful in pricing. Omni-channel behavior is increasing in India, and it's happened across the world. People buy from 6-7 channels. I mean, you'd probably, even if you're looking at something, you'd probably surf somewhere else and eventually buy somewhere else. So I think that trend of omni-channel behavior is not uncommon, and it's here to stay. Therefore, we as a company got to serve our consumers and shopping missions wherever they are. And what quick commerce has done really is, in certainly the very large cities where density is high, where actually consumers were already, shoppers were already calling and getting things done, delivered on phone or WhatsApp. It was an existing behavior, and therefore it wasn't that difficult. It's hard to get around the city in terms of navigation and traffic and so on and so forth, parking. So what really quick commerce has found is it's found a shopper need, it's found a consumer gap, it's filled it.
Tesla CEO Elon Musk is considering starting retail operations in India this year, and it could be as early as April this year. Sources say the company is considering importing electric vehicles from its plant in Berlin and then selling them in India via company-owned showrooms. Tesla has identified showroom locations in BKC in Mumbai and AeroCity in Delhi, according to industry sources. In fact, their hunt for showroom locations has been on for about 12 to 18 months. Tesla is planning on launching an EV under $25,000 in America and global markets, and the company could consider importing this from Berlin for sales in India. Now, with 70% tariff structure in India, the cost of this car would be around 37 lakh rupees in the India market. Tesla expects Indian government to further reduce duties on imported electric cars from 70% due to the threat of reciprocal tariffs from the Trump administration, not just on the Indian auto sector, but across product lines. Tesla has not committed to manufacturing as yet, but it has committed to sourcing more parts from India. The company is likely to source components worth over $1 billion from India in 2025, and sourcing from
When you think of Sony, you think of entertainment in India. They've been leaders for, what, 30 years now. But a lot has changed since the time they first came to India. Now, when we're looking at in the future as well. The person who's leading the company, Gaurav Banerjee, been here for 6 months. What his strategies are for the future is something that we're going to discuss on this very special conversation. Thank you, Gaurav, for joining in.
Thank you for coming here and talking to me. Thanks a lot.
6 months at Sony, right? I mean, before that, you've had a stellar career and also known as the content king. So let me just, start by asking you, when you joined, what were your thoughts about Sony? And 6 months in, what are your thoughts? What do you think about the future here?
So obviously, I was really excited to walk into this office 6 months ago. This was the first time that I was stepping into the offices here or any Sony office. And I was excited because this company has meant so much to Indian consumers for so many years. And it's such an amazing global brand. And of course, personally for me, when you enter the corporate world, when you enter the media world, you hope one day, you aspire to hopefully have an opportunity to lead a team, to lead a company. So this company gave me that opportunity. So I have been excited from that day. It has been a great last 6 months. Very, very excited with what the team has been able to achieve in such a short time. But also, of course, very excited about the plans that we have for the future.
Give me specifics. When you joined here, what were you looking at? And, in the last 6 months, what have your initial thoughts been?
So I think, when I came in here, one of the big ideas that I was wanting to work on is the content philosophy here. And you called me the content king. I am certainly not that, but I am a student of content. And I'm very proud of the fact that I actually went to a film school and spent my entire life thinking about stories and making shows. As you know, you and I were talking just now. I spent 7 years working in news channels where I used to anchor, not as well as you do, but so I used to produce shows. I have done many of the jobs that you do growing up and sort of building a career from the first level in. And therefore, what I wanted this company to be known for is its creativity, its content, the selections that we do. And I was hopeful that in the first 6 months, we would be able to have something to show for it, saying, what does this really mean? And therefore, one of the big things that was sort of hurting us as a company is that our flagship channel, SET, had not been doing that well.
Exactly.
Right? It had had an indifferent last 3 years. And therefore, I wanted to ideally work with the team to figure out how do we stop that decline and hopefully turn it around.
What were the things that you did? What were the decisions of the last 6 months?
So the first decision was, we felt that Sony had a very distinct, unique identity, right? It was known for a particular kind of shows. And some of that identity had got diluted. And there was a lot of programming there which I felt was indifferent, but much more than that, it was kind of not differentiated. And we sort of said, okay, that's not for us. We're going to clean that out. And we're going to go back to reiterate the original iconic positioning of SET.
Which is what?
So that is a lot of content that is not your regular daily soap kind of content. So this is content that men and women can watch together. And it is also about a lot of iconic IPs that have got created. So one of the first shows that we chose to launch is a show that we brought back after 6 years, CID. Right now, it's a great brand. It's an amazing franchise that has existed for over 2 decades. And the new season, when it launched, was the best fiction show launch on the channel in the last 6-7 years. Right? So the other thing that we have done is really polish the existing brands that were with us. So we did a amazing launch for Indian Idol.
Got it.
Right? And the ratings of that show are some 30% higher than the previous season. So a bunch of these things have meant that the channel, which was roughly in the early 50s in July, is doing in the late 80s today. So we have seen almost a 70% increase in ratings. So I was keen that we get behind distinguished brands and show some results which are kind of in the public domain. And therefore, people inside this building believe that, okay, we can work really hard, we can work in a Sony way, and we can establish some good wins in the marketplace. We have to be very focused on our brand. We have to be building our IP. Right? And we have to be doing things which are different from what others are doing. And we must believe in quality. So I think those 3-4 very simple principles is what we have tried to do across a range of brands now. And we have seen some great results on SET. I spoke about CID and Idol. On Sony Sub, our other really big GEC, we have had a great launch to Tenali Rama, which is the best fiction show that Sony Sub has launched in the last 6 years. And therefore, that channel has also grown. On Sony Live, we decided to make Shark Tank, which is one of our most successful shows, exclusive to Live Alone. And that has also seen a big jump in viewership, particularly from smaller cities and on connected TVs. So I think across our big content channels on TV and digital, we've taken a few focused bets on some really great iconic brands and really look to grow their viewership in a big substantive way, in a way where the data and the consumer love speaks for itself. Right? So it is, you asked me for specifics. I've thrown a lot of data at you.
You've thrown a lot of data at me. You've given me a lot of specifics. What we'll do is we'll speak about television, we'll speak about Sony Live, we'll speak about your strategy for Sub, we'll speak about sport, something that you love as well, cricket in particular. So this was a good appetizer, so to say, for the main course. Let's go across and let's sit in what I'm told is an auditorium in your office, and then we go ahead and have that conversation.
Sounds good. Come.
All right, I'll follow you.
Okay.
Is significantly going to increase for Tesla over the next few years. We also know that Tesla CEO Elon Musk is likely to accompany Trump during his India visit this fall. What we're also picking up is that Tesla is looking at manufacturing in India at some point, maybe not this year. They are still weighing their options whether they want to apply for the scheme for promotion of manufacturing electric cars in India, which would give them a concessional 15% duty. But their first attempt would be to start retail operations and negotiate lower tariffs with the Indian government. US Commerce Secretary Howard Lutnick and Commerce Minister Piyush Goyal are likely to have a meeting very soon as well. And Lutnick and Goyal will be discussing the bilateral trade agreement and auto tariffs. In New Delhi, we believe meetings are being held on the bilateral trade deal with the US, and different departments and ministries are giving their suggestions on the contours of the proposed trade deal with the US.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
We were having this conversation while we were walking around the office, where Gaurav gave us a fair amount of tease into what he's doing here, what he saw here. Let's get this formalized now. Let's start with linear. everyone's talking about linear television as reducing viewership, but in terms of the revenue that it generates, it's a lot higher than digital, right? So it's still relevant from that standpoint. What's your strategy here?
It's incredibly relevant, right? In a market like India, where television has done an amazing job in two ways. One is on the wide reach. So we have a huge television market in this country, and it is a market which is actually growing and will continue to grow.
What is the audience base of television according to you right now?
So I think as per the data, it's about 700 million, right? So it's a very, very large audience, and that's something that nobody can and nobody should ignore. And here at Sony, we are certainly not ignoring that.
So you're not of the camp that TV is dying?
Oh, there is no evidence of that. In fact, there is a lot of evidence that TV is set to grow in our country. It has been growing and it will grow further. I think we have had some challenges on pay TV. Right. And those challenges have been there because of the growth of connected TV. And perhaps in some households, people keep choosing between wanting to be free and wanting to be paid.
What about the advertising fraternity? Because if I look at all the corporates, their commentary is that they are directing more money towards digital than television. In fact, someone as large as Hindustan Unilever has said that for some of their new products, the proportion of spends on television is a lot lower than what it was earlier, with the spends on digital having increased. What are your thoughts on that?
No, so I think all our advertisers, and definitely Hindustan Unilever, continues to be a big believer in the power of TV. And they're demonstrating that by the checks that they're signing.
All right.
And I think if you think of it, one of the big reasons why companies like HUL believe in TV is also because TV is the best place where you can build your brands, where there's a lot of dedicated viewership that happens on a big screen and with a family. And it's entirely safe. And in fact, there are now more than one brands which, having sort of jettisoned TV or gone lightweight on TV in the last few years, are sort of coming back and spending more money behind television, right? Because they recognize that not being enough on TV is a little bit of a problem for their sales. And of course, digital is growing, as it should, because when you think of it, the number of screens in our country is exploding. And the amount that people are spending watching video is also growing.
What's your average screen time?
Mine? It's really scary. All day, all night.
So the reason I ask you is because if you had to make a forecast basis past trends, at what rate is the advertising spend in the industry likely to increase at? At what rate would it be growing for television, and at what rate would it be growing for digital? What would you say for the next 3 to 5 years?
I'm not the expert on being able
but you have the data.
Make forecasts, but if I want to look at the data the way it is, we'll expect television to grow, right? And
high single digits, double digits.
It could be early double digits is what my hope will be. And I think we should continue to expect digital to grow fast.
So let's talk about the digital business then. Recently the big merger that took place between Jio and Hotstar has created a behemoth of all sorts, widest portfolio that one can imagine, etc. And at a time when the space anyway is extremely competitive, some large deep-pocketed international players, etc. as well, what's your strategy when it comes to getting subscribers on Sony Live, getting them to stick around with you, and differentiate your content? People who want to watch that will have no option but to catch it on Sony Live itself. So what's your strategy, so to say?
So I think Sony Live is our number one strategic priority.
What are the number of subscribers right now? Where do you expect it to go?
We expect it to grow phenomenally, but I'm not going to give you exact subscriber data right now. But the big thing that I would like to tell you, since you asked about our strategy, is that we feel there are 4 very strong pillars for Live. Right? The first pillar for Live is that it has an extraordinary bouquet of amazing sports content. So whether it is all the football coming out of Europe, or it is 3 of the 4 Grand Slams, and a bunch of cricket rights from all over the world, and the stellar pick is the ACC rights that we just got a few months ago. So I think a huge continuous supply of high quality sports that means a lot, particularly to premium consumers in India, is the sort of bedrock for us. The second part of it, which is foundational, is the incredible quality content from our television network. So whether it is a CID or an Indian Idol or a KBC or MasterChef, all of these shows that start on our TV network do very well for us on our digital network. The third part is the originals that we have. And here we have had tremendous success in building some of the finest digital exclusive shows that have been built in this country. The first season of Scam, the incredible performance of Rocket Boys, Andekhi, Maharani, so Gullak. So there are amazing franchises that this company has created, and I'm hopeful that we can build on that as we go forward. And the fourth pillar for us is that we believe that we want Live to have a play across different languages and not just in Hindi. And therefore, we're beginning to make investments in different languages like Tamil, Telugu, Malayalam. So I think we'll see a lot more in the regional domain on Live as well.
Let's start with, the sports part of it. Yes, you do have a bunch of very well-respected properties in the world right now, but what you don't have is where a lot of the viewership is. It is the BCCI rights, it is the rights to, the ICC championships, it is the rights to the IPL itself. And one believes that, with Jio, Star together and a lot of cricket content being concentrated towards one group itself, what is your sports strategy? How do you make it profitable?
Yeah, I think we have been really focused that we want to play in sports, but we need to have an eye on profitability, right? And I think in keeping with that, what the company has done over the last few years is really, really good. What we have done is built on it further in the last 6 months. And there, the idea to add Asia cricket rights has been very, very helpful to us, because now in the next 6 to 7 months, we have roughly 35 days of top-tier premium cricket on Live and on the Sony Sports Network. So as you know, we have rights to all cricket coming out of England, and the Indian Test team goes there this summer to play 5 Test matches. So that's in June, July, August, and then in September, October, we have the Asia Cup. So I think between these two, we have about 34 days of top-flight cricket action involving the Indian cricket team. In addition to that, we also believe that football is something that's really growing among young consumers in India. So, I have an 18-year-old son, and the one sport that is deeply interesting to him is football, right? And particularly club football at the top level. So even while I didn't work here and I worked at a competitor, we always had a Sony Live subscription all 12 months because of his deep fanatical interest in European soccer. So I think we have amazing assets there, including 3 of the 4 Grand Slam tournaments, which bring in a very dedicated viewership and good monetization against them. So I think that's the play that we have, and we're pretty excited
for
about it.
India cricket, as they go to England and the ACC that you have, etc., will I be able to watch it for free on my channel, on Sony Live?
We'll talk more about that closer to date, but probably not. So I think we want to build a business, right, which is profitable, which allows us to keep investing in the quality of our technology, the quality of the content, and therefore having 2 different revenue streams is very important.
At what rate are you adding subscribers in Sony Live every month?
I'm not going to talk to you about our subscriber numbers today, because I think this is early days. There's a lot that we are doing and the team is doing. This is not the time to count the subscribers. This is the time to just double up our efforts in building the product and making our package to be really, really attractive to to
And do you fear there would be a price war in this space because everyone's looking at the numbers here?
No, I don't believe so. I think we're in a good space. We have marked a very different territory for ourselves. All of that is very different.
So it's more of an and strategy than an or strategy. If I have Netflix, I should have Sony Live as well, as against between Sony Live and Netflix. That's a lot of pressure you're putting on my wallet.
I think that's for you, and that's for our consumers to decide. We don't want to decide for you. We just want to make our offerings so compelling that hopefully you'll come in and you'll sample, and then you'd like what you'd see, and therefore you'd continue to retain us.
What is typically a hit ratio for a successful?
Yeah, that's what I said. So I think if it's 1 out of 3, it's amazing.
What's the payoff for a successful piece of content in terms of
massive audience love?
Money-wise as well. Come on, let's. Is it 8x, 10x?
So that's where the money follows, right? So if you we are all finally in the business of getting attention.
Got it.
So if I've got your attention, right, we'll be able to monetize that. But what business are we in? We're in the business of getting that attention.
There are a lot of regional specialists who've come up with apps, etc. They're doing extremely well as well. So how do what's your regional content strategy here?
Yeah, very important to us because, as you know, India speaks in multiple languages and not just in any one language.
What's the current share of voice?
So I think we've largely been a network which has had a huge anchorage in Hindi and a very limited play outside of Hindi. We're sort of beginning to transition and start speaking in other voices. So I think we had a great show last year, Brinda, which was in Telugu, and that did very well on the app. Then we had another show which featured Ashutosh Govarikar, Manvat Murders, which was in Marathi. So I think we've done some test cases which have done well for us, and therefore our intent is over the next 12 to 18 months do a lot more and see how we can sort of build those franchises out. So I think that's one really important pillar. What's happening with consumers today is people are a lot more open to watching dubbed content. Right? Nobody sort of, worries about it. It's no longer a barrier. People actually really, really love watching it. So I think we are making significant investments in dubs to make the content available in multiple Indian languages, and we believe that gradually that viewership will also grow.
The big thing that everyone was talking about all of last year was the potential merger with Z that has fallen through. But are all doors shut for that? Merger now with Z, or is there a possibility that maybe talks revive?
I think all of that needed to be said on that got said before I came into this building. So as far as my agenda is, and for what everyone in this building is focused on doing today, is just building a great portfolio of amazing content.
If they were to come back and make another attempt at this, what would you say? What would your reaction be?
No, I think we've got a job at our hands, and me and my team, we're really focused on that.
If not Z, then what?
Oh, I don't know. As I said, I think our clear focus right now is we've got amazing brands, and we've got a great opportunity to grow them. We have to grow them in Hindi, and we have to grow them in other Indian languages, and we have to grow them on television, and we've got to grow them on digital. So I think we've got our hands full.
Let's flip it. Instead of you buying someone, what if someone was to make an offer to the parents saying that, okay, we're interested in Sony. They have incredible IP. They have good reach. They have 2 channels which are doing extremely well, the digital as well. Would that be a possibility that Sony, the parent sells to someone?
I can't answer on behalf of the parents, but I don't believe so. I think we've been here in this market for nearly 3 decades now. And I think the Sony Group is a big believer in the potential of India. And I think this is a strategically hugely important market for the Sony Group. And therefore, what we wish to do is to continue to build a great business in India. That's my brief.
Right. How many times have you watched Suryavansham on Set India?
I watched it a few times. I quite like it, actually.
How do you value? Do you have a count on how many times it is played?
No.
Okay. Your favorite piece of content from your library?
Scam.
And your favorite piece of content not from your library?
Can it be the previous library that I created?
Either was.
Okay. Then Arya.
Arya is what you like?
Yeah.
Something that you wish you had in Sony that you missed upon, or you passed that on?
Oh, I had such a great tenure in my previous company. I was there for over 16 years. So no, I want them to have everything that me and my team there helped create. Nothing that I'd like to bring forward with me.
What about the subscriber target that you have for the next 3 years? Do they become 3x, 4x, or 5x?
It'll be great if it becomes 5x.
Okay, but 2x and 3x are the base case.
Hopefully.
I have to ask you this as we end. What do you make of this entire freedom of speech sort of debate which is currently raging online? A lot of people going independent, putting out their content on social media, and then there has been a fair amount of outrage around that and stuff as well. So, as an organization, if you were on the wrong side, how do you deal with it?
I think this is a very important and sensitive issue, and it also talks about the power that people have when you have a big megaphone in your hands, and how sort of you need to be responsible with it. So I think it's a big debate. It's an important debate, and I think we need some measured thinking and talking around it from all sides. The idea of entertainment is not an idea which is just about having a relaxing time. I think it's a little deeper than that. I think we shape minds, we shape society, we shape thinking, and therefore all of that brings in and on good days it gives us a lot of respect and a lot of love. But all of that respect, all of that love, all of that fame also comes with some amount of responsibility, which is important to acknowledge.
Thank you so much. This was a great conversation.
Thanks a lot. Really, really good talking to you.
आज की जो उनकी रिपोर्ट है संगम की, कि संगम और उसके आगे पीछे जो बीओडी है वो 3 या उससे कम है, और डिजॉल्व ऑक्सीजन की मात्रा ये 8 और 9 से अधिक पाई जा रही है। यानी संगम का जल स्नान करने लायक भी है और आचमन करने लायक भी है। जो लोग इसका दुष्प्रचार कर रहे हैं उन सबको इस बात को देखना चाहिए। फीकल कोलिफॉर्म के लिए फीकल कोलिफॉर्म बढ़ने के बहुत सारे कारण हो सकते हैं। या तो कहीं सीवेज लीकेज है, या बहुत बार होता है कि वे इस प्रकार की नदियां हैं कोई वह चैनलाइज तो है नहीं, भैंस है, गाय है या अन्य जानवर उसमें आते हैं, नहाते हैं, उसके कारण भी, उनके गोबर आदि के कारण भी इसकी मात्रा तेजी के साथ बढ़ती है। लेकिन प्रयागराज के संदर्भ में जो मैं आपको स्पष्ट करना चाहूंगा कि 12, 16, 20, 25, 30 जनवरी, 5, 10 और 13 फरवरी को जो सैंपल के परीक्षण लिए गए हैं उसमें संगम नोच पर फीकल कोलिफॉर्म की मात्रा मानक के अनुरूप पाई गई है। ये उत्तर प्रदेश पॉल्यूशन कंट्रोल बोर्ड का है, जो 2500 MPN प्रति 100 ml से एक कम पाई गई है। इसका मतलब जो दुष्प्रचार कर रहे हैं केवल कुंभ महाकुंभ को बदनाम करने की साजिश का हिस्सा है।
Tesla has restarted the recruitment process for India soon after the company's CEO and head of US Department of Government Efficiency met Prime Minister Modi in Washington, D.C. Tesla, the most popular global electric car maker, has advertised on LinkedIn and also on the career page of its own website for 13 India-specific roles in Mumbai. This includes job postings for store manager, Tesla advisor, service technician, parts advisor, delivery operations specialist, order operations specialist, and customer support supervisor. The nature of job roles advertised indicates that Tesla is looking to open a retail store in India very soon, perhaps in Mumbai. Sources tell us that Tesla could start India sales this year and may want to start it with affordable range of electric cars. Currently, Tesla's entry-level car is the Model 3, costing $30,000 or 26 lakh rupees in America, and Tesla is considering launching a more affordable electric vehicle at $25,000 or lower, which would be rupees 22 lakhs without tariffs. Sources say Tesla has been scouting for showroom locations in India and may want to begin sales operations via company-owned showrooms this year. That is, before starting manufacturing. They may consider importing their affordable EV car into India from their plant in Germany or China initially. There have been reports about Indian vehicle makers being in touch with Tesla for contract manufacturing or service support or charging collaboration, but none of these reports have been confirmed independently. This is also not the first time when Tesla has recruited for the India market. Tesla and Elon Musk have had an on and off relationship with India over the last few years. Musk has often complained about high tariffs in India. In 2020, he had tweeted to say that Tesla will launch in India next year for sure. Then in 2021, he said there were a lot of challenges in India as tariffs on cars were the highest in the world. He had set up an R&D office in Bengaluru and also taken a space in Pune on rent. A team of India professionals were also hired for various roles ranging from government affairs, head of charging, head of HR, but those individuals have left Tesla over the years to join other companies. Musk himself was slated to visit India last year but cancelled at the last moment. Tariffs on imported fully built electric cars is still 100% in the country. However, India has offered Musk and other EV makers a concessional 15% duty as opposed to 100% currently if they commit to manufacturing in India within 3 to 5 years with an investment of $500 million. Will Tesla apply for this scheme to enter India, or will Musk Hello and welcome to Global Eye. I'm Parikshit Luthra. The big global story we are tracking this week. US President Donald Trump has hinted that a trade deal with China was possible, but did not clarify further. Trump reportedly told journalists on board the Air Force One that he has always had a great relationship with Chinese President Xi Jinping and that he looks forward to getting along with China. Hints that of a rapprochement comes amid escalated tariff tensions between the two countries. Within a month of taking charge as the president, Donald Trump imposed 10% tariffs on Chinese imports. In retaliation, China levied 15% tariffs on United States LNG and coal, along with 10% duty on oil, farm equipment, and automobiles. Even during his first term, Trump had signed a trade deal with China. As per the agreement, China had promised to buy US products worth $200 billion and lower some trade barriers and staying with China. The trade battle as well. Chinese President Xi Jinping also met top business leaders, including tech executives, earlier this week. The president's move signals support to bolster private sector growth in China. Alibaba's Jack Ma, who was sidelined 4 years ago, was spotted attending this meeting. To discuss that and more, we're now joined by Sean Rain, founder and managing director of the China Market Research Group. Mr. Rain has also authored the book, The Split. Also with us on the show is Inar Tangent, Senior Fellow at the Tahe Institute. He's also the founder and chairman of Asia Narratives. Gentlemen, thank you very much for joining us on the program. Sean, thank you very much. Let me begin by asking you, let's start with the meeting of tech CEOs that was chaired by Xi Jinping. You had Jack Ma, you had CEOs of Xiaomi, Tencent, all present over there. What were the big takeaways and what's the larger message and significance of this meeting?
Well, it's a huge significant meeting. If you think about it, Xi Jinping himself hasn't met with the larger Chinese business community in a symposium like this since 2018. So for 7 years now, Chinese entrepreneurs and businessmen and investors have been wondering, Has China turned more anti-business? Is it not capitalist? Is it okay to be rich? And that's why you've seen some of the animal spirits in China have gone down over the last few years. So it was a huge, very important meeting for Xi Jinping to pop up and meet with Jack Ma and show a strong signal to domestic investors and international investors that, yes, it's okay to try to be greedy again. It's okay to try to make money. And importantly, the Chinese government is going to work with the private sector to try to spur the economy again, because it is bad. You saw that retail sales only grew 3-4% in 2024. Fixed asset investment was anemic, around 0.1% on the private sector side, because Chinese consumers and Chinese small business owners have lost their animal spirits. That's why this week, huge signal change for the Chinese economy.
Right. And in our tangent, what do you think will be Xi Jinping's push in terms of economic policy? Now that he met all these tech CEOs, he said that he appreciates the work that you do. Given the significance of that meeting, what is the kind of policy shift that we could possibly see in the coming days?
To see a massive policy shift. What they've done is they've already indicated that they're taking measures to try to encourage, especially foreign investment. And that includes allowing foreign companies to borrow from Chinese banks in order to do business here in China. That's a huge issue, as well as other things, reducing red tape, etc. So they're signaling that China is open for business. They've been doing that for quite some time. I do agree with Sean that this was a very important optical event in terms of meeting with the entrepreneurs. But at the end of the day, China is run by the government and not by private enterprises. This is not the United States.
Absolutely. Sean, coming to you, looking at the larger possibility of a US-China trade war, how do you see statements which have been coming from Donald Trump saying that he wants to have a good relationship with China? He's also reviewing what had been achieved during the previous trade deals as well. How do you think, will things be as bad as they were last time around?
Well, this actually might surprise a lot of your audience in India, but Chinese tend to prefer Trump than they prefer Biden and prefer Harris. So when it came to Biden, they thought that Biden was an ideologue. He was an imperialist. Because of great power relations, he wanted to contain China's economic rise and destabilize the CPC. You look at it, when the Chinese got good at apps, you know, like Shine or TikTok, the Americans under Biden called it a national security threat. When the Chinese got good in cotton, you know, 20% of the world's cotton comes from Xinjiang. The Americans under Biden said genocide, forced labor. So there's a feeling under Biden and Harris that there'd be 20 years of a Cold War. But when it comes to Trump, there's a feeling that a deal can be made. Now, I'll give an example. Trump has said, I don't want the Chinese to export their NEV vehicles to the United States. I want them to build factories in the US, hire American workers, and create economic growth in the United States. Now, that's fair, right? That's what the Chinese did to Buick and Ford and GM in the 1990s. And they said, if you want to get access to the Chinese middle class, you have to build factories in China. That's what Trump is saying and dangling a carrot to the Chinese business community and government. So the Chinese just want a pathway. They want a way to be able to do business in the United States, whether it be sell a 50% stake of TikTok so they can open up there. So there's a feeling that a deal can be made with China and the United States. Now, here's the thing. I don't know if a deal is going to be made in year 1, year 2, or year 3, but it's clear that Trump has a pathological desire to get a deal done and to say to MAGA, I beat the Chinese. A deal will be made in the coming years.
Right. In our tangent, the Chinese Foreign Ministry has said that trade wars and tariff wars produce no winners. US and China should resolve concerns through dialogue and consultation, and China will take necessary measures to resolutely protect its legitimate rights and interests. And we've seen the moment Donald Trump had imposed 10% tariffs on certain Chinese products, China did the same. In fact, imposed a 15% retaliatory tariff. What are the areas where possibly China could give Donald Trump some concessions?
Well, I mean, China has had an open hand policy towards the U.S. They're happy to buy more goods and services. The problem is that the U.S. has something that China wants, which is these high technology. And that is the one area where the U.S. says no. So you have the U.S. saying, well, we want you to buy what we want you to buy, but not what you want to buy. So it's a difficult relationship. I agree with Sean that there are definitely, they saw the Harris-Biden administration as ideological and Trump is transactional. They